is Bloomberg Surveillance.
Look at that whole situation. We have a lot of industries that we don't have anymore, and we're going to have to train people. And the way you train people is bring people in that know what they're doing and let them stay for a little while and help. So I'm going to look at that. It's a very interesting situation that took place in Georgia. And we heard about it yesterday. At the same time, ICE was doing right because they were here illegally. But we do have to work something out where we bring in experts so that our people can be trained so that they can do it themselves. Does that make sense? Right?
Is it straining the relationship with Korea at all?
No, we have a great relationship with South Korea. Really good relationship. You know, we just made a trade deal. But I'm going to look at it because I understand exactly what they're saying.
So, Page Six crowned you the king of the U.S. Open. They put out all these old pictures through the years of U.S. and U.S. Open. What does it mean for you to go back after going for so many decades, growing up in Queens? Now you're going back as the president in a different capacity.
Well, I loved it. First of all, the two players have unbelievable talent. It just seemed that they hit the ball harder than I've ever seen before. Incredible talent. And I enjoyed it. And I used to go all the time, but, you know, lately it's a little bit more difficult to go. I really enjoyed it. They were really nice. The fans were really nice. I didn't know what to expect. Usually you would say that would be a somewhat progressive, as they say nowadays, crowd. Sometimes some people would call it liberal, but we'll use the word they like to use, progressive. But they were great. The fans were great.
Attack on Russia. Russia had a pretty big attack on Ukraine over the weekend.
I know all about it.
You have always said how good your relationship is with President Putin, but he's not really giving you anything that you want. Is that making you less trustful of him?
Well, nobody was tougher in Russia than me. That has to do with the pipeline, as you know, Nord Stream 2 and lots of other things. But I'm not happy. I'm not happy. I'm not happy about the whole situation. You know, it's interesting. It doesn't affect us because it's not our soldiers. But they're losing now. I used to tell you 5,000. They're losing 7,000 between Ukraine and Russia, 7,000 soldiers every single week. It's such a horrible waste of humanity. So, no, I am not thrilled with what's happening there, I will tell you. I think it's going to get settled. So I settled 7 wars. This, I would have said, would have been maybe the easiest one to settle of all. But with war, you never know what you're getting. But we're going to get it. I believe we're going to get it settled. But I am not happy with them. I'm not happy with anything having to do with that war. It's just such a waste of great humanity.
The greatest obstacle to a peace deal in Ukraine?
Say it?
As of right now, what do you think is the greatest obstacle to a peace deal?
Well, we're going to see. I mean, we have some very interesting discussions. You know, Europe, certain European leaders are coming over to our country on Monday or Tuesday, and individually. And I think we're going to get that settled. I think we're going to get it settled. We have to. You can't lose. You know, when they're losing 5,000 to 7,000 soldiers a week for no reason, you have to get it settled. Of all of the wars, whether it's the Congo and Rwanda, they said it was impossible to settle. You look at every one of it. I mean, every one of these wars were impossible. I got every one of them settled, 7 of them. 7. This was the one I really thought would be the easiest, but it's not. But I think it's going to get settled.
So there was some reporting in Axios that in the last 3 months of the Biden administration, they did about 4,000 pardons. The chief of staff's assistant was sending emails to pardon his own family members. Are you still interested in getting to the bottom of the auto pen scandal?
Well, I think the auto pen is one of the great scandals of our time. The auto pen was our president, or to put it a different way, whoever operated the auto pen was our president. It's not allowed. It's just not allowed. And they gave a pardon to the Unselect Committee after the Unselect Committee realized that that whole situation was a hoax and it was all their fault, including Nancy Pelosi turning down security and all, turning down soldiers. It all came out bad for them. They burned everything. They got rid of everything. There's absolutely nothing there. It's all gone. And that was based on an auto pen. You know, they gave those members of Congress that were on the unselect committee, they gave them pardons.
What do you think?
So I think it's a tremendous scandal.
What do you think the media would say if you pardoned your kid your last day in office via an auto pen? Don't you think the media would go?
Well, I think it would have been a big story.
A good story.
Would have been. I like this guy.
Video, and do you have any reaction to it?
Yeah, where was it? The subway was where?
She was in Charlotte on a light train. She was stabbed multiple times by a...
Horrible. No, I haven't heard. When did this happen?
It happened in August, but the video just came out.
I see, yeah. I see the video. I'll know all about it by tomorrow morning. Okay, thank you.
Do you have plans for Chicago this week?
No, not really. Not really. We're going to go someplace. We're picking. Look, D.C. now is 100%. I don't want to say 100, but it's pretty close to 100% healthy, happy, thriving. It's a crime-free zone. You know that. You know you could go out to dinner tonight, Jeff. You could go out to dinner, and you most likely will not be harmed. You know that. You won't be beat to hell.
There's still some crime.
Huh?
There's still some crime.
Very little. And within a week, there will be nothing. Do you agree with me?
I feel much safer walking around. I can't fight them.
No, it's a safe place now. But
you've been talking a lot about Chicago, and there was
Chicago's been talking a lot. So, Chicago last week lost 9 people were killed and 28 people were shot. The week before, it was 7 people were killed and 37 people were shot. The week before that, it was the same kind of number. Chicago is a very dangerous place, and we have a governor that doesn't care about crime. I guess we could solve Chicago very quickly, but we're going to make a decision as to where we go over the next day or two. When you look at what happened to D.C. in a short period of time, honestly, it's amazing. Over a period of 12 days, in other words, on the 12th day, we had the crime just about solved. And right now, people are walking down, they're going out right now to restaurants all over D.C., whereas if you go back a year ago or 6 months ago, nobody was going out. Nobody. We did it in 12 days. Now it's better than it was in 12 days. We'll make it even better, and then we're also going to clean it up. We're going to clean up the city. We're going to make some great improvements to the roads, to the medians, you know, to all of the signs. You got signs that have been up for 30, 40 years. They're worn out. They look like hell. We're going to redo the signs. We're going to put up new signs. It's going to look beautiful. Within a 6-month period, it'll look really beautiful. But you have essentially a crime-free zone. I mean, here we are on a nice Sunday evening. If you'd like, it feels like Saturday, actually. If you like, you could go out and you could have dinner on me, but you wouldn't do that. But you could have dinner on me if you'd like. Go ahead. What else?
When do you plan to speak to President Putin next? And what
Very soon. Over the next couple of days. Look, we're going to get it done. The Russia-Ukraine situation, we're going to get it done. I have confidence we're going to get it done. Think of it. I got 7 done, all of which were impossible to do. If you look at any one of the 7, you know them. I don't have to go through them. Many of them were impossible. One was 31 years, 10 million people killed. One was 34 years with 8 million people killed. How about the Congo? They lost 9 million people, and it went on for years with Rwanda. All settled. Everybody happy. The one that I thought would have been, for me, the easiest, because of Putin, I thought that would have been, it's not turned out that way, but we're going to get it settled.
You brought him in to discuss the Gaza issue and help make peace in Gaza. What's some of the advice he's giving to you, and why did you bring him back in to work on this deal?
I think we're going to have a deal on Gaza very soon. It's a hell of a problem.
What gives
Again, it's a problem we want to solve for the Middle East, for Israel, for everybody. But it's a problem we're going to get done. So they have hostages. It could be a little bit less than 20 because some, they tend to die, right? They tend to die. Even though they're young people largely, they're dying. Young people don't die. Young people stay alive. But with this whole thing, they tend to die. But we have, let's say, 20 people, and we have about 38 bodies. Bodies, meaning bodies.
Are you confident you can get them all released?
Yeah, I think so. I think we're going to get them all.
Did you see the turnover of the Japanese Prime Minister stepping down? Do you have any reaction to that?
No, I was surprised because I knew him. I liked him. And he's just now stepping down. A little bit surprised. I found him to be a very nice man, actually. We dealt very well together.
Mr. President, the price of beef continues to rise and other items keep going up. Is there any way to address the cost of beef?
Yeah, once it kicks in, once our policies kick in, the price of beef will be going down, just like the price of eggs went down and the price of a lot of other grocery items went down. Beef will go down. It'll all go down. Energy has gone way down. The price of gasoline has gone really, I mean, I think you'll be hitting $2 very soon. And it was $4.50 a little while ago. So energy's gone way down. That brings everything else with it. But beef has gone, as you know, for other reasons. The price of beef has gone up a little bit. It'll be coming down.
Before you went to Alaska, in the Oval Office, you said that the First Lady expressed she wasn't too enamored with Putin. You said you came home, you said you spoke to Putin. She said, well, I heard he just blew up a village today. Has she expressed anything since you've come back?
No, the First Lady actually got along great with Putin,
right,
as I did. But, you know, we're disappointed, both of us are disappointed that this ridiculous war continues.
Are you proud to see her sending the letter that she sent?
Yeah, she is. And she's felt very strongly about the children. Yeah, feels very badly about it. Thank you, everybody.
Thank you. Do you have plans to go to Japan and South Korea this fall?
What does that mean?
Do you have plans to go to South Korea?
Maybe. I mean, we'll see. But it's going to be very interesting what comes out. I think we may have learned something, because when they come here and there's nobody that can do what they're supposed to be doing, and they bring people, those people can also teach our people. You know, it's complicated stuff. And something very interesting could come out of that. Thank you, everybody.
President Trump there speaking on a range of issues, even reacting to Prime Minister Shigeru Ishiba here in Japan resigning over the weekend, saying that he liked him and that they worked well together. Asked whether he would go to South Korea or Japan in the fall. He did not clarify that, but he mentioned how people coming to the United States should train Americans when it comes to doing their jobs. And that really in reference to what we saw also, that immigration raid at the EV battery plant run by Hyundai and also LG Energy Solutions. We have seen that Hyundai Group stocks gaining ground this year, but of course this really puts into question the future of Hyundai's EV production plans across the United States. We have seen the release of 300 of South Korean citizens agreed by Korean officials and also U.S. officials, but President Trump saying that Korean workers in the plant were illegal, but that they do have a great relationship with South Korea, April.
Take a look at how Japanese assets are faring after the announcement of resignation of Prime Minister Shigeru Ishiba. We are seeing the yen weakening towards that 148.5 handle. And based on what the Chicago Nikkei futures are pointing to, we could see upside in Japanese stocks, maybe helped along by gains in some of these export-related names against the backdrop of what we're seeing in the yen. JGB is also the futures pointing to some gains. For more on the market action in Japan, let's bring in Bloomberg's MLive strategist, Mark Cranfield. So, Mark, looks like quite an interesting setup. Maybe we avoid that triple dip, given how the yen is faring. Might that help Japanese equities? Focus is on the JGBs. How much of a jolt are you expecting potentially?
JGB is probably more about the curve. You probably see steepening there. The investors will come to the quick conclusion that the Bank of Japan interest rate hike, which was a possibility for October, is likely to be off the table pretty quickly. It's going to be very hard for the Bank of Japan to proceed with a rate hike, given that they won't know who the new leader for Japan is, or they may know by the time of their meeting, but there's going to be several weeks of uncertainty, and so that will incline the Bank of Japan to push back further. So doesn't look as though the yen is going to get any help from the Bank of Japan. That will keep inflation going in Japan for longer. That will hurt the long end of the Japanese curve. The short end will probably stay reasonably anchored. It's getting help from the US. The US now is looking towards a rate cut pretty quickly. And the discussion of 50 basis points for the Federal Reserve will certainly be there. So people will be thinking there could be an even bigger cut that will help to keep short end rates soft. And then when you think about what it means for Japanese equities, obviously longer the yen stays weak, that's got to be good for Japan stocks. And on the other side, they will expect whoever is the next leader in Japan that they'll want to get on with a bigger spending boost as soon as they possibly can. So that, again, is something that Japanese equities will feed off. So it's not surprising that the futures are pointing to a much stronger start here. And this may well be enough to trigger the topics going through the recent highs in August. We may see an extended run here for Japanese stocks, particularly as the global backdrop is pretty good. US stocks at pretty high levels as well. So that all helps to support Japan.
Mark, JGBs have been very consequential for global bond markets as well at a time when we continue to see the pressure on the long end. Fiscal concerns really a worldwide issue at this point. How does that factor in with other data that we're getting from the U.S., like inflation numbers and, of course, the path of the Fed?
Well, certainly it would have been a lot more dramatic had we not had those job numbers last week. So now investors are much more certain that the Federal Reserve has what it takes to lower interest rates, possibly even by more than 25 basis points. So that the fact that treasuries are going to stay strong probably got even further to rally. That helps the whole G10 complex. So even if you get some weakness at the long end of the Japanese curve, the read across will not be as dramatic as it would be if there was instability in other markets as well. That it's going to be absorbed by the good news coming out of the treasury market. So whether we see political chaos in France, more in the UK, Japan, all of that to some extent will be subdued in the markets because treasuries are by far the most important market. And if treasuries are looking good, that will take out some of the steam in what we see in other markets. So curve steepening is the easiest way for investors to play that. If they do think there's higher political risks outside of the United States, then of course that's what they can do. But we're probably not going to see the huge contagion that would have been possible had the US been in a more neutral position. The impact would have been a lot better, but it's not. It looks as though the Federal Reserve not only is going to cut rates in September, but they may well have to follow up with further cuts before the end of the year. So that will help bond markets globally.
Mark, thanks so much for your insights. Bloomberg's MLife strategist, Mark Cranfield. Now let's bring in Candice Browning, Global Research Head at BofA. She joins us from the BofA Securities Asia Pacific Conference in Hong Kong. She was also just in Tokyo last week. Candice, maybe let's start there out of Japan, because we are seeing futures pointing to some upside. What is your sense of, from your Tokyo trip, in terms of corporate governance reforms, maybe fiscal stimulus expectations, a cheaper Japanese currency, how that might fuel further Japanese stock gains?
So thank you very much. So when I was in Japan last week talking to investors, I guess if I had to sum up the overall feeling, it would be sort of that quote from Oliver Twist when the young boy says, "Please, sir, may I have some more?" So basically, I think that equity investors in particular really like the deflation story in Japan, and they really like the corporate reform story. And that corporate reform story seems to be, if anything, accelerating rather than decelerating. Now, you know, over the weekend, we did have the surprising news about Prime Minister Ishiba, resigning. And I think that, you know, that does have some very strong implications depending on of course, who takes his place. But I think overall, the equity market, as long as the corporate reform story stays in place and the deflation story stays in place, I think the equity market will be absolutely fine. I think there's some questions in the bond market as it relates to what will the new leaders' policies be, you know, regarding fiscal spending and monetary policy as well. But to answer the question in a nutshell, overall, investors remain quite positive on Japan.
To quote another Dickens novel,
by 2030, that spending will rise to about 1.2 trillion per year. So if you add, you know, the whole period together, you're looking at $3 to $5 trillion being spent on AI. And just over $1 trillion of that will be in Asia Pacific. Asia Pacific is very much the backbone of all of the components that go into developing AI, whether it's the AI foundries in Taiwan or the HBM in Korea. You know, Asia Pacific is a very important component of this new AI infrastructure. So we're very positive on that, and that is actually one of the tracks that we're emphasizing at our conference here in Hong Kong.
How much of that boost in AI here across Asia will also be made up of China? Of course, we have seen the optimism over Alibaba's investments into this sector as well.
Yeah, so listen, I think that China, you know, which the innovation that's been coming out of China as it relates to AI has really been very positive over the last year or so. And I think that really has contributed to a bit of a turnaround in perception of the Chinese market. And as you know, it's been reflected in the very strong stock market performance in China as well. So China's a key component of this new AI infrastructure and backbone throughout Asia.
When it comes to monetary policy, given, of course, that we are seeing divergent paths, whether it's from the PBOC or here in the Bank of Japan and perhaps a delay of normalization, what sort of dynamics will you be on the watch out for in the next year, especially given also the political landscape is a little bit unstable at the moment?
Well, you know, in the U.S., given the very weak jobs report that we had, we're now expecting actually 2 cuts. September and 1 in December. And then we think there won't be any cuts until June of next year. And it's kind of a complicated story that they're dealing with because the reality is that it would appear that the job market is definitely weakening, although the unemployment rate still remains historically low. And we don't really know, by the way, what happened in the jobs market. Is it a result of new immigration policies, which were sort of a supply cut, or was it that employers simply were demanding fewer new jobs? We don't really know that. It's a little bit murky. But on the other hand, what the Fed has to deal with is the fact that inflation remains stubbornly above their target and may, in fact, go even higher. So they're dealing with a very complicated situation. We do think that they're going to muddle through. We don't think that there will be a recession. And one of the reasons for that is consumer spending in the United States, even using our own internal Bank of America data. Consumer spending has remained resilient. And also, if you think about AI and what I talked about previously, you know, you've got a lot of cap spending going on, whether it's AI or it's sort of made in America, bring manufacturing back to the U.S. And you've got the one beautiful bill, which is a stimulus. So, you know, yes, there's some problems in the job market, but there's a lot of positives as well.
And the inflation outlook, I think, is still something that we should be focused on. Candace, thank you very much for your insights. Good to chat. Candace Browning is Global Research Head at B of A. Let's take a look at one element of the inflation trajectory. Take a look at commodities prices. This is, of course, after OPEC Plus commitment to hike output. We're seeing it, maybe something that was already sort of expected by the markets, and oil prices are climbing at the moment. Let's bring in our Asia Energy team leader, Stephen Stepczynski. So, Stephen, talk us through this thinking by OPEC Plus and how expected was it? Was it already mostly priced in by markets?
You know, I think there was a surprise aspect of it, but there was no awe, in the sense that, you know, there was not an expectation that they would add the supply. Yes, the market was hedging their bets with the prices falling last week, and you did see that. But I think in the previous increases that they've had, where they surprised the market, there was that awe. There was more supply that they were adding. They're just adding about 130,000 100,000 barrels a day. That's compared to basically it was about half of what we were seeing in the previous months when they're adding that tranche. Of course, we weren't expecting this supply to come back until the end of next year. So there is a surprise there. But that being said, it seems that the market is looking at this and it can be digested. It's unclear whether OPEC Plus is going to be doing this every month for the next 12 months. They might, but it's a gradual increase in supply. Likewise as well, the market's going to be closely looking at actually what do they produce and what are they exporting? Because you can say that they have these higher targets, but there are some countries that were producing over their output, so they're not going to be able to increase. They're kind of playing catch up. On the other end, there are other countries that can't produce much more. You know, Saudi Arabia famously has a lot of spare capacity, but OPEC Plus is not just Saudi Arabia. So there are going to be a lot of different things that the market's looking at. Right now, yes, surprise. Yeah, probably the market was to some degree expecting something to come out of this and they were hedging their bets, but still, it isn't the shock where you're seeing markets kind of really crumble under the weight.
And what does this tell us about the whole strategy from OPEC Plus, especially when it comes to really bearing with that perhaps scenario of oversupply in order to gain market share?
You know, I think you can read this two ways, right? The straight way to read this is that OPEC Plus and their analysts, they've got some of the smartest people in the room, clearly see that the market can take more supply. And in fact, they're kind of a counterbalance to other analysts who say that there will be a large glut. You know, they've consistently said, especially with their previous increases, that they're not doing this necessarily to take market share. They're doing this because they see this as a way to balance the market. Now, the other way to read this is, yes, they are trying to take market share away from U.S. shale producers. You know, you famously see Conoco cut workforce 25%, due in part to the weaker market. They're a major producer of oil. I think this isn't just a coincidence. The shale producers, U.S. oil producers, are hurting under these lower prices, whereas OPEC Plus can weather this storm. They can sort of sweat the market, as Carnegie once did over 100 years ago, and this is a way for them to potentially kind of ease out those other folks in the market. There is a flip side, of course. Not every OPEC member loves Brent at $65 or below $65. It doesn't balance their budget. But in the short term, as they try to get more market share and as they try to capture more customers and kind of squeeze out other marginal producers, maybe in the U.S. and elsewhere, this could be a strategy that they're moving on.
Stephen, thank you so much for helping us unpack everything that's happened over the weekend. Asia Energy Team Leader Stephen Stepczynski. More ahead on the Asia trade. This is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
I thought that as Prime Minister, I needed to take responsibility for the results in the election. Having seen the U.S. trade negotiations through, I felt that now was the right time to stand down and give way to my successor.
JGB futures moving higher at the moment, of course, is all about the questions of fiscal discipline after Prime Minister Ishiba resigned. Who can become the next Prime Minister that could potentially be even more hawkish than him is a key question. Nikkei futures pointing to the upside of more than 1%. Of course, we continue to see the Japanese yen weakening against the U.S. dollar. Expectations of perhaps more stimulus, perhaps a Bank of Japan policy normalization also being delayed. Some of those factors that are weighing on the market right now. But let's discuss all of this. And joining us now in studio is Kei Okamura, portfolio manager at Neuberger Berman. Also Tobias Harris, principal at Japan Foresight. It's really great to have both of you. Let me start with Kei, because we're already seeing Japan bond futures moving at the moment. Is it all about the expectations of what will happen on the fiscal side of things?
Yes, there will be that element, just given the fact that a lot of that has been in the top minds of global investors over the last 6 months or so. But I think also going forward, what that also means is that on the other side, there's going to be a lot of expectations about economic stimulus going forward, given that some of the contenders like some of the expected contenders like Ms. Takaichi is a fiscal expansionist. I think that will be very much on the top of mind. So watch out for sectors like industrials, part consumer discretionary. All of those will likely see some choppiness over the next month or so as investors brace for the next month.
Tobias, so what are you expecting in terms of who the leading contenders could be in an election that now local media say could be as early as October?
Well, the next leader has, I think, a pretty full plate. And I think, just even setting aside policy, I mean, I think the LDP is now in a situation of really trying to find a leader who's going to knit the party back together. It's been a really messy year, or really a couple of years for the LDP. And so they're really going to be looking for unity. They're going to be looking for someone who can really address some of the reforms that, if you look at the party's election postmortem from earlier in the week that contributed to Ishiba leaving, there's a lot of work to do to reconnect with the public, to update the party, to really get them to a point where they're communicating with the public again. And then, of course, back to those policy questions. What are you going to do about fiscal stimulus? You have the budget for next year in the pipeline. You, of course, have ongoing issues with the United States and with China and with other countries in the region. So there's a lot of work to do for the next leader. But I think the LDP is really going to be thinking about how do you get out of this mess where, if you had an election tomorrow, it's pretty easy to see how the LDP could wind up in opposition again. So I'm not convinced that Takaichi is necessarily the right person for that, and I think a lot of people in the LDP feel the same way. I suspect that from right now, without anyone having declared, that Koizumi Shinjiro probably has an edge over anyone else, but really it's an open race as of right now.
So even getting to the election, of course, there's a lot to do, Tobias. What are we seeing in terms of the procedural way forward? Because we're hearing it could be under emergency rules, or it could also be just under a full plenum as well.
Well, they've been having this debate for the past several weeks, right? Because we knew there was supposed to be this vote Monday. The LDP was going to decide whether to move up the leadership election anyway. So there's been a lot of discussion. How soon would you do it if the motion passed? Should they do it under full rules? Should they do it under emergency rules? I mean, I suspect, and I think we've seen reporting to suggest that they're going to go for what they're calling a full spectrum election, where you get full participation by grassroots members, in part because, again, if the goal is how do we reconnect with the public, how do we reconnect with our own supporters, how do we get people excited about the next era of the LDP? Well, having the rank and file members participate certainly seems to be part of that. So I suspect they'll go that direction. Unless, of course, the party shifts so quickly and it feels like there's a fast-forming consensus around one candidate, and maybe they will do the emergency rules. But I don't think we're going to see that necessarily.
We're getting breaking news out of Japan at the moment as well. Second quarter GDP number surprising to the upside. This is the revised final figure, annualized growth of 2.2%. The estimate was only for growth of 1%. Of course, we have seen some momentum in the Japanese economy. Quarter on quarter is also growth of 0.5% at a time, of course, when we continue to expect perhaps the Bank of Japan to come out with a rate hike as early as October. And of course, a variable now is that we have a prime minister leadership election for the ruling party here. We're also getting the current account balance as well. We are now getting those numbers on the terminal. It is a surplus of 2.68 trillion yen. But let's continue to discuss the state of the Japanese economy and turn to Kei, who is still here with me. Given the strength of the Japanese economy, people were expecting the Bank of Japan will move as early as October. But now the leadership election is a key question. What will investors be watching out for in the next couple of months?
Unfortunately, if we look back the last several years, the changement of the prime minister has become almost like an annual occurrence, August, September. And as a result, this has sort of meant for many global investors that, politics aside, I think the economy is probably what's most important and the outlook for what the BOJ might do next. That said, we have seen back in the Shinzo Abe era what a stable political environment can do for Japanese equity. It is one of the reasons why we are seeing equity futures higher today. And we do think that down the line, if there is a stable political environment, that would definitely bode well for Japanese equities, especially the mid-cap section of the market that has lagged over the last sort of 12, 24 months or so, especially those companies that we think are very aggressive in terms of capital management reforms. Those will likely be in a very good situation going forward.
How much does Japanese yen factor into the equity markets these days? Because it's been pretty range bound.
It does factor in. We can't ignore it. But at the same time, I think, somewhere between here and 140 is a palatable environment for many company management. That said, if we see some volatility where, if we see swings up to 130 or if we see swings down to 150, that would not bode well for Japanese management who need to plan ahead in terms of capital spending going forward. So I think, let's get these elections done. Let's find out who the next prime minister is. But then there needs to be a stable political environment and a good way for the Bank of Japan to continue raising rates going forward.
And Tobias, of course, the state of the economy, very important when it comes to the broader Japanese public, but that doesn't necessarily make such a big difference when it comes to the leadership election of the LDP.
Yeah, well, I mean, I think we've seen a kind of disconnect in a lot of conditions, that in the last few weeks, of course, we've seen Ishiba's poll numbers going up, and that didn't really make a difference as far as sentiment within the party. And I think that there's I think, a really important need here. When we think about this leadership election coming up, what is the mindset of the electors going into this election? So it's the lawmakers, it's going to be the prefectural chapters and the rank and file dues paying members. And really, they're very focused on the reality the fact that the LDP has lost 2 straight national elections. There's, I think, a profound sense that the party is completely out of touch with voters. They've lost voters they used to get in the past. They've lost independents. They've lost young voters. There's a feeling that the party is just not meeting a lot of voters where they are, and that there's just a lot of work to do, updating the party, modernizing the party, a lot of internal governance issues that have to be addressed. And so I think keeping that front of mind, I think, over the next few weeks is really important, that this is not necessarily going to be an election that's just going to be decided on the issues or on the platforms. I mean, of course, it's going to be part of the discussion. There are some real differences between the right wing and the left, or reformist wing, let's say, not left wing. Let's not go crazy here. There's going to be some real differences, and so there's going to be policy discussions, but front of mind is going to be, how do you modernize the LDP? How do you reform the LDP? What kind of party is the LDP going to be if it's going to get through this crisis, and when the next general election rolls around, actually be in a position to actually win it? And that really is going to be front of mind, I think, for just about everyone during this campaign.
Tobias Harris, good to have you with us, Principal at Japan Foresight, and Kei Okamura here joining me in the Tokyo studio, Portfolio Manager at Neuberger Merman. Thank you so much to both of you for joining us as we head to the market opens in Japan. Of course, we have seen already JGB futures moving higher. We continue to see the Japanese yen falling against the US dollar. Nikkei futures pointing to the upside as well after we heard over the weekend about the resignation plans for Prime Minister Shigeru Ishiba. We're now headed towards a leadership election as well. The market opens are next. This is Bloomberg.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Will Obey. We're going to talk about how sports is eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens, and the countdown also on for the leadership election here in Japan after Prime Minister Shigeru Ishiba announced his resignation in April over the weekend. Of course, what that means for the market's a key question as we continue to see weakness on the Japanese yen. The new Prime Minister will serve out Ishiba's lasting 2-year term.
Yeah, and also over the weekend, we had the OPEC Plus supply hike that is committed to, which has been characterized as relatively cautious. So we're going to be watching that in the session on commodity prices as well, Sherry.
Yeah, we will be watching those oil-related stocks across Asia as well. But take a look at how the Japanese market is coming online, because we have been watching the Japanese yen weaken against the U.S. dollar. We are seeing also JGB futures move. Of course, the key question is how fiscally conservative will the new Prime Minister be? The expectation is that there will be nobody more hawkish than Prime Minister Ishiba at this point. What that means for already the existing pressure on the long end of JGBs is a key question. We had already seen 30-year JGB yields trade at record highs last week. Nikkei stocks at the moment rising. Of course, the expectation of more stimulus, a weaker yen that usually benefits the stock market. So we'll continue to watch the market as we are also digesting the GDP numbers for the second quarter. The final figure coming into surprising on the upside, growth of 2.2% on an annualized basis. So what that means for the Bank of Japan as well, because expectations of that rate hike that were as soon as October may have been pushed back because of the uncertainty on the political landscape. But take a look also at how Korea is coming online. Of course, what we've been watching are the Hyundai name groups, because President Trump also commenting in the last few minutes about that immigration raid on that Georgia EV battery plant run by Hyundai as well as LG Energy Solutions. At the moment, the Kospi is up 0.2%, while the Korean won is also weakening against the U.S. dollar. Of course, in South Korea, we'll also be watching for the jobless rate to come later in the week. But it's really all about Japan today, and the political landscape after Prime Minister Ishiba's resignation set in motion a leadership race that may generate concerns for investors.
While I feel there are still things I wish to do as premier, I have made the difficult decision to step down. But I felt that if I continued amid a vote on an early leadership race, it could have created an irreversible division within the party, which is certainly not my intention.
Joining us now is our economy and government reporter, Erika Yokoyama. And Erika, you were actually at that press conference by Prime Minister Ishiba. Did this come at a surprise, or was it pretty much expected, given, of course, the pressure that he's been seeing in recent weeks?
I would say it's pretty much expected, to be honest, while it's a little bit surprised as well. Like, he seems like sticking to the position as well. But yesterday at the press conferences, he actually looks pretty calm and determined after weeks of calls for his departures. And the focus of the presser yesterday was like, why now? And also, what will be the next as well? Like, in terms of like, why now? Ishiba said that he has been thinking of like taking responsibility of the election loss, while he was also waiting for the U.S. trade deal is firmly implemented. He also wanted to avoid the split divide within the party as well. As you know, like LDP was expected to have a vote today to decide whether they should bring forward the leadership election or not. And the RE survey already suggested that nearly a majorities are voting for an RE election. So there was already divide as well. And as for what's next, Ishiba said there will be of course, the extraordinarily the leadership race, and it's largely expected in October, while like Ishiba didn't specify the date. And he says he's not planning to run again. He wants to succeed it to someone who can deal with his priority, including like wage growth or trade deal implementation, as well as the national security.
As we wait to see who that someone will be, how do you see these scenarios shaking out and what their market impact will likely look like?
Right. I feel like it's going to be some sort of replication from a year ago. You know, you still remember last September, like 9 candidates ran for the positions. And you probably remember Sanae Takaichi, female candidate, narrowly lost to Ishiba. And it's highly expected she will run again with her preference for monetary easing and loose fiscal policy. And yeah, that's probably her victory potentially makes the BOJ makes a little bit difficult to proceed with ongoing tightening project, potentially weakening the yen further and bring in loan price as well. And another strong candidate is probably Shinjiro Koizumi. Right, success rate. In terms of monetary policy, he seems to see continuity, so maybe bringing less impact to the market. So there may be more candidates as well, including Cabinet Secretary Hayashi. But at the point, I feel like as the LDP is seeking the new face to capture the younger generations or some of the right-wing supporters that left Ishiba's LDP to support far-right Sanseto, the market expects the higher chance for a conservative Takaichi or young and fresh Koizumi.
When it comes to the economy, of course, much stronger second quarter GDP numbers will be very consequential for the Bank of Japan. Right. But at the same time, what are some of the other concerns that we're watching across Japan when it comes to this leadership election and the future of the country?
Right. So beyond the monetary policy, there'll be lots of issues as well and challenges as well. Especially the new leader, whoever it becomes, has to face the minority situation in the chamber. So, for example, towards the end of the year, Japan has annual tasks including economic package, extra budget, annual tax revisions, and the annual budgets as well. Then last year we saw lots of trouble as the ruling coalition couldn't find agreement with the opposition party. The government was working on these projects after the Christmas or even the New Year's. And the first things that the new leader has to deal with would be the economic package. Ishiba already said that the LDP wants to do the 20,000 yen cash handout to lower income group, while opposition parties calling for the sales tax cut, right? Then that was one of the major cores behind the LDP's great loss in the election. So I think that's the first things they need to find the answer, as well as the trade negotiations implementation as well.
Erica, thank you so much for running us through all that. Erica Yokoyama is our economy and government reporter. Now let's get more insights on the markets with Dillian Wu, research strategist at Pepperstone. Dillian, really good to see you. First off, we are seeing not just, as Erica was highlighting, those monetary policy concerns, also what Japan does fiscally speaking at the time when the long end is already a focus globally. What is your sense of the curve steepening? How much more is there to go from here?
Well, actually, Prime Minister Ishiba's decision to step down, to me, ahead of the LDP snap leadership race, looks a pragmatic move. And the spotlight now shifts to who takes over and whether this could bring political stability or shake up this kind of coalition dynamics. And for the Japanese government bond, it has already reached the historical high. I mean, the long end from last week. And at the moment, I think the BOJ is really in a tricky spot to add any interest rate or to implement any rate hikes for this year, because the market has just priced in a 12 basis points rate hike by the end of this year. And I think probably we can see a weaker yen down the road and also higher the GJB rate.
This higher long end yield is really a global story, though, right, Dillian? I mean, we have the UK DPM resignation. We have in France some of these fiscal concerns as well, with the Prime Minister potentially losing a confidence vote. What are you watching globally speaking?
Well, I personally look into the Nikkei performance because obviously Japan has got a 50% tariff from the US, and ideally this is a plus for the Japanese equity. And but with this kind of domestic political uncertainty, we probably see some losing of the confidence from the Japanese traders. And also I will look into, like how this kind of political landscape will unfold in the following months and who will take the Ishiba's position.
When it comes to the broader Asian equity markets, we are also waiting for export numbers out of China. Is the Chinese market an alternative to a lot of this uncertainty, even as you mentioned with the politics landscape changing here in Japan?
Well, I mean, sure, China is obviously a market very interesting to look into. And for the export data, actually the exports in the first half of the 2025 to the US decreased by 1/10. And I think is a really healthy shift for more resilience to the Chinese exporters. And also we're looking into the retail sales data and the NPC meeting down the road from this week. And I think if there's more, stimulus to put in place and more stimulus expected to be in place in the AI sector, then I would still be bullish to the AI sector in the Chinese equity market.
Yeah, let's talk a little bit about that AI momentum that we're seeing, not only in the Chinese market, but across Northeast Asia. How much legroom does that rally have, especially across Japan, across South Korea as well, with some of those semiconductor names?
Well, I think if we start from China, recently both the CN50 and Hong Kong 50 has been consolidating at elevated levels, and many of the international capitals just flooding into Chinese tech as a new deployment sector. And from established names like Alibaba and Tencent to some newer startups like Cambrican, these stocks have done much of the heavy lifting for the rally. And what really kicks things off were some eye-catching earnings reports, but the real drivers go deeper. It's I feel like it's a mix of tech breakthroughs and policy support. And I mean, on the tech side, DeepSeek v3.1 has boosted confidence in China's domestic computer power and also the broader import substitution story. And on the policy front, Beijing just rolled out the AI Plus action plan, targeting a 90% AI implementation by 2030. And I personally feel like against this backdrop of US and China rivalry, tech is not just a market fad, it's a policy-backed long-term growth pillar. And I feel like policymakers are also really notice this kind of situation. So for me, I think probably like the Hong Kong 50 or the Chinese or the Southeast Asian kind of tech narrative can be go down the road, and the CN50 can be a substitution of Nasdaq in the future.
Aside from Chinese tech, when you look at Asia tech overall, how helpful is the Fed cutting likely to be? How much of a tailwind is that? Because following the US jobs data on Friday, it seems investors are increasingly just focused on the path of Fed rate cuts. There's that repricing going on as well.
Yes, right. I feel like although the job report was quite sluggish, but it doesn't materially change the near-term policy outlook of the Fed. A 25 basis point cut is still likely be the case in September's meeting, aimed at providing a bit of a insurance kind of cut in the near term. But the upside inflation risk do present. So I see little chance of any front-loaded cut where the chance of a 50 basis point rate cut in September. And I mean, my base case would still be a 25 basis point rate cut in September and another 25 basis point in December. And I think the rate cut is obviously a bullish factor for the equity market in general, but we're not just looking at the federal rates policy, but also into the economic outlook. And with some strong, like tech advance backing in behind, I think I would be still optimistic about the AI sector in the Asia market.
Dylan, what does all of this mean for the U.S. dollar, given that on the other side of that trade, we not only have the Japanese yen that sees continued pressure, but we also have, of course, the euro. We do have the ECB rate decision this week as well.
Well, I feel like the market has already not fully priced in a rate cut in this ECB meeting. And I feel like one of the black swan events I will look into, and maybe some of the market participants ignore, is if Cook really were to leave earlier, or will be kicked off in the near term, then market participants will be eager to figure out what this means for the future path of the federal interest rate and the Fed's broader policy toolkit. And this kind of uncertainty tends to widen the range of views, and when potential outcomes are more extreme and harder to gauge, it can hurt liquidity. And that's, I think, when we could really see the dollar drop sharply and go spike. So apart from this Fed rate cut narrative, I will also look into this kind of early step down potential of Cook.
Dylan, thank you for your insights. Dylan Wu is research strategist at Pepperstone now, as we've been unpacking not just the U.S. jobs data and the impact on the dollar. We actually are seeing the U.S. currency climbing, reversing some of Friday's decline. The Aussie dollar is coming under pressure. We're also seeing a slide in Australian stocks. In terms of the 10-year, you are seeing that yield creeping up in U.S. treasuries. Flip the board, take a look at some of the movers in the Australian session. We are hearing, of course, that potentially the Abu Dhabi consortium that has been pursuing Santos, the Australian energy producer, they could be mulling $10 billion worth of financing for that. Santos, for the moment, is down, as are some of the other energy-related names. This is, of course, after the OPEC Plus decision, the commitment to hiking supplies from October though some have actually characterized this as a relatively cautious move in terms of what this could mean for supplies in energy in the market. And let's also take a look at some of these South Korean names, because of course we also have been unpacking that story related to U.S. immigration raids on lands in Georgia and how there were detentions of employees from Hyundai as well as LG Energy. These are the counters that are in focus. They are down for the moment in South Korea. More ahead on the Asia trade. This is Bloomberg.
AI is definitely in the center of it, and we're looking for how do we spend time and which industries do you invest in. Investors becoming more and more digital or AI enabled that actually adds value to economic growth. And this, we think, could be time because you have a strong hardware power and you have a strong software power as we see, and it's accelerating significantly. But a very important another element, which is changes in demographics. More AI-enabled softwares and applications may improve the people's lives and actually increase productivity in times where demographics are decreasing everywhere around the world. So this, I would say, is a major theme. So digitalization and AI-related technologies, and we think of it technology, but in reality, a lot of the businesses coming up and claiming to be technologies that are actually cannibalizing a lot of traditional businesses.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
We heard about it yesterday. At the same time, ICE was doing right because they were here illegally. But we do have to work something out where we bring in experts so that our people can be trained so that they can do it themselves. Does that make sense? Right? Is it straining the relationship with Korea at all? No, we have a great relationship with South Korea.
President Trump there commenting on the immigration raid at the Hyundai Motor LG Energy EV battery factory in Georgia. All of this at a time, of course, when the U.S. and South Korea have just struck a trade agreement, not to mention that Korean companies have now agreed to invest hundreds of billions of dollars in the United States. We'll be watching Hyundai Motor down more than 1.5% at the moment. We have seen them pledge $26 billion through 2028. But of course, Hyundai's broader EV production plans now in question given this immigration raid. We know that the construction on the Georgia plant has been temporarily paused. When it comes to South Korea's government, it secured the release of hundreds of their citizens detained in that U.S. immigration raid in the state of Georgia. Let's bring in Bloomberg Seoul Bureau editor Danny Thomas for more on this story. Danny, so what do we know at this point about what triggered this investigation and where these citizens go from here?
Well, this is, according to ICE, this was in the works for many months. So it only got concluded on Friday. In terms of what happens next, I think the discussion around releasing them has been concluded, and what we understand is that on Wednesday there will be a chartered flight which will bring most of these detained workers back to South Korea. In terms of the diplomatic kind of the rift now, the foreign minister of South Korea is going to be heading to US today, and I think some of the industry lobby groups, what they're trying to get the message across to US is that they don't want to see a repeat of this, because more important, I think South Korea feels a bit betrayed that just 2 weeks after some of the biggest companies came out with big investment pledges, you see the workers being detained. And the images and the footage and the photos of that being released was a bit of a blow to South Koreans here. So that is what the message the foreign ministers will be trying to convey, and trying to make sure that the visa issues that have previously also come into the picture get resolved in a way that, you know, these kind of humiliation is not repeated.
Denny, there's still a bit that we don't know, including what sparked these raids, and to what extent you think this might cast a shadow on some of these South Korean investment pledges into the US.
So clearly there is going to be some tangible impact. We're already seeing LG trying to push back the start of its project. So there is going to be some fallout of this. How damaging will it be depends on how quickly South Korean companies can get visas. That's been one of the issues they've been trying to get resolved, that as you bring in more money into the country, you need more workers to work on these projects, and not having proper visas and documents for workers to work, it's going to delay the work. And that's what I think this particular issue is going to snowball into, where the US can get the visa issue sorted for the investment that is to follow.
Danny, did we have more clarity on how these Korean investments into the U.S. would work out? Because they were talking about funds and sharing of profits of billions of dollars of investments, but of course we haven't seen that many details so far.
Yeah, so I think there are two components of it. The $350 billion is going to be largely in terms of loans, and what South Korea has tried to say is that only less than 5% of that amount will be in actual investments, as in equity investments. So there has been some dispute around that, but I think that's where South Korea has kind of been sticking to its gun. And this did not come up in the summit between President Lee and Donald Trump. So I think that's kind of resolved, or maybe there are still something to resolve. On the other hand, there's a bigger component, or kind of chunkier component, which is $150 billion that the South Korean private companies have agreed to invest in. And that will be mostly in terms of equity investments, and that's where the big dollar is flowing in. So that's where things stand now.
Danny, thank you for talking us through the state of play. Danny Thomas is Bloomberg's Seoul Bureau Editor. We'll have more ahead on the Asia trade. This is Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
We continue to watch the latest when it comes to the leadership election of the ruling LDP here in Japan after the resignation of Prime Minister Ishiba. The LDP's Aizawa now saying that they will set the leadership election date on Tuesday, so we'll be on the watch for that. As we continue to see the Japanese yen weakening, as you can see there, against the US dollar towards the 149 level. This, of course, as we continue to see political volatility and uncertainty here in Japan. And two-year yields at the moment are lower, so we are seeing the curve steepening in Japan, April, foreign outflows and political concerns as well, and all of this really having implications for assets across Japan.
Indeed, and as you say, the yen is weakening. It's weakening against all major currencies, including the greenback that is seeing a slight bump from Friday's performance following weak U.S. jobs data, which prompted a repricing in the Fed's rate cut path, 25 basis point fully priced in for September, and beyond that, something October, December, another few cuts is a possibility. We are seeing still that stuff keep curve steepening trade at play and U.S. stocks picking up slightly. More ahead on the Asia trade. This is Bloomberg.
Up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Asia is at the forefront of some of the world's biggest stories. I'm Sherry Yan in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Let's take a look at how Asia markets are faring. We are seeing Japanese stocks bouncing with the yen weakness that's come through and breached the 148.5 level, which is, of course, a key level that we've been watching. South Korea stocks seeing a bit of firmness, but really not by much. And we have with us now Diana Musina, Deputy Chief Economist at AMP, who hopefully will get for some analysis in just a bit. But for the moment, take a look at how Australia's stocks are faring. They're down about 0.2% among the sectors that we are watching in the session, not just Japanese stocks overall, but also about these energy names following on from OPEC Plus over the weekend committing to hike supplies, though some have called this relatively cautious move. Maybe some of it was already priced in by markets. You are still seeing Brent hovering at almost towards the $66 handle, and WTI at around 62. Gold is also seeing a bit of firmness for the moment, Sherry.
Yeah, I mean, we have been following oil prices a lot because we have seen that pressure over the past year down more than 10% or so, and OPEC Plus continuing to change strategy and really announcing that production boost again. You talked about that 137,000 barrels a day from October. That's only the first part of a 1.65 million barrels a day tranche. So we'll continue to watch how the fluctuating oil price really affects also equity markets globally, of course, and what that means for the broader economy as well.
Yeah, Sherry, let's bring in Diana Musina, Deputy Chief Economist at AMP. Diana, we're still unpacking what we got from the U.S. jobs numbers on Friday. Investors seem now so focused on the labor market. It seems easy to forget we still have a CPI print coming this week. How clear do you think the path of the Fed is for the rest of the year?
Well, I'm taking my cues from what Powell said a few weeks ago, where he basically reiterated that the Fed's focus, at least in the short term, is probably going to be on the labour market, because the pressures on inflation, at least in the US in the short term, are more around the impacts from tariffs and how that's going to increase consumer prices rather than a demand-driven increase to inflation. So from the Fed's point of view, I think if these are supply challenges increasing inflation, then they want to focus more on the labour market, basically to prevent any sort of serious downturn in jobs growth. So even if we get a hotter CPI print, I think the Fed's next move is still going to be a cut, and we should be expecting probably a few cuts from the Fed in the next 12 months.
What are you expecting of Chinese economic data? We're going to get trade numbers as well, and potentially we see that loss of momentum in exports, which for a long time have been a key pillar supporting the Chinese economy.
Well, in this particular month, the pace of export growth is expected to soften a little bit from last month, but it's only really because of base factors rather than the actual renewed start of slower global demand and growth. If we look at container freight shipments around the world, they're actually still holding up very well, particularly coming out of China and also out of broader Asia, going into the US and other Western countries. So I don't think that we're actually seeing a global slowdown in demand or in export growth, and global growth seems to be holding up at about its long-term average, which is around 3% number. So there doesn't really seem to be any large negative impacts from higher tariffs around the world. So more or less, Chinese growth is still holding up relatively well, even though this month we are going to see some softer export numbers.
And perhaps softer inflation data also later in the week. What's domestic demand looking like within China, aside from external factors? And what are the implications for other China-dependent economies across Asia?
It's sort of a tale of two cities, I guess you could call it that, because there are still some very strong parts of China, like industrial production, fixed asset investment too, outside of property. The property market, though, is still incredibly weak, and we are still seeing home price growth down 30% on a year ago, and investment into housing has been fairly subdued as well. But other sides, like the industrial production side, especially areas related to things like electric vehicles or solar panels or investment into the green and the new economy, is still holding up incredibly well. So it is quite a mixed growth picture in China, but when you sort of marry up all the different factors, it still looks like the Chinese economy is going to grow by 4.5% or 5% this year, which is enough to generate the sort of global demand that you would want. China itself contributes about a third of global growth every single year, and that's likely to remain the case in 2025 and 2026. So that's what's important for countries that are reliant on Chinese demand, other parts of Asia, and of course in Australia too.
Growth here in Japan very strong as well. In fact, the second quarter final number surprising to the upside, annualized 2.2% growth. What does that mean for the Bank of Japan? Because we were expecting potentially a rate hike in October, and yet we have this uncertainty on the political landscape.
I mean, in the short term, the Bank of Japan may just hold steady and try and sort of let the dust settle after all the political changes in the economy. I mean, I think it's still the case that the Bank of Japan is going to keep hiking rates, but we also need to understand what the new government is going to do around fiscal spending. That's probably the more important thing here for Japan, and how that impacts the economy. Despite that strong growth number, in the last 18 months, the Japanese economy hasn't really been particularly strong. So there is still the need for more fiscal stimulus, I think, but the Bank of Japan may want to just let the dust settle.
Meantime, we are seeing that sort of fiscal impetus in the U.S. We are still trying to figure out what tariffs are going to mean globally for inflation. We've seen over the weekend OPEC Plus coming through, commitments to supply hikes. What is your sense of how subdued energy prices might help maybe tamp down potential inflationary effects from tariffs?
Well, I guess that's more of a global factor that could help to ease some of the inflationary concerns around the world. But at least in the short term in the US, we can see that tariffs are having an impact to consumer prices. Things like durables and non-durables have been increasing in the past 2 to 3 months. We know that the average tariff rate is running at about 11% in the US. Compare that to about 3% before Trump started. So it does take time for these tariffs to actually hit price growth. And I think that in the next 6 months, US CPI is going to get up to about 3.25%, maybe even 3.5% on a year ago. But some of the Fed governors have said that they would actually look through the short-term upside impacts to inflation, especially if it was just a one-off or potentially even just a few months' worth of higher prices. So I guess the point is, will the tariffs continue to impact inflation? I think that that's probably unlikely to happen. The tariffs are just going to have a short one-off impact to raising prices. The other global factors around lower oil prices, for example, is good news in trying to keep global inflation weaker.
What have all of those dynamics meant for Europe? We do have the ECB rate decision this week as well.
Yeah. Well, the Eurozone economy has actually been doing relatively well. The unemployment rate across the Eurozone on average is still at a relatively low level. They haven't really seen the increase like New Zealand, Canada, or even the US has. I mean, there are still some political challenges in Europe at the moment, for example, things that are going on in France. With the vote of no confidence in the Prime Minister. So that's why we've seen bond yields increasing in Europe. But European equities have been doing incredibly well in 2025, actually on par performance with the US, and they were outperforming the US in the first part of the year. And if we think about the outlook for Europe, there's going to be more fiscal spending that's going on, particularly out of Germany, more defence spending as well. So I think that Eurozone economic growth is actually going to look pretty strong in the next 12 months. And I think that that should mean good news for European equities as well.
Anna Musina, really good to have you with us. Deputy Chief Economist at AMP, had a very busy week when it comes to eco data and monetary policy decisions as well. We have more ahead on the Asia trade. This is Bloomberg.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Take a look at how Japanese bonds are trading at the moment. Of course, JGB's, the direction of this market, very key and consequential for global markets as well, at a time when we continue to see the yield steepening, the yield curve steepening, that potential Bank of Japan rate hike potentially delayed given the resignation of the Prime Minister. Traders pushing long end yields higher at the moment, and we could see more volatility. The 30-year JGB yield already traded at record highs last week. Rising inflation, growing fiscal concerns, of course, a key question here in the Japanese economy. And we already saw the second quarter GDP final numbers surprising to the upside as well. But let's talk a little bit about the political uncertainty here in Japan that might really put into question where the markets go from here. Joining us now is Purnendra Jain, Emeritus Professor at University of Adelaide's Department of Asian Studies. Great to have you with us. I mean, what does this mean for who could become the next Prime Minister of Japan in the next couple of months?
It's quite complex at the moment. As you know, Mr. Ishiba, the current Prime Minister, announced yesterday at a press conference that he intends to step down. And that's going to be a very complex process following his announcement to resign. Because it's not so straightforward. First, the LDP has to elect a new president, and that president will then present himself or herself to the parliament, and the parliament has to endorse that person's leadership as Prime Minister of Japan. And given that the LDP doesn't have a majority in the lower house or even in the upper house, that's not going to be as straightforward as in the past. Because in the past, when a LDP president went to parliament with a majority in the lower house, it was almost certain that that person will be elected as Prime Minister. So this time the situation is much more complex.
Yeah, with a weaker LDP, does that mean that they will have to really negotiate with opposition parties? And what does that mean for a potential economic package to come later this year?
Yes, most definitely. Mr. Ishiba ran a minority government. The LDP already has a coalition with a party called Komeito. But even the LDP Komeito coalition numbers are not enough for them to have a majority in the lower house. So the new leader, whoever that might be, will have to negotiate with some opposition parties, kind of like-minded opposition party or parties who will come on board with the LDP new leader so that a simple majority could be maintained in the lower house for legislative purposes and for policy purposes and, of course, for economic purposes. It depends who that leader is because leaders have different viewpoints on how they want to handle the Japanese economy, whether it is in terms of monetary easing, whether in terms of fiscal stimulus. So we have to wait and watch as to who the new leader is and what kind of policy that leader is going to announce on economic front as well as on many other domestic and political and foreign policy fronts.
On foreign policy, when it comes to tariffs, of course, last week we also saw the U.S. and the implementation of the trade agreement with Japan. Do you think that process might potentially be affected given what's happening domestically in Japan?
Yeah, I mean, one of the reasons that Mr. Ishiba was resisting the pressure to resign, telling the party and government that he has got some very important jobs in his hand. And what he meant was the negotiation process the process which was taking place between Japan and the Trump administration about the tariff issues. So finally, Mr. Ishiba's team negotiated a deal with the United States of America that there will be a 15% tariff, and also on the auto sector, which was about 25% or 27% initially. Mr. Ishiba's team negotiated down 15%. So I think there is now a presidential order signed on that 15% tariff across the board on Japan, and that is what triggered. That was a trigger for Mr. Ishiba to accept the pressure, and he announced to resign, saying that the job which he has in hand, he has completed that, and he didn't want to split the party. And in the interest of the party, in the interest of the country, he said he has decided to resign.
In the interest of the party, it's also about this process of party reform. How do you think these regroup? What else needs to be done?
Well, they have to, in my view, looking at Japanese politics for the last 30 years and studying and researching, I think they need to really have soul searching and do a wholesale, a kind of overhaul of the party system and the way politics is done. We know that the LDP is under immense public scrutiny because what happened during the Abe era, that is in terms of financial scandal, that is money collected and not reported. So that also became an Achilles heel for Mr. Ishiba as well, because that issue has not been actually tackled head on. So the public is still very distrustful of the LDP and the party and the leaders. So they have to do something about it, come clean on these issues. If they don't do it, then I see further turmoil in Japanese politics. And as we know, the opposition is fragmented, divided, and they don't have any united policy front where they can challenge the LDP leadership. So it's a big mess at the moment. How they are, if they don't sort it out quickly and and win the public trust, it will be bad news for Japan. It will be bad news for the world, because the world, Japan has been in a leadership position in many ways, and the world wants a stable Japan and a stable policy and some kind of leadership, regional leadership. Japan also faces immense, regional. Yeah. Go ahead.
What's been really interesting as well in the last election last year was the emergence of these far-right groups, right, that really centered around anti-immigration issues, even xenophobia at some point. It seems to be that really populism is growing across the world as well. How much of an identity crisis will that present for the LDP as well?
Well, the LDP has to tackle the issue of migration and the issue of what they call over-tourism. Because generally speaking, it's good for the economy. 20 million people coming to Japan from overseas in the first half of 2025. At the same time, it puts pressure on local people. It puts pressure on infrastructure. It puts pressure on in many other ways. And Japan, which is not used, Japanese were not used to having these many foreigners in front of their eyes. They feel really overwhelmed. So there has to be some kind of public education. There has to be some kind of, public policy around these issues, because no one wants a xenophobic Japan emerging, because Japan's image has been a peaceful Japan, a pacifist state, acceptance, of foreigners. So these things, the LDP has to really think long and hard and make some hard decisions about these policies. About San Seito, of course, this is, we should not dismiss it. There is a bit of a movement there. But we have seen in Japanese politics many new new parties emerging and disappearing. So it's very difficult to say precisely at this stage how far San Seito will expand its influence and its numbers in parliament. So these are very uncertain times for Japanese politics.
And the world watches as the LDP and indeed Japan searches for its next leader. Professor, thank you very much for your analysis. Really good to chat with you. Purnendra Jan is Emeritus Professor at University of Adelaide's Department of Asian Studies. We'll have more ahead on the Asia trade. This is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Nikkei stocks at the moment gaining 1.7%. The topics also up about a percent. Avril, of course, weaker yen. Also, the short end yields falling at the moment, really leading to that boost in the stock market as well.
Yeah, short end yields following what we saw in U.S. Treasuries, potentially those Fed rate cut bets, but the troubles are really Treasuries, potentially those Fed rate cut bets, but the troubles are really related to the long end globally. You're seeing that years and in Japan. Of course, the concern is whether these higher yields in Japan prompts a repatriation of funds back into the country and what this could mean for global debt overall, Sherry.
Yeah, we're following also what will happen across China as we get those eco numbers. We are expecting that export growth probably slowed in the month of August, and you can see A50 Chinese futures closing to the downside of 0.3%. We are expecting also inflation numbers out of China this week. On Wednesday, factory gate prices probably narrowing their decline in August for the first time since February. We'll be on the watch for what that means also for the broader Chinese economy and also for those AI-related stocks that we've been following very closely in the Chinese and Taiwanese markets as well. You can see U.S. futures pointing to the upside of 0.2% after finishing the Friday session lower. Remember, we also had the sharp cooling in the jobs market and that flight to safety in the U.S. session. But that's it from the Asia trade. Our markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai, and Shenzhen. The China show is next. This is Bloomberg.
cidade estava sitiada.
Isso ao começo eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
In my opinion, at least, the reason that the U.S. is so creative and innovative and has so much interesting development and has, most of the largest trillion-dollar businesses is because we have the best capital markets. And capital market development is really what creates the funding in order to pursue ideas. So in America, any idea you have, there's a market for it. Right? So building markets like the securitization markets in the U.S., really allowed for non-financial companies to get into the financial industry business. And that was really a derivative of making the securitization market so competitive. So building securitization markets and continuing to grow markets and figuring out how to continuously fund ideas, I think that's going to be the next stage of growth for these markets.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne Mann with David and Glenn.
Good morning. Our top stories today. Japanese stocks on the up while the yen drops as investors brace for Shigeru Ishiba's departure and the race to succeed him as prime minister.
Traders looking ahead to this week's U.S. inflation print after a weak jobs report boosted bets of a Fed rate cut this month. We are asking Stand Chart now why they see a 50 basis point reduction.
Right. Also ahead here, China investigating its former top securities regular Yi Hui-man following alleged discipline and law violations.
And President Xi Jinping set to address a virtual summit of BRICS leaders with U.S. tariffs topping the agenda.
What issues when it comes to these markets, right? So the big news coming through over the weekend, we'll get to this in a moment, certainly, and what's next as it pertains to the Japanese political situation there. Prime Minister Ishiba, of course, is stepping down, what it means for the party, what it means for the overall foreign and economic policy. As you can see, the markets are moving ahead with this as far as equity markets going. We're better by about 2% on the Nikkei. What is on the back foot, though, it's worth noting that the yen is not just falling against the US dollar, it's actually down against every single one of its peers in the Monday session. So one to watch as we go into the thick of things right now. 158 on the 10-year yield, so we're down, we're better on the JGB space. The other big story we want to talk about is the oil story, of course, on the weekend. OPEC Plus agreeing to more oil coming to this market in October. Oil's on the way up. We are also looking at, that's not the right ticker, guys. Okay, we'll talk about that later. That should be your Shanghai crude futures coming online. I promise you, in about 15 seconds, we'll show you that. They're going to correct it for us very, very quickly as we look into the Chinese Open today. Right, let's have a look, broadly speaking, at the rest of the markets, though. See, we are on solid footing as far as equity markets go. A lot of that is really down to what's happening in Japan. As you look at markets like Taiwan, not on your screens, like South Korea, it's really this recovery in the chip space, SK Hynix. You have KOC, of course, in Japan. We'll get into the NAND story in a moment later on, of course. Dollar is on the way up. That's really a lot to do with the Japanese currency as well. And, of course, 4%. Do we get there? Is that inevitable at this point in time? We talked about stand chart, 50 basis points is what they're expecting as far as the cut is concerned. As you change the boards, it's also worth pointing out, we talk about inflation's coming through this week. Core PCE at 2.9%. If the Fed does cut interest rates this month, it would be the highest inflation print going into a rate cut in over 30 years. Just keep that in mind, just given the juxtaposition of those two seemingly contradictory things. Suffice to say, we're looking at tech going into the Chinese Open today. The rally, of course, resuming 1.2% to the upside. And as we look ahead to the Open today, futures, you have the currency, the 10-year yield, and as promised, we probably have the Shanghai crude contract coming up on your screens very shortly there. We are looking at declines here. Of course, quite a strong movement into the close on Friday. And yeah, we'll see where we go as far as small caps go, because that's certainly one area of this market to watch very closely. Thank you so much. 2% to the downside on Shanghai crude. Yvonne.
Yep, certainly following what we're seeing, a bit of surprise there in that OPEC Plus meeting. And certainly one thing that we're dealing with here today, among other things, right? You mentioned Japan. There's a political confidence vote in France as well later on today. But here's our agenda for Greater China. We do have the president set to speak in this BRICS address here. Of course, this is the virtual meeting that the Brazilian leader had instigated as well, following the SCO, following that military parade. So certainly more details there. We have export and import numbers coming through from China as well to watch out for. So trade data certainly in focus. There's an MPC Standing Committee meeting as well. The tech rally, we'll see if that continues on Friday. We saw 1 day of correction, and then Friday, this rally basically resumed in China as well. We talked about the small caps as well. And Kuei Chow Moutai, there was a share buyback there to want to note there. And of course, still watching the AI trade with Campercon.
Yeah, I think we were up, if I'm not mistaken, 9% or 6% on Friday. That rebound that didn't last, well, the correction that didn't last very, very long. In fact, in a couple of minutes, Hao Hong will be joining us to talk us through with his take, and he doesn't think there's actually any material signs of a frenzy in the Chinese mainland market. Right, top stories today, of course, we talked about Japan resignation there from Ishiba, and of course, the Fed conversation around will a 50 basis point cut, or will a resuming of the rate cut cycle just bolster a rally into year end here for equity markets?
Yeah, it's interesting, right? When you have Japanese markets are like, as you say, it's almost like nothing's happened, right? And I think the narrative...
It could be good news, in fact.
The narrative behind it is that maybe this delays the rate hike from the BOJ. Given whoever is going to be the next leader is going to be dealing with a coalition that is basically does not have a majority in the lower house of parliament. So also one in which looks at more fiscal measures. So certainly maybe that could be the narrative why we're seeing this kind of response from Japan. But yeah, as you mentioned with the Fed, it's not a matter of whether they're going to cut or not. It's going to be 25 or 50. What's it going to be?
Yeah, and I think right now what's priced in the market is about 28 basis points. It's certainly a little bit bigger than a 25 basis point cut. And, you know, I will sort of crowbar the China story into this, right? And are concerns over a speculative bubble, and I think you can take your camp there, whether that's on point or not, might that limit the PBOC's ability to lower interest rates if that was in fact what's fueling this rally? Ultra easy monetary policy.
It's a great piece from on the Bloomberg about this, right? Back in 2015, they actually did cut rates quite substantially there, whether it was 1 year or even just the RRR. Yeah. And it led to this whole kind of frenzy. So certainly they're a little bit more hesitant maybe this time around, given the fact that there are concerns about how this is going to be maybe a potentially sign of a liquidity-driven rally. So certainly that is one to watch. But I think the debate's going to keep going on about whether this is going to be sustainable or not for some time. But Hao Hong has some interesting commentary about that, right?
Yeah, we'll hear from him in a moment. And that underscores the importance this week of inflation reports. U.S., and you have a Chinese inflation report that's also coming through, of course, this week. And top of trade numbers, which Yvonne pointing out is also on deck for today. Also on deck today is what's happening in Japan. You have the outgoing Prime Minister Shigeru Ishiba's resignation. They're setting in motion a leadership race that will be closely watched by global investors.
This agreement was achieved based on the government and President Trump's administration. It is with regret that our administration cannot fulfill our responsibility.
Yeah, and Ishiba then went on and said he will stay on as Prime Minister until his successor takes over. Let's bring in Sherry An, our co-anchor, of course, joining us out of Tokyo this morning. It's quite a weekend for you, Sherry, quite a morning so far. What happens next here?
Yeah, the leadership election is what happens next, and we are going to get potentially a date for that on Tuesday, according to the election panel head Ichiro Aizawa. Now, local media are reporting that his successor could come in as early as October. We could see the leadership election then, but you said it was a very eventful weekend, and the Prime Minister resigning on Sunday, this came not necessarily as a surprise, given that we had seen some top LDP party executives announcing the resignation, including the Secretary General, and we had heard from other top LDP leadership visiting the Prime Minister, urging him to actually resign, given, of course, the need for party unity at this time. The public not happy with what's happening with the state of the economy, especially when it comes to rising consumer prices, the difficulty when it comes to the weakness of the Japanese yen. But in question right now is how the LDP will move forward with the rules and the schedule of the next leadership election, and of course, who will become Prime Minister next.
Yeah, can you walk us through? I mean, we just showed a kind of a baseball card sort of image of the contenders, right? Who is likely going to be the next to replace Ishiba?
That sort of baseball card panel, very similar to what we saw back in September when Prime Minister Ishiba became Prime Minister in October. Sanae Takaichi, for example, there on the left, the hardline conservative, tops the list in many recent opinion polls. She would become the first female Prime Minister if elected president of the ruling party. She narrowly lost to Ishiba back in September, but she's also seen as reversing back perhaps towards the policies of former Prime Minister Shinzo Abe, who she was close with. We also have the likes of Shinjiro Koizumi, for example, the agriculture minister, only 44 years old, could represent a new generation. Others on that lineup, including the chief cabinet secretary, not to mention the finance minister and also the former foreign and defense minister Kono Taro. But we'll be watching for what the leadership election brings, as whoever gets elected has a really tough path ahead. We're talking about, of course, the monetary policy path, the economic package, which will need to be arranged by the end of the year. A key issue that the ruling LDP that does not have a majority in both chambers will need to contend with opposition parties.
Sherry, thank you. Sherry on there stepping in to tell us what's going on and what's next in this whole kind of political uncertainty in Japan as well. Let's bring in Michael Chuchek, is Assistant Professor of Asian Studies at Temple University's Japan campus and joins us now live from Tokyo. Professor, it's great to have you on. Sherry kind of laid out what the challenge is going to be, whoever is going to be the next prime minister. Do you think the LDP could actually rise to the challenge?
I don't think the LDP has a chance to do much because basically the electoral system has set what the conditions are for the next prime minister, whoever that prime minister is, male or female. They don't have a majority in the House of Representatives. They have to work with other parties, and frankly, that's really difficult. Now, Ishiba did a fantastic job at that. Everybody's talking about how weak he was or how incapable he was to get things done. He got things done very well. His replacement may be far worse. So the actual conditions, rather than the personalities or identities or knowledge of the candidates, are the basic conditions that set the course of Japan.
Michael, David here, and just to ask, in terms of global consequence, is there anything I should be paying attention to as far as, I guess, potential changes to either foreign or economic policy here?
With a new prime minister, there will have to be continued adjustments to the very volatile and very unpredictable world of Donald Trump. There has been a deal signed, but the deal is really unacceptable on the Japanese side, even though the government, this Ishiba government, has agreed to the conditions set by the United States. It's very unclear that any of these conditions can be met, that any of the investments that are required can be organized in the fashion that's described in White House documents. There is really no way that it's going to, a new prime minister is going to be able to take the reins and change Japan or move Japan in a new direction. It's just holding things steady, and even that will be very difficult. In terms of economic
you mentioned
policy,
the challenges ahead. Yeah. Sorry, go
in
ahead.
terms of economic policy, the issue is basically Japanese debt and what it limits governments in terms of their ability to change fiscal policy or monetary policy. Definitely a weak yen does put pressure on a continued rise in interest rates in order to, in some way, push the yen upward. But that, of course, will lead to knockoff effects here in the economy of Japan.
You mentioned all these challenges, and it seems like there is this, need for a strong leader figure. Obviously we think about Shinzo Abe as that man, during this period of a revolving door of prime ministers before. He was the one that actually united this party. Are you looking, is there anyone who's being talked about as replacements right now, as someone that can actually be that visionary?
Shinzo Abe was practically born to be leader. He was certainly, as the grandson and grandnephew of prime ministers, as the son of a foreign minister, he was built to be PM one day, and he had all of the psychological building blocks. He could get along with people. He could also frighten them. None of the persons who are running for the PM's position, well, first the presidency of the LDP, and then that person will presumably become the next prime minister, though that's not determined by this election. There's no one with those same qualities. And if you don't have the whole package, you can't expect the same level of leadership. So I'm looking at a bunch of weak prime ministerships continuing on into the future.
What would change that cycle?
What would change that cycle is a complete realignment of the political parties into some kind of rational political system, with a large party having a broad left to right spectrum. Now, there's been talk about realignment in Japanese politics for over 30 years. It's never happened, basically because egos got in the way, and basically because the right wing of the LDP stayed loyal to the LDP. Now right-wingers have a new party, the Sanseito, which they can vote for, and they proved to be devastatingly effective in the House of Councillors election. They actually are agents of greater chaos than what we've had before, because then you have to bring the right wing of and the left wing in some way together, and this is just not even conceivable at this point. So what will make things better? Your guess is as good as mine.
Professor, thank you so much for the time. Michael Chuchek there, Assistant Professor of Asian Studies at Temple University, Japan campus, live for us there. Out of Japan, really going into this big story today. Coming up here in shows, Lotus Asset Management CIO joins us, Hao Hong, to talk us through where we go next with these Chinese markets amid signs that they want to cool the bubble, question mark. We'll talk to him in a moment here. Also counting down to the open of trade, and this liquidity-driven rally might get an aid from the weather out there, because there's no shortage of liquidity out there. The T8 here in Hong Kong still up until at least 11 a.m. and just by virtue of how things look and feel and sound from outside the studios here in central Hong Kong, that doesn't seem to be a signal that perhaps could be going away. Anyway, keep your eye on the weather. The opening bell 14 minutes away. This is the China Show.
up-to-the-minute news whenever and wherever it happens. I'm Matt Miller, the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Bersetchi. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Welcome back. You're watching the China Show. Futures are weaker going into the open today. The fix of the day is coming up bottom of your screens. There we go, 7.1029 against the U.S. dollar. We have some trade numbers set to come out at some point this morning. Let's talk about this market and where we go from here amidst, of course, some doubts over the short-term path of the market. Our next guest actually doesn't believe a speculative frenzy exists in the Chinese stock market, even as the rally there resumed on Friday. Let's bring in Hao Hong, managing partner and CIO at Lotus Asset Management. Yeah, so it's lay the case out for us.
Yeah, well, I think it's way too early to be worrying about speculative frenzy. Well, if you look at many of the trading statistics, for example, turnover ratio, right? So it's about 2 to 3 trillion yuan per day. It is at the similar, on the absolute terms, it's at the similar level as 2015. But then if you compare to the free flow market cap, right? So it's like less than half of what it was in 2015, right? So that is showing you that actually trading volume can surge substantially higher from here. So it can actually double if we are entering into a bubbly phase. I think that would be one of the measures that I'll be looking at. And I think secondly, people start to worry about the margin trading activities. So margin trading total volume is about 2 to 3 trillion as well. But then once again, you're in a substantially larger market, right? So I don't think there's much to be worried about. And also in 2015, by the way, there was a lot of OTC leveraging, right? So remember, there was umbrella trusts. Right, so people can use an app on their mobile phone to get a margin loan, and also there are other activities. People actually borrowing from non-broking companies. Right, so those companies' margin trading activities is actually not in the CSRC database, and therefore it's not showing 2-3 trillion yuan number here. But since then, all of this has been outlawed. And therefore, I would say that we're now still in a relatively early stage of a bull market.
Okay, so in terms of this rally, how much more do you think we can go? And for how long?
Yeah, well, I think, if we do it properly, right, so if we don't hastily trying to kill the bull in its infancy, we can go substantially higher from here.
It doesn't mean because we're not seeing signs of frenzy, it doesn't mean valuations haven't moved up slightly. Are you concerned over valuations at this point? And if so, where?
Yeah, well, I think overall we're actually seeing valuation at the long-term average for the overall market. All right, so that's not a cause of concern. But then at the same time, in some pockets of the market, there are some sort of a very speculative activities going on. For example, some of the semiconductors company is trading at 6,000 times PE. But then, if you look closely to the financial statements, many of these companies, they are trading at a very high multiple is because they turned profitable this year.
They just turned profitable.
Yeah, so from a loss-making company into a profitable company. So I would say that, at this very early stage, earnings per share for these companies are very small, and therefore they're showing up at a very expensive earnings multiple. But then if you look at many of the U.S. tech companies are the same, right? So, back in 2000, Amazon has no earnings. And many of the big tech companies right now who is, over $1 trillion market cap, back then there's no earnings, right? So if you try to calculate earnings at this very early stage of the growth phase for these companies, it would inevitably showing up very, very expensive.
You've been also talking about what's been going on, these small caps, as you say, right? There's
right.
quite a bit of rally going on here.
Yes.
What do you think is driving that?
I think small cap in general is doing very well this year. It's substantially outperforming, especially if you're looking at the CXO, the drug companies, the companies, and also some of the tech companies, the robotic companies, for example, they're doing exceedingly well this year. And I think there's one of the very popular alpha strategy that the hedge fund industry is engaged in, which is basically along a portfolio of good quality, high growth companies, and then they short the small cap index futures. And so, in so doing, they were able to capture the alpha of a portfolio of small cap companies. Now, such a strategy, inevitably, the result is that, you're seeing price momentum in many of the small names that just continue to go up, because everybody piles in, everybody's sort of engaged in a similar strategy. It could create fragility in the system, but I would say that, since early 2024, there was an episode where you have a quake, right? So many of the small cap companies just collapsed, and that washed out a lot of hedge funds back then. I think since then, after more than a year, we should have learned some lessons from that episode, and regulators could be substantially more clever this time.
Okay, Hao, hold that thought. We'll have more from Hao Hong there, Managing Partner and CIO of Lotus Asset Management. Your pre-market's looking like this. We're seeing slight gains here in Hong Kong, despite this kind of T8 as well. So certainly we'll watch how this liquidity-driven rally goes here. Futures are unchanged here this morning. This is Bloomberg.
You've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive. Getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back. Hang Seng Tech, Hang Seng China on your screens. A little bit of green on your screens here. Dollar China 712.63, 710 and change was the fix of the day. We're looking at some of the big tech plays going into the session today. You had a rally into the close of Hong Kong on Friday, a rally overnight. When I say overnight, Friday session in the U.S. Baidu and Alibaba. And you're probably going to see that as well coming through this Monday.
Yeah, Baidu is the leader in the bar so far. We're up close to 3% for that stock in particular. In terms of stocks to watch, we're watching, of course, big tech as well. There you go. There you go. Alibaba's also up some 1%. So certainly continue to see a lot of momentum around the growth story and the growth stocks today. Property stocks, so Shenzhen joining the list of tier 1 cities here on easing some of these home price and buying curbs as well. You are seeing mostly higher for some of these Shenzhen listed or at least Shenzhen related sort of properties. equity stocks like Shenzhen Investments up 4.5% as well. We're also watching Tickmill Gold, right? Tickmill Gold announcing that IPO, set to be the world's second largest this year after CATL. We'll watch Tickmill mining shares coming up. Open is next. This is Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Welcome back. You're watching the China Show, counting down to the open of trade. There's a bit of weather out there. I feel like I'm coming down with something, Yvonne.
Oh, no.
In fact,
is it man flu?
No, here's the thing. Well, I'm picking it up from you.
You just came back from a holiday, man.
Here's the thing. I was at the airport, and I literally walked into a sneeze. So there's no better feeling than walking and coming out of a sneeze. You know when you walk through the air of a sneeze. And it's too late, obviously, to hold your breath. But I'm just giving you a bit of a heads up.
Yeah, okay.
Yeah.
We'll see what happens tomorrow. But yes, certainly there's a lot to talk about here today. Obviously, there's a lot to talk about the Fed and whether, 25 or 50 basis points is going to be happening next week as well in that Fed meeting. You have Japan, of course, the political uncertainty on that front there. And whether in China we can see another resumption of this rally. Looks like it could be the case here today onshore. If you see the CSI 300, we're seeing slight gains to the upside here. Shanghai is slightly flat, but obviously we're watching the small caps as well, like the Chinex, like the Star 50, which have been on a tear, and slight downside for Shenzhen here this morning. And we're watching very closely the Capricorn Technologies. There you go. We're seeing another down day for the AI player there. We're down about 3% for that chip stock. So certainly that's one thing to watch as well. Maybe it could be an indicator of what's to come. But yes, we're also watching Shanghai crude, just given the surprise, that you could say, up another sort of output boost from OPEC Plus over the weekend, and so that's why we are seeing oil prices are to the downside here today. You flip the boards and watch what's going on in Hong Kong. So, of course, it's a T8, so we'll see what happens to volumes and the like here as well. But we are flat right now on the Hang Seng. HS Tech is also not doing too much. But certainly there's a lot of questions about where we are in this sort of China tech rally as well. You take a look at Baidu, that's still doing remarkably well. We're up some 4%. Baba's up 1.5% as well. And there, we're also watching very closely the property side of things, right? So Hang Seng property is doing okay, maybe because HIBOR is coming back, but really also because of the China property names. That is one to to watch, with Shenzhen now joining the likes of Shanghai and Beijing in easing these home buying rules, right? So far the commentary, I think JP Morgan said it's not very exciting, not unlikely a surprise, just given what we've been seeing from Beijing and the like already. But the oil names that certainly is in focus here today. Mixed picture across PetroChina against some of the likes of China Oilfield Services, for example. Costco Shipping Energy, though, that's up some 6% right now. And we're watching the property stocks, right? So they're removing home purchase restrictions for local families and those with even without local household registration as well. There you go. Country Garden is up double digits, 10%. Dave.
There we go, off the ground. So the other big story in China today is China's investigating its ex-securities regulator for alleged violations. That's the headline of the Bloomberg story. The chart shows you how the main benchmark performed under Yi Huiman on your screens, currently under investigation for, as we were pointing out, suspected violation of discipline and law. Stephen Engel, our Chief North Asia correspondent, is here with us to talk us to what we know so far about this current probe, Steve.
Well, bring up that chart again because you can see it. If you want man flu, you're going to get it from me.
Oh, no. That sounds like real flu, right?
That's real. That's Beijing flu, yes. Okay. Bring up that chart because you can see that the market lost about $5 trillion at the time of Yi's removal. And there was lots of speculation and lots of emphasis on party discipline in the stock market and possible violations of law as that market really sold off. And, you know, Yi Huiman was the second CSRC chairman in a row to be removed because, again, Xi Jinping has emphasized discipline, and he has talked about no mercy as far as stock market manipulation or any of these other lax discipline practices. And he's also vowed to go after tigers and flies, not only in the PLA, but all across the ranks of the party. So when he disappeared, or when he was removed, essentially, more than a year and a half ago, February of 2024, they brought in Wu Qing, known as the broker butcher, right? He is the man in charge of discipline. And that really sent a big message. So now that we're getting news that, in fact, Yi is being investigated, shouldn't come as much of a surprise. Now, what is he allegedly guilty of? That's what's going to have to transpire over the coming months, if not years, because it's already been a year and a half that he's been out of the picture.
What do you think this investigation tells you about how central government is looking at, you know, the regulations, and at a time when we are seeing markets are quite robust?
I think they're lifting up every rock and looking at every possible malfeasance. And if you kind of connect the dots to some of the other investigations as well, keep in mind, Yi was ICBC chairman from 2016, I believe, to 2019. Now, there was other investigations into ICBC. They were in the spotlight in February of this year when a death sentence with a reprieve was handed to ICBC's ex-vice president, Zhong Hongli, for bribery. Now, again, there was connecting the dots as well. His term happened and was coincided as well with Li Xiaopeng, the former chairman and party secretary of China Everbright, who was sentenced to 15 years in prison in March. And then a former executive at China Renaissance, Cong Li, who was also detained. So I think the regulators, not the regulators, the discipline administration is looking and uncovering different possible connections to the banking sector and the regulator, and whether there was some, dare I say, cahoots going on.
Okay. Steve, thank you. Stephen Engel there, our North Asia correspondent, trying to kind of align everything for us a little bit here as well. It's interesting, too, because everyone's talking about, you know, if we do see this stock rally continue, which Hao Hong says we can for some time, I think he said 3 to 6 months is easily attainable here right now. What does this mean when it comes to how policymakers are going to react to monetary policy, for example? Does it in some ways delay the impact of cuts or triple R cuts and the like here because of the narrative here that possibly this rally is liquidity driven? Yeah,
a further rate cut might even engender further speculative spirits in the markets. And, you know, some of the economists have, in fact, weighed in specifically on this very issue and whether or not we should actually connect the two stories together, and whether or not economic policy then goes then to affect market policy with a, of course, connecting strand there would be low interest rates. But yeah, let's get a sense from Hao Hong.
Yeah, Hao Hong, managing partner and CIO at Lotus Asset Management. Yeah, do you think those two things are related? What this equity market does, and whether VOC is going to be doing anything later on this year?
No, I think more likely than not they're going to continue to cut interest rate. Because there's no inflationary pressure in China, right? So indeed, we're still fighting with deflation. So I wouldn't be surprised to see interest rate cut and also triple R cut towards the end of the year.
I mean, I'm glad you brought up the lack of inflation. So I'm just going to mention stock names, and you can chime in on the stock names itself, right? So what's happened recently is market leaders have started to underperform. So BYD in EVs, Meituan in food delivery.
Yeah.
And the market strategy of buying the leader doesn't seem to be working out because they think that perhaps they won't fare as well during this fierce competition. Well, do you think the market is getting this one right? Or is it time to then get back into these market leaders? I think Meituan's almost about to take out 100. BYD's almost about to take out 100. Just your thoughts on that strategy.
Yeah, well, I think, right now people are really looking in the new growth sectors in the economy, right? So if you look at, if you're focusing your portfolio on the old parts of the economy, which is, property, baiju, that kind of stuff, right? So it's not going to give you good return in this market. And also, before this rally, people were buying bonds, for example, because bond use has been declining for 4 years in a row. It's been a huge bull market for the bond managers. And now, people start to realize that because of the government's policy pivot, that, we're going to fight deflation rather than tolerate deflation. Right? So there's a mindset change, and therefore, people should tilt their portfolio towards reflationary assets rather than the old guys.
Is the jury still out, though, on whether this is, this anti-involution sort of campaign is going to be reflationary?
The intention is to reflate the economy, but then whether you can be successful or not depends on how you can sort of rescue the property price from continue to fall. And I think in July we're still seeing a falling property price across the board, but I think the momentum, the speed is actually slowing down. So we're seeing some initial results of that.
Okay. Yeah, I think we've been talking about this for some time, whether the equity market, and I think we've partially answered the question, can sustain its rally amidst low inflation and property prices remaining subdued. And where do you think the earnings story is going to come from eventually here?
Yeah, if you look at the overall market earnings, right, so it's growing at like 2%. It's anemic, and mostly because the big banks are still generating very low single-digit earnings growth, and also many of the traditional names, they are very low single-digit growth names as well. But then if you look beyond this old part of the economy, right? So if you look at semis, drugs companies we discussed just now, they're having like 200% earnings growth, right? So Capricorn is turning from profitless to a profitable company, and many of the drug companies, Labubu is seeing 300 times EPS growth as well. So I think these are the sectors we didn't have before, right? These are the sectors that we didn't believe. Now that for some reason this cycle, these sectors are turning around. There's a paradigm shift from a profitless company becoming a profitable company, and therefore people are willing to pay up for these companies, and I think they should continue to perform.
Yeah, I'm glad you mentioned Capricorn. This is a name that not a lot of people, in fact, had heard of and knew how to spell going into 3 weeks ago. Now it's on everyone's.
That's right.
Mind. And so the reason I ask you that is NVIDIA in China, that theme. What do you think is the closest thing to NVIDIA in China?
Yeah, I think people think that Capricorn is the Chinese NVIDIA for now, because now Capricorn is only having less than 5%, I think like 3% market share in the chip industry in China. Right? So people think that, wow, because the U.S. is forbidding China buying U.S. chips, and therefore you have to buy Capricorn. And therefore, it's going to take 100% of the market share. And therefore, the earnings are going to explode, et cetera, et cetera. Now, if you look at these companies, it's investing like less than 1 billion yuan in R&D. Right? So it's like substantially less than whatever company you can come up with, right? Even a Baiju company put in more
R&D
than that. Yeah, more than that. So I would say that, it's a very odd company, right? So, but the story is just very good, right? It's been around for 10 years, and for the longest time it has been, when the market goes up, it tends to be the darling of the traders for some reason. People love trading these stocks. But of course, we haven't seen this kind of surge for a long time now. Right. So I think some of the brokers, I think Goldman was putting at like 2,000 yuan price target. And there could be a chance, because, as the market goes up, people will come back to this name.
In terms of potential catalysts, what are you looking at for the next few months?
I would say that people are starting to come around to this reflation idea.
Okay.
Property price stopped falling so fast, right? So sort of stabilize a little bit, and then once the Fed start cutting, then we start cutting interest rate and also RRR, and then people start to believe the bull market story, because this is a bull market that we've been waiting for 10 years. So the last bull market we had was in 2015, right? So back then it was at 5,000 points. And I think in the previous bull market before 2015 was in 2005. So each of the 10 years you have a bull market. It's quite interesting. So it's 10 years in the making, and let's hope that this time we get a truly bull market rather than a technical rebound.
Okay, yeah, we'll revisit the story in 2035. We'll see. Hao Hong, thank you so much. Managing Partner, CIO, Lotus Asset Management. Hopefully, of course, there's something in between those two things.
And we'll still be here. We'll see.
Oh, yeah. If not,
we're all going to be here.
If not, the robots are going to be replacing us. I'll borrow what Hao Hong said. Reflation in Goldman Sachs, and I'll get to Japan in a moment. So this week, inflation's coming out, right?
Yes.
I think Goldman put a note out on the weekend that month-on-month PPI might actually see the first positive increase.
Ooh.
This month-on-month this week when it comes out. I think it's the last time we saw that was back in, I think, November of 24. But anyway, Japan.
Japan, we got some news from local media here. So, who are the kind of serious contenders to replace Ishiba, right? So we are just learning here from Kyoto News that Yoshimasa Hayashi intends to run for the LDP head. He is, of course, the chief cabinet secretary currently already. So his intention to run, according to local media. So another one to add to the list as well. Coming up, we're going to talk chips and AI with US-listed Taiwanese firm Silicon Motion from the BofA Securities Asia Pacific Conference. That is next. This is Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
All right, so we're about 15 minutes into the cash market session. We had a decent close on Friday as the rally resumed, past tense, and it's extending those gains as we see on your screens right now.
Yeah, as Hao Hong mentioned, right? We've been waiting for this rally for 10 years. This slow bull run that continues, right? We had one day of correction on Thursday, and then Friday things kind of fired up once again here, and it looks like today we're still seeing that and punching some decent gains here onshore and offshore here, in particular HS Tech we're watching very closely as well. In terms of what the week ahead, of course, there's a lot ahead, right? We talk about we have trade numbers coming through from China, you have inflation numbers as well. Certainly one to watch as we count down to, of course, inflation prints in the US. That is the next sort of event post to watch here, post US jobs report, where we talked about what a 20,000 plus less sort of job gains here. That certainly sends some worries in this market of really, is the labor market really weakening substantially in the U.S. now to warrant this talk now of 50 basis points as an insurance cut possibly from the Fed next week. So certainly that is the one thing to watch. We talk about some political news in Thailand as well. There's a bond auction in Japan, which we continue to watch given the political uncertainty there as well. And of course, the ECB rate decision, a lot of political uncertainty in France. We talk about the UK as well these days.
Yeah, and certainly the UK is also part of the France story as well, obviously for different reasons. But yeah, the melt up in yields and certainly the spreads that we're seeing, particularly in France, given the uncertainty out there. It's a big next 48-hour window as it pertains to politics in France. And the interesting bit is unanimously almost economists don't think the ECB is going to act on this from a rates perspective, and why would they? But will Madame Lagarde, of course, comment on the economy that she previously oversaw as finance minister? That all comes through, of course, on Thursday. Okay, we'll take a very short break, and on the back of this, we'll tell you about these market moves that we're seeing across, particularly when you look at the chip space here in the Asia Pacific. Happy Monday.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Jumana Bersecci in Vienna, and this is Bloomberg.
Right, welcome back. You are watching the China Show. Let's talk about chips, shall we? It's graphics coming up on your screens, and the company stock, one company stock, the CFO joins in a couple of seconds here, shows you that really this outperformance of Silicon Motion, you compare that to, I think you've heard about NVIDIA. You probably heard about a NASDAQ, the SOX index as well. There you go. The stock is up, well, let's call it 50%, right? Year to date. So let's get a sense really of what the company's up to, what the business outlook is, what the underlying economics of the sector are looking like. And we're joined, in fact, by the CFO, Jason Tsai. My apologies, exclusively from the BofA Securities 2025 Asia Pacific Conference. Jason, good morning. And I think we've worked out the technical bugs, so thank you for sticking around and being patient. Jason, just help us understand what's going on in your sector and what the outlook is the remaining, let's call it 4 months of the year.
Yeah, so we're really excited by our outlook for the rest of this year. We've been growing pretty significantly throughout this year, from what we talked about, what we did in Q1 to what we expect to exit the year at. We expect to exit the year at $1 billion run rate, which is about a 50% revenue growth from Q1 to Q4 this year. So we're really excited about the opportunities ahead. We've been laser focused on a number of opportunities centered around AI, from AI at the edge, also now going into enterprise and data centers as well. So there's been a number of significant developments for us throughout this year and that we've been working on for the last many years that we believe will drive significant long-term growth and share gain for us over the next many years to come.
Yeah, the sell-side analysts are talking a lot about this new product cycle that is underway for Silicon Motion. Jason, I get your take on when do you see kind of the revenue contribution from some of these new products to really meaningfully show up in your financials?
Yeah, so if you take a look at our business today, the majority of our business, 95% of it, is coming from more PC and smartphone centric. Over the next 2 years or so, we expect to be more than 20% of our business coming from enterprise SSDs, coming from automotive. So significant growth in additional markets that we see as meaningful tailwinds to our business as we continue to scale into these new opportunities. We're seeing new products in IoT, in AR, VR, in a number of different avenues where AI is now becoming front and center with a lot of these end markets. We're seeing certainly more demand for high performance storage, power efficient solutions, and all of these things help enable, whether you're at the data center or whether you're at the AI at the edge on the PC or smartphone, enable faster AI responses, faster inference, faster training, faster results, and more efficient processing. And that's what's key for a lot of these AI applications to really drive growth long term.
Jason, I caught what you mentioned a few seconds back. You talked about potential growth or current growth from data centers. If you could elaborate more on that, please.
Yeah. So, data centers historically, you've had high-end SSDs that are really high performance, but they're really expensive, right? And that's been a great storage platform for the high performance requirements of a lot of the data center. You've had hard disk drives where historically they have been able to deliver very high density, cheap storage that stores a lot of the data that, the world creates day after day. Now, as AI becomes more and more prominent, as you're trying to get more training and inference and getting that to happen faster, a new category of storage is emerging, relying on the next generation of 3D NAND that's cheaper, that's better performing, and that can deliver kind of the best of both worlds. High performance SSD performance that can deliver faster inference, faster training, all the while with lower dollar cost per bit, lower total cost of ownership, lower operating costs. That's become very similar to hard disk drives, and we're at the forefront of that. We've been developing these controllers, these solutions for enterprise and data centers for the last couple of years. We've won 2 tier 1 customers and 4 additional customers last year. We expect to start seeing revenue come online here late this year, going into 26. And then as well as scaling that more meaningfully into 26 and 27 to be 5 to 10% of our revenue. So we're very excited about this opportunity. We've seen significant amount of inbound interest, and honestly, it's a lot more inbound interest than we've got the capability for at this point. So we're scaling up our resources.
Jason, we probably have about 30 seconds left. I was going to get your take. Most of your products are made in Taiwan and some by SMIC, I believe, in mainland China. Can you tell us a bit more about what the plans are going to be manufacturing-wise? Are you looking to diversify your supply chain, for example?
Yeah, we are. And we are working on diversifying our supply chain. But TSMC has been, our primary foundry partner for a very long time, and they continue to do a great job for us. Most of our products, while in consumer electronics, our customers have developed very sophisticated supply chains that have manufacturing throughout the world. We are working with other foundry partners that potentially open up opportunities for us longer term. But we are very happy with the way TSMC has been able to support us, and certainly for a lot of the advanced geometry products that we are working on, TSMC continues to be our primary partner for these products.
Jason, we got to leave it there. Jason Sider, CFO of Silicon Motion, joining us there from the BofA conference. Much more coming up the next hour. You're watching The China Show.
nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Will Obey. We're going to talk about how sports is eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
We're going to see tariffs push up inflation. We're seeing all of this take a toll on job growth. This is an economy that's being pushed to the edge.
What it really puts on the table is a Fed that gets back in motion for cutting rates. And if the economy's not falling off a cliff, that's a pretty good combination for risk assets.
The markets are quickly moving from pricing in 2 cuts for the rest of this year, meaning 1 in 12 days and 1 in December, to possibly a cut at all 3 meetings.
So our guests from Bloomberg TV reacting, of course, to the U.S. jobs report on Friday, which did show, of course, that headline number was weaker than expected here. That's why you're starting to see that probability of a cut next week as almost near uncertainty here right now after that jobs report. Just to give you an update on the weather as well, that Typhoon 8 signal looks to be extended, right? So to remain in force at least until 1 p.m. this afternoon. If you have the p.m. session for class, don't even think about it here today.
Yeah, that's done. Markets, though, are brushing off as far as the market being able to trade, right? So it's certainly a story of yesteryear that the market doesn't trade when you have a T8. So it's 0.4 of 1% to the upside right now. About 30 minutes into a T8 session, which is something we haven't really said a lot here on shows. Right, going into the rest of the region, so equities are actually doing well. A lot of this is really down to what's happening in Japan, where you have a 2% lift coming through out of the Nikkei 225. You're also getting some of the big chips and heavyweights there. The Kospi, SK Hynix, and TAIEX index is also doing quite well. S&P futures are also up. And I think the other big story is, does the jobs data that now has largely, and we'll see, has cemented the Fed cut, might that provide the additional tailwind equity markets need to carry us through the end of this year.
Yeah, certainly that's going to be the one thing to watch, right? Is it going to be 25 or 50? I think you have some market participants that are sticking their neck out and saying, look, maybe 50 basis point cut is now also solidifying this sort of narrative here because of just how weak that jobs number was. I think, Stephen Englander, who's going to be joining us in a few minutes from StanChart, saying if we get something that's sub 40, he mentioned this before, that jobs report, that does build the case for 50 basis points. BE's Anna Wong, though, saying, I don't think so. They said right now, it's still kind of the verdict is out there because it depends really on the revisions that we're going to see. And August, she mentioned there is a bit of an anomaly in the data, that sometimes the data does undershoot consensus here. So we really have to see how things play out.
Yeah, and do we get to the 4% handle? Do we get a 4% on the 10-year yield, which is the level that we're tracking as well very closely? I think we're up 2 basis points right now, so we're about 9 basis points away from the threshold, that very nice round number as far as that's concerned. Okay, the other big story we're tracking here is on the leadership change in Japan. So we know that Prime Minister Ishiba is stepping down. He will be staying in place, of course, until they figure out the new person. We understand from Kyodo News about 30 minutes back that the chief cabinet secretary is intending to run for the LDP head among the many names that have been floated yet again of a possible replacement or successor to Mr. Ishiba.
I mean, you've been talking about the equity rally that's happening in Tokyo here. Amidst this political uncertainty, it seems like there's quite a lot of conviction in this market, and perhaps what people are pricing in is that whoever is going to start leading this LDP-led coalition is going to be still at a pretty weakened position, right, given the fact that in the lower house parliament, they don't have a majority. Yeah. So what does that mean in terms of a policies perspective is it might be a bit of a stalemate, right? If you take a look at, and whether the BOJ can still hike, is still a kind of a question mark as well. Maybe that's why there's some tailwinds heading into this equity market.
Yeah, well, let's put that question right now to one of our guests this hour, Rachna Metsa, on the bond markets, co-head of regional fixed income at Maybank Asset Management, joins us right now. Good morning, ma'am. Thank you for joining us. So,
good morning.
Let's say I'm sitting on a portfolio of JGBs. Does this concern me at all, what's taking place politically in Japan?
Yeah, I think I do expect a lot of volatility, but we've already seen sell-off before this news, correct? Because a lot of people are expecting him to step down. There was so I'm not that worried in terms of the deficit for Japan over the long term. I think that JGBs have already sold off. The curve is steepened. And recently, I've seen some insurance company also buying the long end of JGBs. So yes, maybe you expect a 5 to 10 basis point sell-off, and we have seen the globe. So to me, I think you may see a short-term flattening in the trend, but generally, I am not that worried. Yes, the yen may weaken short-term given the opposition actually really wants a higher consumption tax cut. So we will have to see, but I feel that market is already priced in some degree of risk.
Can the BOJ still hike this year, Rachana?
I think definitely if you look at today's GDP growth has been very, very strong. Inflation is still above their expectations. So I do expect at least a 25 basis point hike in Japan. It's just that maybe it's delayed because of political uncertainty.
Okay, well, I'll take your 25, but I'll do the opposite way and put a negative sign to that, and then we'll talk about the Fed now. Do we get a 25, you think, or a 50? What are you positioned for? And do we get even more than a 25 for this cycle, or this part of the cycle?
Okay. I think that beginning of the year, we were expecting 75 basis point rate cuts. So I think we stick to our view that there'll be 75 basis point, consecutive 25, 25, 25. For us personally, it's very, very difficult for them to cut 50. Yes, the labor market is slowing, but inflation is still a little higher than Fed expectations. So we definitely expect 25, but I know market is thinking that there's a chance they may cut 50. But 25, 25, 25, so 3 rate cuts this year we are expecting. In terms of portfolio positioning, we prefer the 10-year part of the curve. And actually, slowly, I think that even the 30-year part of the curve looks interesting. I know the whole world has got a steepener trade, like 230s or 530s, but there's a chance to me, I think that 30-year may outperform like a bull steepening, which we talked about. And since everybody is short 30 years, I think there's a chance that 30-year may rally, actually more, which we saw on Friday. So actually, I continue to even like some 30 years in U.S. Treasuries.
I have to get your take on how the narrative has certainly changed, right? I mean, if I see political uncertainty in Japan, in France, for example, we've seen basically how spreads have taken off there. What does this tell me about how I should be looking at U.S. Treasuries now in some way? I mean, now that the fiscal concerns, do we push that to the wayside now? Is it more about, the cyclical downturn that people are pricing in? Does the narrative really change around U.S. Treasuries now?
Absolutely. Actually, if you look at the fiscal deficit, I think market is not worried for this year and maybe middle of next year. And the tariff revenues are coming back in the U.S. So for me personally, I'm not that worried about deficit for the next 1 to 2 years. Yes, from a longer term perspective, we'll have to see how it pans out. So I think the slower growth is more a concern now in terms of job markets. Yes, the tariff inflationary impact may be short-lived. I do believe that it will not be a long-term impact because if you look at rest of Asia is facing deflation, we are cutting rates aggressively. So from that perspective, my view is we need to focus on the economy, especially over the next 6 months to 1 year, and maybe longer term. Yes, the deficit concerns will pop back in.
Okay. Rachna, thank you so much for the time. Rachna Mehta there of Maybank Asset Management on her calls really on this Fed story, 25, 25, and 25. Hard to make the case for a 50, but our next guest, Stephen Englander, has and will make that case for a 50 in a couple of seconds here. Global head of GT and FX research at StanChart joins us from New York right now. Stephen, good morning from the Asia Pacific. Thank you for joining us on your Sunday. Lay out the case for a 50. How clear is that to you at this point in time?
Well, to me, it's pretty clear. I think the easiest way of addressing it is to ask the question, say the Fed had been sitting in June, like say 2 weeks before or the June meeting, and they knew exactly the way the numbers would play out, both the unemployment rate, the employment to population, and non-farm payrolls. Would they have been so hawkish? Would they have been so adamant about saying that they didn't have to hike? I think they would have, that they didn't have to cut. I think they would have cut at least once between June and July. So I think the 15th September, I don't think they're going to, I don't think it's going to be a panic cut, but I think they're going to argue that it, either they missed it or the data missed it. They're looking at what they're seeing and they're saying, yeah, the 50 basis point adjustment is appropriate.
Is it more going to be like an insurance cut? Stephen, I just wonder, just how weak is the labor market right now?
I think the labor market is pretty weak, but I think the economy isn't that weak. I mean, when you see the GDP numbers, and most of the demand indicators, they seem to be, they're not great, but they're fine. They're not as weak as the labor market indicators. So I think it's possible that the weakness is concentrated in labor markets. I think that they would do 50, and we actually don't think they're going to do much after that because we think that they'll say, look, we did a chunk. We've gotten, probably halfway to neutral. Let's see how this plays out. And I think that we'll probably see enough strength that they, as time goes on, they don't feel the need to ease much more.
Okay, that's an interesting observation because it seems like, to your point, the case isn't clear beyond the September meeting. Is this a month-to-month, almost a meeting-to-meeting conversation we'll need to have now, Stephen?
I think so, but I think it also depends on the tone of things. The fiscal package has some fiscal stimulus to it. It's not, it wasn't fiscally neutral, so there's a bit of stimulus there. There's a bit of inflation that we know is coming. It looks, as if something's happening on the productivity side. We're not exactly sure, but it may be stronger than we thought. The Fed they will be open to cuts, but I think they may end up deciding that they don't have to.
Where's the direction now for the dollar then?
In the short term, we think we could see more dollar weakness, right? Because the market is pricing in 25. And realistically, the Fed's not going to get up there and say 50 and done. They're going to say 50 and we'll wait and see. And as data, if we're right, as data come in, the market will say, yeah, they probably don't have to do much more. So I'd say over the next month or 6 weeks, we're kind of thinking that there's some moderate weakness in the dollar, but we think that weakness would be the dollar's last decline And as we get towards the end of the year and into 2026, we'll actually see a bit of a dollar rebound. It's not going to be enormous, but market positioning is a bit short dollars. We think there will be some upward pressure on U.S. yields, and the economy probably isn't going to collapse. So a bit of we'll go through an episode of dollar strength here, but not immediately.
Yeah, well, I was about to say, Stephen, I mean, just looking at how Europe and the political story there is evolving. Look at France. I mean, not Europe, but the UK. You look at how Japan is playing out today with the yen weaker against almost everything today. Do you think that what this week looks like is a case of dollar strength? Very short-term view, Stephen.
It's possible, but we're getting shocks from everywhere. The question is, which is the biggest shock? Is it the politics in Europe and and in Japan and the lack of growth prospects? Or is it, the market coming around to thinking, well, maybe the Fed isn't going to be as hawkish as we thought we were, and they're going to back away. In this immediate month or 6 weeks, we think the Fed shock will be the biggest one. But you have to, if there's a political crisis in Europe, that's going to really weigh on the euro. So you have to wait and see. But right now, we think the U.S. cyclical picture is going to be the bigger driver of the dollar, but it's not going to take it very far weaker.
And in terms of these steeper yield curves globally, I mean, where should we watch out for the curve the most now? Is the front end pretty well anchored at this point, given what people are pricing in terms of Fed cuts? Where to look at in the curve now?
For the moment, we think that the front end is, the market still has a little bit more to price in at the front end. If we're arguing for 50, the market has about 28 for September. I think at the long end, we're so close to 4. We think that there's more upside at the long end. Especially as 2025 ends. That this is like the last opportunity to, take advantage of a low yield environment before things begin to back up, because we do think that the U.S. fiscal situation is serious, and as is the global one. So we think ultimately the bond vigilantes are going to win. But at the same sort of time horizon where we think we could have a bit of dollar weakness, we could have a bit of lower bond yields. But as we get towards the end of the year, we expect both higher yields and more dollar, the dollar to rebound a little bit.
Stephen, it's great to have you. Thanks so much for joining us on a Sunday night. Stephen Englander there, Global Head of G10 FX Research at Standard Chartered Bank. We got plenty more ahead. This is Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome back. You're watching the China Show. We're looking at some pockets of this equity market across the region. We're sticking with property, at least for now. So a glance at some of the REITs in Seoul. This is after a policy push from authorities to maybe take some steps to cool the property markets. Not a consistent theme and reaction across this, though. Although when you look at this next board coming up, I believe it's all rise for Chinese Shenzhen property stocks specifically. There we go. On the back of the city easing home purchase rules. To be more specific, Shenzhen will remove home purchase restrictions for both local families and those without the hukou, the local household registration, who have paid, at least if you made contributions to your Social Security or individual income taxes for at least a year. That's across 6 districts, and that's playing out across this equity market very quickly. Metal stocks are doing this. And the story there is one that draws a line to the White House and the tariff exemptions as it pertains to, of course, that neck of the woods.
Yep, so certainly that's one to watch, the metals, and of course we're watching the energy players as well. Take a look at when it comes to Brent in the last 2 days or so. So certainly that surprise that you could say what happened over the weekend here. There was some initial reports that OPEC Plus might actually be doing that. But yes, speeding up that return of next year of halted oil production. That's the headline across your terminal here this morning. Let's bring in our Asia energy team leader, Stephen Sapchinsky. So yet again, we're seeing a production boost from OPEC Plus. Can you walk us through the rationale this time around?
Yeah, I mean, I think first off, I want to look at the move itself, but it was certainly like a shock, but no awe. Like, I think when you looked at the analysts' surveys that we did, most weren't expecting OPEC Plus to actually increase output. They were expecting them to keep it steady. Going into next year, when they had initially said they were going to unwind by the end of 2026. Now, the reason, probably twofold, right? One, the official line from them is that they do see some need in the market for more oil. I mean, they do see that increasing it wouldn't have a big enough impact on the market, and in fact, it would be positive for providing the oil for their customers. The second thing, which is more speculative, but something that is viewed in OPEC Plus. They are the largest producer, of course, but at the same time, over the last few years, as they had cut back supply, they had lost some market share to a degree from U.S. shale drillers. Now, as you see prices driven down, you are seeing some of those shale players maybe look at reducing their output. There is a lot more pressure on that incremental supply. You saw Conoco shock again, another shock with the market going to say that they're going to cut their workforce by 20 to 25%, and they're a major U.S. producer. So all those things together, you could say, are reasons why OPEC Plus decided to do this increase. But again, while it was a shock, the awe part wasn't there because it wasn't really that big. There was some expectation. People were hedging their bets that they were going to maybe announce something on Sunday. They love to surprise the market. But at the same time, 137,000 barrels a day is less than what they've been adding to the market in the previous 2 months, and it wasn't a huge amount where you're seeing a collapse in prices. In fact, maybe there's a bit of relief with oil up a bit today.
Yeah, I mean, Goldman actually came out with a note, I believe, and I could be mistaken, I believe before the OPEC Plus announcement came over the weekend, and their thinking was already lower oil prices because of higher supply. And I wonder right now whether we should be operating under the assumption that price range is now shifted even lower as far as the global oil price is concerned.
I think, I think what's actually interesting is that there's the analyst view, which is that we're heading into a pretty large glut for the oil market at the end of this year and into next year, versus view from OPEC Plus that is, hey, demand might be actually a bit more resilient than you think, and we want to add some more barrels to the market. Now, I think that there is an expectation that we will drift lower. Analysts are seeing that, Goldman says we could fall into the $50 range from around $65 for Brent right now. We are maybe at a technical floor, so it might show some resistance where we are at the moment. But as those barrels potentially enter the market, we're going to see the reaction. I think another thing that people are looking at is, yes, OPEC Plus said they're going to raise supply, but what does that actually mean for physical oil on the market? Because OPEC, there are some members of OPEC who are already producing over where they're supposed to. So the increase is more of a technical sort of move by then. It isn't. Some suppliers aren't able to increase at all either. So will they actually add a lot more to the market, or is this just some members playing catch up and others are unable to meet where their targets are? Is yet to be seen. So there is also a view that, yeah, we said 137,000 barrels per day, but will that actually result in more on the ocean?
Stephen Stapczynski, thank you so much, sir, our Asia Energy team leader. Coming up in the next hour, Bloomberg TV, in fact, we'll be hearing from FGE, the chairman emeritus there, Ferdinand Fesheraki, will be joining us to help us understand really. And you know what, every time I read an OPEC Plus story, I still am confused at the very end of that, whether or not more barrels have been added or not. And it's all still very, at least to me, still. And hopefully we get more clarity from Mr. Fesheraki coming through later today. I'm better off there after Stephen Stapp, just to mention that. This is Bloomberg.
Is definitely in the center of it, and we're looking for how do we spend time and which industries do you invest in. Investors becoming more and more digital or AI enabled that actually adds value to economic growth. And this, we think, could be time, because you have a strong hardware power and you have a strong software power, as we see, and it's accelerating significantly. But a very important another element, which is changes in demographics. More AI-enabled softwares and applications may improve the people's lives and actually increase productivity in times where demographics are decreasing everywhere around the world. So this, I would say, is a major theme. So digitalization and AI-related technologies, and we think of it technology, but in reality, a lot of the businesses coming up and claiming to be technologies that are actually cannibalizing a lot of traditional businesses.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Here's some of the stories we're tracking for you this morning. Vietnam's VinFast has launched its first EVs in India. The compact VF6 SUV starts from about $18,000, while the VF7 midsize SUV is priced about $22,000. That's about a third of the price of Tesla's Model Y in India. VinFast says the pricing is introductory and limited to the first 1,500 cars it sells, or until November 30th. China is reportedly preparing to resume its domestic bond market with top Russian energy companies. The Financial Times says Chinese regulators told Russian energy services that they would back plans to issue yuan-denominated panda bonds. If finalized, this would mark the first time a Russian company has raised funds in mainland China since the 2022 invasion of Ukraine.
Oh, well, speaking of bonds here and potential spreads, yuan bonds on your screens, the curve there 2 to the 30, and we're looking at slight steepening. No, we're slightly to the upside, let's put it that way. But yes, we could be slightly steeper if you squint your eyes there. So 2.10%, and again, at 1.8% handle, the 10 yield is one we're tracking very closely. One stock that has been in focus over the last, let's call it, year or so, PopMart. So we're down the most since May. We're down about 7%. So effective today, I believe it's part of the index. It was announced, of course, a few weeks ago. The other thing to note is perhaps on technicals itself, you have to bear with me, the perhaps next level to watch is your 50 DMA, which is currently about 9 Hong Kong dollars below the current price. Let's call it $10 still to the downside before you hit that support level, which also happens to coincide with that level before that massive pop that we got back in on August. I'm just looking at my charts, so bear with me as far as that's concerned. Okay, Cambricon was down substantially late last week, was rallied then on Friday, and as you can see, we're giving back, of course, those gains from Friday. We're down about 6.4%. I guess this is one of the proxies, if you will, across the equity market rally on the onshore space, and Akeso is one stock we've been tracking.
Yeah, so dropping the most in 3 months. There was mixed drug data from the U.S. partner there when it comes to Summit Therapeutics, so stock down some 6%. This is Bloomberg.
Up-to-the-minute news whenever and wherever it happens. I'm Matt Miller, the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
All right, 11:29 a.m. in Tokyo. Japanese markets heading to that lunch break as well. We're continuing to see this rally in the equity market here on the back of what we heard, right? So the Prime Minister Ishiba has announced that he will be resigning. And now we're talking the next thing to watch, which is the leadership test there, and certainly who's going to be the likely contenders to replace the Prime Minister. But equity markets are taken in stride. In fact, they're saying, maybe this is a means of what happens, of what the BOJ might delay that potential rate hike that has been priced into these markets as well. Maybe that's why we are seeing continued strength into this equity market. The yen substantially weaker this morning too, Dave.
Yeah, I mean, the reaction in the equity market is similar to what you typically not all the time get when a CEO steps down and then the stock price of the company moves up. And I think the reason I only mentioned that is our guest earlier on, Michael Chuchek, who joined us out of out of Tokyo earlier on says this is simply the latest iteration of this, what he thinks will remain a revolving door of prime ministers in Japan. So get used to this reality, the fact that, of course, the party don't even have a majority, and they need a coalition there, of course. Right, that's the complication aside. We are looking at an equity market that is doing well. A lot of that is down to what's happening on the back of Japan. And as you can see, of course, as it pertains to tech as a sector, we're moving higher there. We're just coming off highs a little bit on the S&P. We were trading at about 6,500. We're coming off about 4 points. The dollar is stronger. And I can, probably can thank the weak yen for that move up in the U.S. dollar.
Yep. So one thing to watch, of course, when it comes to geopolitics and the like, Brazil is holding a virtual meeting of BRICS leaders later on today. And on the agenda is President Trump's tariffs, but also a bid to rally other emerging markets nations to support multilateralism. Now, BRICS, of course, as we say, stands for Brazil, Russia, India, China, and South Africa. The group accounts for about 40% of the global economy and roughly half of its population. It's doubled in size in 2024 to include the likes of Iran, UAE, Ethiopia, and Egypt. Indonesia as well was also admitted earlier this year.
Yeah, and what does a larger BRICS mean for the world? And also just to also insert there, BRICS and SCO and, do those two things certainly overlap. There's one now supersede the other. In any case, as far as BRICS is concerned, the addition of major fossil fuel producers may then give the bloc more scope to challenge the dollar's dominance when it comes to, transactions for oil, gas, switching to other currencies, certainly a concept referred to as de-dollarization. Now, Beijing is also trying to build an alternative world order to challenge U.S. hegemony as a counter with a lot of fancy words here to the G7. In fact, Chinese President Xi Jinping is slated to address the virtual meeting today.
Yeah, for more, let's bring in Duke Kunshan University's American President and Executive Vice Chancellor John Quelch joining us here and flying into Hong Kong just in time. John, it was great to have you here on the program. Obviously, we've been talking about, this is coming off of a very, pageantry that we saw in Beijing, where there was this SEO, the military parade, and now we're continuing this momentum for BRICS. What are you expecting is going to be kind of the tone and message coming through this kind of virtual meeting?
It's interesting that President Lula has called the virtual meeting because, of course, he and Brazil were not in Tianjin and not in Shanghai, whereas Modi of India was in Tianjin, skipped Shanghai, skipped Beijing, the victory parade, but was in Tianjin for the SCO meeting. So I think there's a little bit of a sense that Brazil does not want to be left out of the equation. The SCO is very much a Belt and Road Initiative, Northern Hemisphere grouping, whereas, of course, BRICS includes Brazil and South Africa. And I think it's important for Brazil in particular to be reasserting itself and reasserting the agenda items that it considers important. So that's why I think they've called the call.
Economically, are you seeing stronger ties? Between China and the likes of Brazil, for example, in terms of the U.S. pushing these guys all together?
Certainly in terms of agricultural commodities, Brazil has been in a sense, a godsend to China, with soybean sales having pretty much collapsed out of the U.S. and Brazil taking up the slack. And I think that has been reciprocated in terms of the level of trade interaction and investment interaction we see between China and Brazil. But Brazil has to be quite careful here in terms of balancing its outreach to China, but at the same time keeping a good relationship as much as it can with the United States, though, of course, we currently have the Bolsonaro trial about to begin in Brazil, and Washington has made a few moves against the judges associated with the Brazilian Supreme Court in terms of visa restrictions, and that has not gone over very well in Brasilia.
How much further can we see a deepening of ties then within the BRICS when of course we talk about the political divisions among the BRICS themselves?
Yes. So To the extent that President Trump and Washington tariff policy is kind of inflaming emotional reaction on the part of the BRICS nations and the global south in general, that of course is giving them something to collaboratively fight against. Yeah. On the other hand, as you correctly point out, there are very, very many differences of opinion and divisions among the BRICS nations. You know, take India and China, for example. Despite a sort of 5-minute rapprochement in Tianjin, you know, there is a long-standing difficulty between India and China.
So is it just optics, you think? That, or do you think what we've seen in the last week or so is an inflection point in what China and Xi Jinping has wanted, is this shift in the global world order?
Well, I think President Xi and Beijing orchestrated the Tianjin event, the SCO event, as well as the 80th anniversary event extremely well. And so to say it's an inflection point, I don't think is true, because frankly, real politics and real economics are going to come into play here, and there's a balancing act going on in every capital city of every BRICS or affiliated nation at the moment, where they have to try and cope with the U.S. situation, the level of indecision and flip-flopping that we occasionally see, versus at the same time the new reality of China's increasing importance in the global economy. So how to balance those two forces is something that every leader of every significant global South country is wrestling with.
And they're business leaders, to your point. This eventually goes back to real economics, right? Businesses value predictability. I think at some point this morning we're getting the August trade numbers out of China. The reason I bring that up is I understand you were recently in one place in China that does specialize, XAUUSD, right, which does specialize in making things basically for the world to purchase. And I remember covering that city, and it used to be known, I'm not sure if it still is, but you know, the Christmas capital of the world. That's where the gifts are mostly manufactured. What have you seen on the ground? Have businesses there shifted to BRICS, SCO, Belt and Road, whatever you want to call it, of course?
So XAUUSD is totally different now from what you just described. It's way beyond Christmas ornaments. It's industrial products. It's robots. It's everything that you can imagine. Durable goods, consumables, trinkets, very small percentage now of the total throughput at XAUUSD. Number two, around about 80,000 merchants in XAUUSD in the 7 trade centers that they have there. There are 10,000 foreign buyers resident in XAUUSD, apart from 600,000 foreign visitors a year coming in.
Wow.
I talked to 6 or 7 merchants in XAUUSD, small store owners in the marts, and what they told me was, as far as the U.S. is concerned, not really having much of an effect, the tariffs not having much of an effect on them, because, you know, a couple of years ago, these very agile merchants already pivoted to BRI, Belt and Road Initiative countries, Global South, other markets, and so the highest percentage that I could uncover among any of the merchants in terms of U.S. sales out of their particular operation was 10% still going to the U.S. And this was from a store which is essentially selling high-end product to higher-end product to the likes of Target and Disney.
I was going to get your take on what you're seeing in the higher education side of things.
Yeah.
Duke Kunshan, of course, this is a joint venture between Duke University and Wuhan. What have you been seeing in terms of student enrollments, and maybe international sort of student interest?
So our enrollments this semester were very, very high, higher than we expected. We had a over-enrollment maybe around about 20% among international students accepting our offers ahead of what we expected. And this we attribute to the fact that Global South applicants who might have applied to the U.S. universities as well as to us ended up coming to us because of visa uncertainties, post-graduation employment uncertainties in the U.S. and the general climate of perhaps a less than safe environment for foreign students in the U.S. university campuses.
Do you get a sense that that's simply for this year? Is this an opportunity for the school to then be able to corner this part of the market that, you know, clearly has revisited this option and is now taking advantage of it?
Yeah, so obviously from our point of view, we're developing a truly international university. From our point of view, those students who have come to us this year are going to be the ambassadors for the next intake next year, and so we hope they'll all go back to their school counselors and their classmates 1 year behind and say, this is a great option, you should come to Duke Kunshan.
There we go. Yeah, and Professor Quelch there will be welcoming you, of course, if you... there we go. Duke Kunshan University Executive Vice Chancellor John Quelch there. We're hearing now, by the way, that, and just speaking of, the virtual BRICS Summit will begin, what time is it now? 10:40, 8 p.m. Hong Kong time. So that's more than a couple of hours away, but yeah, stay tuned for that, of course, and that's according to a government official out of Brazil.
Yeah, if you're a subscriber, of course, you can rewatch that interview or so watch everything we've been talking about on the show here on an interactive TV function, TV Go. You can become part of this conversation, send instant messages, questions for our guests throughout the shows. Check it out at TV Go.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Okay, we're checking FX here this morning, and certainly the yen has been weakening here on the back of what we've been seeing, the political turmoil that's happening in Japan. But really, there's a lot going on, whether it's in Thailand here, the new leader taking office after the king's endorsement. Also, when it comes to that confidence vote in France, it's happening a little bit later on as well. So euro-dollar is hovering around that 117 level here this morning. So we're watching multiple movements in several capitals this morning. As we've been discussing, Japanese Prime Minister Shigeru Ishiba is stepping down and paving the way for the election of a new leader. And in Thailand, conservative Anutin Charnvirakul has been taken office as the country's third prime minister since 2023. Meanwhile, as you say, Prime Minister Francois Bayrou is set to lose his premiership in a confidence vote in Parliament on Monday.
Okay, on those three stories, the spring in our team, our coverage of these three. Joining us now is our Japan politics and economics reporter Sakura Murakami. Out of Tokyo, out of Bangkok is Patpicha Tanaka-Simpipat, and here in Hong Kong is our senior news desk editor Balaz Pence to talk us through the European angle to this. Sakura, I'll start with you in Tokyo. Well, for those that perhaps might have missed it, why did he step down, Prime Minister Ishiba?
So things weren't looking great for Ishiba initially. He had some very bad election results recently, and there was momentum within the party to see him stand down. And that kind of came to a head over the weekend when surveys were showing that a lot of people in the LDP wanted to see an early race, and he was kind of losing the confidence in his party. So he announced yesterday evening, that he would stand down.
Okay, everyone's talking about successors. Who are going to be the top contenders to really watch out for to replace him?
So there have been some people there have been reports of some people planning to actually throw the hats in the ring for the leadership race. So far, Toshimitsu Motegi has actually announced his intention to run as a possible successor. But the main focus is on Sanae Takaichi and Koizumi Shinjiro. And so they bring very different things to the party. Takaichi is kind of appeals to the right-wing voter. She's more of a fiscal stimulus kind of person. She would be the Japan's first female prime minister if she's elected. So she brings that to the table, whereas Koizumi brings more of a fresh energy to the LDP. He's very young, he's 44, he's the son of a reformist former Prime Minister Joichiro Koizumi, so he brings this kind of rebranding, a kind of fresh energy to the party.
All right, Sakura, thank you. On the latest on Japan here, our politics and economics reporter, Sakura Murakami. Let's bring in Papicha now in Bangkok, where investors are watching the cabinet picks made by the new PM. Papicha, tell us a little bit more about what can we expect from the cabinet formation.
Yvonne, after Anutin was voted Prime Minister on Friday, he has made quick moves to form his new cabinet. So far, he said that the lineup is nearly finalized, so we should be able to expect to see the full list within the coming days. What we know so far is that Anutin will double as Interior Minister, which is a key position seen as important to securing success for the next election. He has also tapped a few technocrats for key government positions, such as Ministers of Finance, Foreign Affairs, and Energy. Anutin said that he needed these experts outside of politics to be brought in so that his government can hit the ground running, considering that he has only pledged to stay in power for only 4 months as part of a deal with the People's Party, the largest bloc in parliament that voted in support for his premiership last week.
Do these appointments tell us anything, Papicha, about the priorities over the next 4 months? Call it quite short, of course.
Sure, David. Anutin said over the weekend that his priorities are going to be short-term focus because he's only staying for 4 months. At the top of his list is economic issues. He said that he plans to reduce high costs of living, including energy and transportation costs, and also tackle household debts of farmers and low-income households. And also he plans to take steps to peacefully resolve the Thai-Cambodian border crisis without losing any more lives or compromising Thailand's sovereignty. And in the speech yesterday, he also reiterated his promises to the People's Party, which helped him secure the premiership, that he will dissolve the House of Representatives within 4 months and call new elections, as well as hold a national referendum to amend the constitution before he goes.
Right, Papicha Tanaka-Sampipat there in Bangkok for us on the latest on the Thailand front. The other big front, of course, is in Europe, and it's going to get fairly busy these next 48 hours or so, certainly in France, where you look at the Prime Minister there, could lose his job in a confidence vote. I believe it's later Monday. Let's bring in a news desk editor. Balazs Pence is here with us to talk us through there. Yeah, so what are we watching in France today?
Well, it looks like there might be some sort of a resolution to this episode in what's become the annual French political crisis. It looks likely that François Bayrou will lose his job, but that's only the beginning, and what comes next could be even more calamitous for French assets. President Macron has a few options in front of him, and none of them promise a quick resolution, as the underlying issues remain, which are a fractured parliament and a rising debt, a rising budget deficit, which needs to be addressed, and that's what Bayrou has ultimately been unable to do. So whatever Macron chooses to do next, whoever the next prime minister is, he or she will need to contend with the exact same forces. The other option for Macron would be to call an early election, which would threaten to strengthen the far right, which would threaten to even shrink his own constituency even more. So that might be even more unpalatable for the president.
Okay, the UK is also going through quite a bit as well. I mean, there's this wide-ranging reshuffling of the government, and the prime minister there is really kind of changing up the narrative. He tries to, at least. What's next there?
Well, Keir Starmer is doing the classic politician's gambit. He's trying to turn a moment of weakness into a moment of strength. He has to respond to the resignation of the deputy prime minister, and is trying to rebrand this as sort of the phase two, the next phase of his government. So what he's trying to do is he's trying to focus on the two issues that have really propelled his main challenger, the Reform Party, immigration and the economy. But at the same time, he will also have to watch his back, because there will be an election within his own party for the deputy leadership position, and some people think that might be a beauty contest for somebody who might eventually replace him.
Okay, Balazs, thank you. Balazs Pens there, our senior news desk editor, on what to expect when Europe wakes up here this morning as well. And of course, the political turmoil in France adds to really the list of risks for your week ahead here, when the ECB also meets on Thursday. And there's a growing amount of people, economists, Dave, that are expecting that they're going to have to stay on hold, just given the political crises that we're seeing in France, for example, as well.
Yeah, we're waiting to hear as well from what Madame Lagarde, if she will discuss this at length and elaborate really what the ECB stance is, particularly as you look at maybe the iteration of this in markets and how this affects it really melts up in longer dated bond yields, right? Apart from this, when you look at the Chinese market, at some point this morning, if not soon, we'll see. Trade numbers are set to come out for August, and then the midweek session is arguably, in my opinion, perhaps the bigger one there as far as the CPI print inflation numbers coming through out of China is concerned. In fact, Goldman Sachs put out this note on the weekend, a 3 things on China note that they put out, and basically said the anti-involution conversation might actually lead to the first month-on-month increase as far as that's concerned. Plenty more ahead. This is Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back. Before we wrap up the China show today, and before we sort of fade into the background, just a look at some of the big movers, and certainly not an exclusive list. There's a long list of sector movers today. We're starting things off, as you can see, in robotic stocks related there. So as you can see, we're on the up. This putting down to the release of this Tesla robot as a catalyst as far as that's concerned. Horizon Robotics, of course, has been very much in focus, not just because of today, but certainly the broader trends as far as the developments are concerned. Right, point number one. Point number two, PopMart down the most since April. And in fact, this is perhaps on a day when it is getting included on the Hang Seng Index, was announced a few weeks ago. Plus, of course, broadly speaking, some of the big winners have been feeling the pressure to the downside. I think the 50-day moving average might be very much in focus. I think that's coming up on your screens very shortly. What that level is, it's a 275, I believe. There we go. Is it 275.63? That should be it.
Yeah,
there we go. Thank you.
The short sell turnover also spiked to a record level on Friday, mind you, as well.
Okay.
Some of these sort of darlings in this market are certainly coming off. You could say that about Cambricon here as well this morning. But yes, HSI is looking like this right now. And yes, it looks like we're going to be heading to Typhoon 3 soon. It looks to be lowered at about 1:10 p.m. Hong Kong time. Hang Seng market flat this morning. This is Bloomberg.
Break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. It is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderation to that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
In my opinion, at least, the reason that the U.S. is so creative and innovative and has so much interesting development and has, most of the largest trillion-dollar businesses is because we have the best capital markets. And capital market development is really what creates the funding in order to pursue ideas. So in America, any idea you have, there's a market for it. Right? So building markets like the securitization markets in the U.S., really allowed for non-financial companies to get into the financial industry business. And that was really a derivative of making the securitization market so competitive. So building securitization markets and continuing to grow markets and figuring out how to continuously fund ideas, I think that's going to be the next stage of growth for these markets.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
Decided to step down as the leader of the Liberal Democratic Party, with the hope that the next administration will fulfill the duty and its responsibility to the people. I would like to pass the baton to the next leader.
No, I was surprised because I knew him, I liked him, and he's just now stepping down. A little bit surprised. I found him to be a very nice man, actually. We dealt very well together.
President Trump says he is surprised by Japanese Prime Minister Ishiba's decision to call it quits just after striking a trade deal. Live from Singapore, this is Inside with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. Ishiba's resignation leaves Japanese markets adrift and heightens investor uncertainty. JP Morgan Securities Chief Japan Equity Strategist Ria Nishihara will join us on why she thinks things can only get better from here. As OPEC Plus defies doomsayers with another oil production boost, we drill deeper into the reasons for the cartel's confidence with veteran analyst Feridun Fesharaki.
In a month or 2 months, I think India is going to be at the table, and they're going to say they're sorry, and they're going to try to make a deal with Donald Trump.
And we'll ask India's chief economic advisor whether the 50% tariffs will have a dire enough impact on the Indian economy that will force the country to apologize to Trump. Our top story, Japanese Prime Minister Shigeru Ishiba announcing his departure after weeks of calls for him to resign. Ishiba's short tenure was marred by a series of election disappointments that saw the ruling Liberal Democratic Party lose majorities in both houses. Markets are left in limbo as investors weigh the next leader's fiscal spending plans and implications for the Bank of Japan's rate path. Japanese markets are out for lunch at the moment, but here's a look at the trading in the yen and futures ahead of the reopen later. We've also been hearing from our guests on Bloomberg TV today with their views on the situation. Have a listen.
There's, I think, a profound sense that the party is completely out of touch with voters.
I'm looking at a bunch of weak prime ministerships continuing on into the future.
Prime Minister Ishiba, who's now stepping down, one of his sort of signature achievements, I think, while he's been in office, was his astute management of relations with the opposition. And whoever the party selects now to replace him is probably going to have to draw on that expertise.
There's going to be a lot of expectations about economic stimulus going forward. Watch out for sectors like industrials, part consumer discretionary. All of those will likely see some choppiness over the next month or so as, investors brace for the next month.
Let's discuss the impact of Japan's political uncertainty on markets with Bloomberg politics and economics reporter Sakura Murakami in Tokyo. Also joining us, Rie Nishihara, Chief Japan Equity Strategist at JP Morgan Securities. Rie was a former Bank of Japan official and also studied under Governor Kazuo Ueda. Sakura, let's start with you. Give us a sense of where we are right now. We know that Ishiba's resignation was expected. It is the timing. It came sooner than most people anticipated.
Yes, Prime Minister Ishiba over the weekend found that there was growing support within the LDP to see him stand down. And I think we can say that basically he just felt that he didn't have the support that he needed in the party to kind of continue over the next few months. So that's why he probably decided to stand down last night. And we're going to see more momentum over the coming weeks over who to pick for the successor, and that also speaks to how the LDP wants to reinvent itself. It's seen dismal election results, part of the reason that Ishiba did stand down, and it's going to have to find a way to reconnect with voters, to reconnect with the public. And so there's going to be more cues and kind of more signs as to how the LDP plans to rebrand itself over the next few weeks.
Rie, in terms of market reaction, how are you assessing it?
Yes, yen gets a bit cheaper, and yields get a bit higher. I think the focus going forward will be who will be the successor, and there will be several main candidates, and one of them are calling for Abenomics, more expansionary fiscal policy and monetary easing. So market has to price in with a certain probability of that. So market reaction is that direction as of today.
Well, I guess key to markets would be what the next premier stands for, and also BOJ normalization. What happens now, given the uncertainty that's possibly on hold for the rest of the year at least?
I think within 1 month, first, the LDP presidential elections will be held. Now, according to the media reports, October 4 will likely to be that date. So on that date, the new prime minister or the LDP president will be elected, and then prime minister to be confirmed. And with this new cabinet, how will be the relationship with the cabinet and the BOJ? It will be the focus. But I think. As I said, depending on the cabinet, depending on who will be the successor of the prime minister, the market expectation of the monetary policy and the physical policies will be different. Now, among that contenders who will likely to be the successor of the Ishiba, Prime Minister Ishiba, now, as I said, Ms. Sanae Takaichi, who is former national security minister, is seen may call for monetary easing or more expansionary physical policies. So in a case of that, under those scenarios, the market may think there will not be no chance for the Bank of Japan to hike rates. But I think it is too early to think about that this scenario will be most likely or not. So the market will wait to the election and also to listen to the candidates' policies.
And when it comes to candidates, Sakura, it's not just Takaichi, there's Motegi, there's Koizumi. Talk to us about the front runners.
Yeah, as you mentioned, Motegi's already thrown his hat into the ring. He's announced his intention to run for the leadership. But the main focus will probably be Takaichi and Koizumi for a while. Takaichi came in second in the previous leadership race, and Koizumi came in third. And they bring two very different things. They bring different things to the table for the LDP. For Takaichi, as Rie mentioned just now, she's more of a fiscal expansionist. She's seen as Abe protege of former Prime Minister Abe. She'll probably appeal to right-wing voters and to the more conservative factions of the party, whereas Koizumi is seen as more of a reformist. He's the son of also reformist former Prime Minister Junichiro Koizumi. He's 44, young, fresh-faced, very media savvy. So they bring two very different things to the table. It'll be up to the LDP to choose which of these leaders, or possibly someone else as well, but who can rebrand the party, who can really guide the party to another future election victory.
And Rie, of course, markets are keeping an eye on the yen in particular. We saw the yen weakening on the back of the news, but some say perhaps yen weakness is limited given what the Fed is likely to do, 50 basis point cut possibly on the table, and that could be,
Mm-hmm.
that could put limit to yen weakness going forward.
Yes, exactly. As you say, now the yen faces two different forces. One is the U.S.-Japan rate differential is now becoming smaller. The now Fed rate cut cycle to start, and a BOJ rate hike probably either in October or in January next year starts. But regardless of that, usually yen appreciation is expected outcome. But this time, one of the reasons who slow down this yen appreciation pressure is this situation in politics. As you said, a part of this probability where that market expect further yen depreciation and higher JGB yields, I think that slow down the yen appreciation pressure. And another issue is U.S.-Japan negotiations, 550 billion USDs. Japan investment to America fund, which is very large scale, and also individual corporates such as Toyota or SoftBank commit to invest in the U.S. So that's demand-supply relationship will also slow down the yen appreciation at this point.
Rie, you'd imagine that given the weak yen, lower oil prices, Japanese stocks are attractive.
Yes. So what I was thinking about is now Fed rate cut cycle is going to start, and then but in history, when Fed rate cut cycle starts, yen appreciation pressure is also come together. But this time, yen appreciation will be very slow, will be manageable. That big macro pictures, Japan equity market is seen, getting a following. So that is a reason the strong Japan markets recently.
Rie Nishihara of Japan, JP Morgan Securities, and Sakura Murakami of Bloomberg News. Thank you so much for your insights today. Just some breaking news to tell you about. This has to do with the much anticipated China August trade data. China August exports in USD terms rising 4.4% year on year. That's below estimates of 5.5%. Remember, the export has been quite a bright spark for China. Exports in USD terms rising 4.4% versus estimates of 5.5% in August, and that's according to the Customs General Administration. Estimates that range from a positive 3% to 7.6%, according to 22 economists. Imports in USD terms rising 1.3% year on year. The estimate was 3.4%. So on balance, weaker than expected trade numbers out of China. Well, still to come, OPEC Plus pushing ahead with more oil production at its latest meeting on Sunday. We'll have analysis with FGE next and ECA Chairman Emeritus Feridun Fesharaki. Keep it here with us. This is Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Welcome back. You're watching Insight. We're keeping an eye on oil prices after OPEC Plus announced an agreement for a modest production boost in October. The group says it would restart 137,000 barrels a day of output, defying warnings from Wall Street that the move risks compounding a supply glut. This signals that the alliance is firmly committed to reclaiming the oil market share ceded in recent years to rivals like U.S. shale drillers. Let's discuss the outlook for energy markets with Feridun Fesharaki, Chairman Emeritus at FGE Nexen ECA, an international energy consultancy. Dr. Fesharaki is well recognized worldwide for pioneering oil and gas market analysis and studies of the Asia-Pac and Middle East energy market since the early 1980s. Feridun, good to have you with us. When you take a look at oil prices today, they're actually higher. So OPEC is probably right. It's still a very tight market.
Yes, OPEC is right that the market had expected a bigger unwind, and 137,000 barrels per day is too small. And I think OPEC is going to look at this, and if they find that there is no impact on the market, they might double or triple, as they did last time. So they would increase the level of unwind. But the inventories are still tight. 2 million barrels per day. Nobody believes. Until you actually see inventories building up, then there will be no impact on the prices.
Well, the goal for OPEC is actually to regain its market share of 30%. It's close to that right now. It is hovering at about 27%. Do you see OPEC continue raising production at every meeting from here?
Well, this recent agreement means that from now until next October, they will unwind. And if they think the market can take it, they will unwind even more. The question really is that once they get to a 2 million barrels per day surplus capacity, if they go anything below 2 million barrels per day, the market becomes very unstable and jittery. So actually, once they do this unwind, it is the end of the unwind process, because beyond that, creates instability to the markets.
So basically, what we're saying is that the market has enough demand to absorb all the unwinding of OPEC members. I'm just wondering, we've heard from Trump himself saying that he wants prices to get below 60. Is that a possibility given what we're seeing right now?
Yes, I think that's a serious possibility. End of the year or first quarter of next year, that this can happen. And then as inventories will tell us when. But I would say below 60, the first quarter of next year is possible. Mid-50s is definitely possible. And then that would have a big impact on the U.S. shale production. So the supply side will go down which gives a boost to the prices also. So these things are interactive, but we have not seen the real impact of this unwinding as yet.
What assumptions are you making about demand from China? Today we just had its trade data, weaker than expected.
Less than 100,000 barrels per day is nothing. And gradually, by 27, 28, it'll go to zero. 28, it'll go to zero. So the Chinese story already clear. And it is interesting that somehow the Chinese demand peak and the U.S. production peak happens about the same time. There is a message that something really very big is happening in the markets.
How about in terms of the peak for the rest of the world? Some say perhaps it would peak in 2026.
No, the rest of the world, I am sure it won't peak before early 2030s. But for Asia, outside of China, the peak is 2040. So there's a lot more demand in Asia which can come in. And Asia would be still the engine of the growth worldwide.
The Europeans are imposing a new cap on Russian oil. What impact will that have?
Well, it's it doesn't really work. It never worked before. It doesn't work now. It just creates inconvenience and makes the dark fleet even more profitable. So that's all there is. The cost of transportation goes up, but the dark fleet still has a spare capacity. So my guess is that it can be accommodated. But countries like India, they receive the oil in delivered basis. So to some extent, it doesn't matter really who delivers it, as long as it meets all the regulations for shipping, safety, and so forth, then it can be delivered. But does it make any difference? The Russian oil will flow as much as before. We see no decline in Russian oil production or exports.
In fact, we're seeing a record in terms of Russian oil production.
Absolutely. The Russian oil production is at its highest numbers that we've seen for a long, long time. And now with unwinding, the Russians can produce more because they are part of the unwinding process. So actually, it makes no difference. So we go back to the old story that oil market is like a swimming pool. If you take one bucket from one side to another side, still the same pool. All the oil flows. And sanctions don't work.
And I'm just wondering where the U.S. stands in terms of this new cap on Russian oil. It's yet to give the okay. What do you see the U.S. doing?
I think eventually they will give the okay. The $47.60 number is just plucked out of the air. And $46.60 for crude oil, but the cap on gasoline and diesel is $100. Makes no sense. Whoever designed this kind of thing doesn't know ABC about the oil markets.
Is there capacity for India to buy even more oil from Russia? It has said that even with the cap, it will continue to buy Russian oil. How much more do you think India can?
I think India will not buy more. And in fact, I am sure that for October, imports of Russian oil into India will drop by 250,000 barrels per day. So there will be less buying. So I think that the levels that they have been recently, pretty much the peak.
What are some of the trends that you're looking at to, I guess, to view the trajectory of oil prices from here?
I think we are going to look at a slow decline. And again, it depends how fast they unwind. But as the inventories build by the end of the year, of early first quarter, there will be some weakness. But to get them below 60 is not so easy. That's what Trump wants. And that is what I think OPEC Plus is also resigned to. But the prices are very resistant to going down. And every time they announce bad news, the price goes up.
So what would it take to get prices below 60, as Trump is quite determined to get it there?
Well, what it needs is a much weaker demand than we have and a much bigger, faster unwind than we have. It can happen. And I think it will happen by the first quarter of next year. But it is, the markets are strong. The market is basically fighting back, says, I don't want to go down.
But Feridun, when you take a look at Asian economies in particular, we're already seeing slower growth with the political turmoil in countries like, Indonesia, as well as Thailand, for instance. That may weigh on growth even more. Might that then mean, demand for oil gets dented?
I think it does. Actually, there is something else that you didn't mention, but very important, that now, this year, 50% of the global oil demand growth is biofuels. And so biofuels take a bigger and bigger chunk. So oil-based demand is much, much smaller than the numbers that are the headline numbers. So gradually biofuels, which are mandated, not because of economic, because of mandates, they eat into it. So it becomes weaker and weaker and weaker. And that's why the oil demand peaks by the early 2030s. But still we have 3, 4, maybe maximum 5 million barrels per day more demand to create before we peak. So it's still ways to go. But by 32, 33, I think we are at the levels which impact us.
So oil prices by the end of this year and by the end of next year, what would your predictions be?
I think by the end of this year, maybe 62, 63. By the end of next year, 58, 57.
All right, Feridun Fisharaki, always a pleasure to have you with us today. Feridun Fisharaki, Chairman Emeritus at Nexen ECA. Still to come, we speak exclusively with India's Chief Economic Advisor, V. Ananda Nageswaran, after officials cut the sales tax in a bid to support the economy against President Trump's tariffs. Keep it here with us. This is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Welcome back. You're watching Insight. India is proceeding with caution after President Trump appeared to soften his tone against the South Asian nation. Trump on Friday downplayed tensions with New Delhi, even after the U.S. pushed forward with a 50% tariff on many goods from the country.
Well, I'll always be friends with Modi. He's great. Prime Minister, he's great. I'll always be friends, but I just don't like what he's doing at this particular moment. But India and the United States have a special relationship. There's nothing to worry about. We just have moments on occasion.
Prime Minister Narendra Modi, for his part, says he deeply appreciated and reciprocated the sentiments. For more on this, let's bring in our India trade and economy reporter, Shruti Srivastava in New Delhi. Shruti, put this in perspective for us. Friends again?
Well, you know, too much has moved, I think, too soon in the last 1 week. We saw Trump officials, his trade advisor, Navarro, Commerce Secretary, Mr. Lutnick, them ratcheting up tensions with India, saying that India's continued purchase of Russian oil was funding. It continued to fund the Putin's war in Ukraine. However, you know, Trump's somewhat positive comments on U.S. ties with India, it seems to signify some sort of, you know, thawing of chill that had set in between the relationship between the two nations after weeks of tensions. So difficult to say if it's actually a clear signal on thaw, but yes, some positive development for sure.
Is it enough for talks to actually resume? An indication of when that might happen?
Well, again, you know, India is treading with cautions on the comments which have been made by Trump, though Modi was quick to seize the moment and, you know, immediately put out on social media that he welcomes and India reciprocates the comments made by Trump. But India is treading cautiously. You know, in his post on X, Modi did not, unlike in the past, Modi did not call Trump his friend. There is this feeling among Indian officials that the comments from Trump's side come, you know, after that picture of three leaders, Putin, Xi, and Modi holding hands, hugging. So I think that was what the thawing that picture caused some sort of concern among the U.S. administration, and hence the comments. But I don't think so. There is going to be any significant movement on the trade front unless and until there is something tangible that comes from both the sides. So I guess very difficult to say right now if the trade talks would resume anytime soon. They have remained stalled when the U.S. team, which was supposed to come to India for trade talks, it cancelled its visit. Since then, the two sides have not resumed trade talks, and there is no clarity on when the resumption will begin.
Shruti, thank you so much for that. India trade and economy reporter Shruti Srivastava joining us from New Delhi. Meanwhile, U.S. Commerce Secretary Howard Lutnick took a swipe at India during a recent interview on Bloomberg Television. With formal talks between the two nations currently on pause, Lutnick tells us he expects India will eventually apologize and come back to the table seeking a deal.
It seems like there's been a hardening of the line, both with President Trump as well as Modi, and a sense that there isn't really a coming together. In fact, that meeting with Xi Jinping and Vladimir Putin and Prime Minister Modi seemed to indicate a coalescing of the BRICS. Do you see anywhere in the next month, 2 months, any type of deal or backing down to a lower rate with India?
I would expect, like you saw it in Canada, right? The Carney got elected with this term elbows up, meaning let's fight with America. They put on retaliatory tariffs. They were all bravado. And what happened? Their GDP negative 1.6%, unemployment rocketing towards 8%. And what did Carney just do? He just finally finally dropped his retaliatory tariffs. So I think what happens is it's all bravado because you think it feels good to fight with the biggest client in the world. But eventually, your businesses are going to say, you've got to stop this and go make your deal with America. So I think, yes, in a month or 2 months, I think India is going to be at the table, and they're going to say they're sorry, and they're going to try to make a deal with Donald Trump, and it will be on Donald Trump's desk how he wants to deal with Modi, and we leave that to him. That's why he's the president.
Well, last week, India lowered nationwide consumption tax as policymakers step up efforts to boost local demand in an economy buffeted by steep tariffs imposed by the U.S. Joining us exclusively now is V. Ananda Nageswaran, India's chief economic advisor. Van, good to have you with us. First off, your reaction to Lutnick. He says in 2 to 3 months, India will say sorry and come to the negotiating table.
Well, I'm not going to react to his remarks directly. Of course, the Indian Commerce Minister said conversations were going on and that he does expect something to materialize by November. So I think that is the best possible reaction that the Indian Commerce Ministry, which deals with these matters, has put out. So I suppose that's the response to Commerce Secretary's remarks.
Give us some clarity. Trump also came out to say that India has offered to remove tariffs on U.S. goods. Can you confirm that?
No, I can't confirm or deny that. As I said, Commerce Ministry is the nodal ministry, and I think they are the people who are spearheading the negotiations with the U.S. side. And so whatever they say is the final word on this matter. I have nothing to add, Haslinda.
The final word on the matter right now is tariff stands at 50%. How much will that weigh on India's economy?
I'm sure it is weighing on export prospects right now. And I have mentioned this, that the second fiscal quarter in India, which is basically July to September, and also to some extent, the coming quarters will reflect that impact in terms of production, in terms of export numbers, etc. I've also said that my hope is that the tariffs, the additional penal tariff is a short-lived phenomenon. I hope so. And if that is the case, then the impact will be contained inside the current fiscal year. And that impact, depending on how long it lasts, even in this current financial year, it may translate into a GDP impact of somewhere between 0.5 to 0.6%. However, if it continues into the next financial year and we feel the impact fully in the full financial year, then the impact will be larger. We should remember that there was some front-loading of exports in the first 3 to 4 months of the current financial year, which began in April. And August also saw some good export growth. So half of the usual exports that go to the U.S. in terms of goods have taken place in the first 5 months of the current financial year. Yes, there will be efforts made to find other markets. And there are also silver linings for India. And I will probably mention that later. The oil price is well behaved. The GST tax reduction is now going to take effect from September 22. So the final impact may be somewhere closer to 0.5% rather than north of that.
The thing is, not everybody shares that view, Van. I mean, we've had some economists, projecting that India's economy could grow as low as 5.8%. What would it take for you to reassess the number that you have right now?
As I said, we have 6.3 to 6.8 as the range for our GDP number. And we said we will not remove this range at this point after a very good first quarter. And also the second quarter until August, the domestic economic variables were showing pretty good momentum. If, as I said, as I hoped, that this tariff impasse is not short-lived and turns out to persist well into the new calendar year in 2026, then we will review this. At this stage, I would still stick to the fact that when I say 0.5 to 0.6% impact with the midpoint of 6.5 in my range, it is not too far away from what some private sector economists are putting out. But, we should also remember that the consensus widely underestimated the first quarter GDP figures.
The GST Texas and the cuts which are coming, I'm just wondering how much of a buffer will that provide the economy?
So in the current financial year, I think it will bump up the GDP by somewhere between 0.2 to 0.3%. And the full effect may be felt in the next financial year, and that indeed is a very important buffer. So this rate rationalization has been a fairly significant and profound exercise. And on top of the fact that overall inflation has already been very well behaved. Food prices have been lower. So, and if you remember, we have a direct tax cut provided in the budget in February. So you are looking at three important tailwinds for consumption, spending, disposable income, etc. Direct tax cut, indirect taxes, and an extremely well-behaved food inflation. These things can actually shore up the domestic consumption quite significantly, offsetting the export drag that is likely to come from the tariff that the U.S. has imposed on Indian goods.
The thing is, the bond market is pretty much on edge. We saw how yields surged because they're concerned about the fiscal position of India. I mean, what can you say to allay those concerns?
Absolutely, Haslinda. I think you should remember two things. The bond market reaction in India was also in keeping with the pickup in bond yields at the very long end in different Western nations, G7 countries as well. That is point number one. Point number two, the Indian bond market yields have softened since then. The 10-year went to as high as 6.6, and if I'm not mistaken, as we speak, it is closer to 6.47 as you are showing on the screen right now. So there has been a pullback in the bond yields spike. And again, remember, we promised to bring down the fiscal deficit to GDP ratio by more than half from 2021 level of 9.2%. And we have done that. And we are quite committed to ensuring that fiscal prudence and fiscal stability remain the pillars of our macroeconomic performance in this financial year as well. So we are very confident of being able to meet the deficit target of 4.4% of GDP.
But Van, revenue growth has been weak. Some say that, you can only imagine India will have to issue more bonds to support the spending that it wants. Will it? Will it have to?
Well, non-tax receipts have held up very well, and I think in the recent interview post-GST, the Honorable Finance Minister has spoken about privatization, disinvestment targets, etc., and a momentum being imparted to asset monetization and so on. And there is also room for taking a look at some of the expenditure items, etc. So I think in line with the good receipts and dividends we have seen from the central bank, etc., I think overall we are confident that there will be revenue compensation coming in from non-tax sources, and with expenditure also being closely monitored, etc., with the recent technological improvements actually enabling the government to do very, very tight and efficient cash management. We are confident that we will be able to avoid major slippages in the fiscal deficit target and be close to the 4.4% of GDP, if not at 4.4% itself in the current financial year.
We're seeing warming relations between India and China. We're seeing perhaps the resumption of direct flights, easing of visa restrictions. How should one look at developments in relations between the two countries?
Well, I mean, these normalization efforts, as the Ministry of External Affairs has been saying, have been in the works since last year when the Prime Minister and the President of China met on the sidelines of the BRICS summit in Kazan. So I think this is part of the normalization after what happened in Galwan in 2020.
What could be the next steps in terms of easing investments? What can be expected?
Well, I think the government is considering that. I think it will be premature to speculate on that. There have been several reports in the media. I've also been following that, but I think it will be premature to speculate on what they would be in public. And it won't be a good thing to speculate on what those measures would be in public at this stage.
Van, you've expressed confidence in India's economy. I'm just wondering what you view as the biggest risk for it right now.
Well, sure. I mean, the biggest risk is the tariff uncertainty and the tariff impasse lasting longer than what I hope that they would last, and continuing into the next financial year, and that having impact on sentiment overall, leading to private sector pulling back on capital formation and employment generation, etc., offsetting the very positive impacts coming from the direct and indirect tax relief, etc. So that is the most important risk that we see. But otherwise, we have a lot of things going for the Indian economy domestically. We have had a great monsoon. We have had a very high disposable income in the hands of the public. Oil prices are well behaved. The government is implementing reforms. There is a lot of momentum and trust on deregulation, both in the union government and in the state government level. So the external uncertainties have indeed imparted a dynamism in the domestic economy in terms of both growth, economic activity, and reforms. They will offset some of this drag, but I think it's important to ensure that the current impasse gets resolved soon, and India can actually look at a growth prospect of more than 7% in the next financial year.
So given the optimism you have in India's economy, no need for India to say sorry to the U.S., Van?
I'm not going to comment on that one, Haslinda. I'll leave it to the diplomats to take care of that, yeah.
We know that the framework for inflation targeting is up for review in March, and you have said before that, the volatile food inflation should not be included in that. Do you still share that sentiment? Do you still hold that view?
Well, I mean, we from a conceptual perspective, in general, any agency has to be given the responsibility to achieve a target over which it has control. Definitely, yes, a central bank should look at second round effects if they happen, but maybe it is possible to impart flexibility even within the existing framework. I mean, the framework comes up for reconsideration only next year, and the central bank has done the right thing by putting out a discussion paper. So all views will be aired, and of course, whether we stick to the current approach or we look at something else, one has to look at the net cost and benefits to the economy and the potential for unintended consequences. I'm also aware of the fact that once a framework is put in place, any change that is made, we have to keep in mind the reaction of the financial markets, the bond market, especially given that India is now part of the indices, global indices, etc. So all these factors have to be weighed, and one cannot simply approach it from a conceptual purity argument alone.
Van, before we let you go, the RBI, how much support do you think it will give to the economy? Well, how many more rate cuts are we looking at, Van?
I'm not going to speculate on that in public either. It is up to the central bank. They have done a fabulous job so far this year, providing liquidity support, removing some of the macroprudential measures, and cutting interest rates as well. I'm sure the central bank and the Monetary Policy Committee know what they are doing.
Van, always great to have you with us. V. Ananda Nageswaran, India's Chief Economic Advisor. Thank you so much for your time today. Well, India's just been trading. It's been trading for about 1.5 minutes. Here's how it's looking for the markets as we kick off the trading day in the country. Of course, India's been lagging its peers globally. The Sensex index currently up by 0.3% in terms of the Indian rupee. 88.2637 is that level we're looking at. It is down about 0.1% versus the USD. Of course, that Prime Minister Modi's handshake with China's Xi Jinping providing quite a lot of optimism when it comes to the markets and the economy. Still to come, French Prime Minister Francois Bayrou could lose his job in a confidence vote later today as another casualty of France's polarized politics. We'll have the details. Keep it here with us. This is Bloomberg.
You've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive, getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Welcome back to Insight. French Prime Minister Francois Bayrou is expected to lose a confidence vote in the National Assembly later today unless he manages to strike a last-minute deal with opposition groups. For more on France's budget impasse, let's bring in Bloomberg's chief Asia correspondent Rosalind Matheson. Ros, the writing's on the wall.
Well, yeah, barring a miracle, we're going to see yet another prime minister lose their job in France later today. The inability of Francois Bayrou to get a budget through a very, very fractured parliament. And of course, the question becomes, if he fails today in this effort and his prime ministership falls, what comes next? Do we have an effort to find yet another prime minister who will face just the same difficulties in parliament, which again is split very much between the far right and the left? Do you find that we end up heading towards a snap election? That's something that the French President Emmanuel Macron has said he doesn't want to do. Does pressure rise on Emmanuel Macron to step down? He's also said that's not something he intends to do. He intends to see out his term to 2027. But does public pressure rise for some kind of action here? We're expecting potential protests in France again this week through September. And of course, we all remember the big protests that ran from 2018, starting in Paris and spreading elsewhere over fuel, really morphing into discontent over the cost of living in France. And so you can see for this administration, it's very, very hemmed in. Even if Bayrou stays, more likely that he goes, what is the path forward here for France?
And also for businesses, they're really concerned about the economy. They talk about recession risks. This is an economy with a deficit of 5.8% of GDP, debt at more than 100% at the end of 2024.
Well, that's right. And of course, businesses watching this very closely, because even if Bayrou goes, as I said, what's the path forward? Do we find that a new prime minister has to renegotiate this budget deal? And what does that look like for business in particular? Maybe they get a bit of short-term relief, but then, do you end up having to change the budget deficit again, lift it again back to 5%? So you're allowing essentially debt to run unchecked in France in the long term? Do you see the impact, therefore, on yields in France, almost at one point surpassing Italian yields recently? Do you see the premium demanded for French debt only goes higher and higher? The pressure on business, therefore, only rises. And especially if we do get an outbreak of protests again, can they be disruptive and how long do they go for? So we're sort of in this endless doom cycle in France at the moment where everybody agrees that there are serious problems with the economy, with the budget, but no one's willing to find that path through, or no one's willing to make the concessions to get that path through.
The concern is longer-term political paralysis. How might that impact the rest of Europe? How much of a risk is it?
Well, that is a big question because, of course, this would be, what, the fourth Prime Minister in a couple of years and, a big distraction for France at home. You can see Emmanuel Macron in these moments. He tends to try and distance himself, oddly enough, from domestic politics and say that's a matter for the government, for the Prime Minister. However, he will get invariably drawn in no matter what. And this is one of the biggest economies in Europe, distracted again by its domestic politics at a key point for the rest of Europe. Obviously, you've got big discussions about the future of Ukraine, the need for European leaders to remain very united around Ukraine in this moment and in, discussing these matters with the US President Donald Trump. So, can that maintain its momentum if France again is pulled into its own orbit domestically? There's also a lot of conversation around joint defence spending. How do governments work together on collective defence in Europe? Can they maintain that momentum? Again, France, very big economy in Europe, possibly drawn in to major distraction for weeks or months to come.
So many questions to be answered, Roz. Thank you so much for that. Bloomberg's chief Asia correspondent, Roslyn Matheson there. Now, before we go, here's a look at our show tomorrow. Morgan Stanley Investment Management's Jitanya Kandari will be joining us to discuss the latest developments in Markets Plus. We'll speak with VinFast chairwoman Letty Tutue on Vietnam's corporate and economic outlook, live from the CITIC CLSA Investors Forum in Hong Kong. That is it for Insight. Horizons Middle East and Africa is next. Keep it here with us. This is Bloomberg.
I think people are paying attention now to what we're doing in a way that wasn't happening 5 years ago. I think the convergence, not just of the hardware investments, but the AI investments in particular, have been the real watershed for us in helping people understand why we've always believed having these devices be wearable and having sensors and having context in the world around you has been so important. And it's like, oh yeah, of course, now that you realize there's going to be a potentially super intelligent assistant that's operating there, you want it to have, for free, all the context on what you've heard, what you've seen, what you're doing, so it can help you the most out as you go about your day and try to accomplish what you're trying to accomplish. So we feel a lot of vindication on that. I think the question is, will it be us? Will it be a competitor? That depends on our execution and their execution. I have a lot of confidence that the paradigm that we're in right now, which has been stable for a long time, right? The phone that you all have in your pockets now is roughly the same as the phone you had in your pocket 4 or 5 years ago. There's not really a lot of new innovation happening at that scale. There is a lot of things. The phone is the greatest consumer electronic device ever built, and yet there's also a lot of things that we wish it could do better or different. And I think with AI and integrated context with the world around us, that becomes more and more obvious. So I'm very confident that the paradigm will shift in that time frame. And you all know the saying, we get a lot less done in 1 year than we think and a lot more done in a decade. That really is going to be true, I think, when it comes to these shifts.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens, I'm Matt Miller at the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
Good morning. This is Horizons Middle East and Africa, our top stories this morning. Traders look ahead to this week's U.S. inflation print after weak jobs report boosted bets of a Fed rate cut this month. Drill, baby, drill. OPEC Plus defies doomsayers with another oil production boost, a move signaling the alliance's commitment to reclaiming market share ceded in recent years to rivals. And Japanese stocks rise while the yen drops as investors brace for Shigeru Ishiba's departure and the race to succeed him as prime minister. It's just gone 8 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Well, so much news over the course of this weekend. We're going to do our best throughout the next 60 minutes to break through some of the big headlines and give you the more context, as we always do at Bloomberg. But maybe let's just start with the big one on Friday, which, of course, was the jobs figure coming through from the U.S., a downside surprise. Once again, the 3-month average gain now for jobs growth in the U.S. is something like 22,000 jobs, very weak versus where we thought it was a couple of months ago before those revisions came through. And so we did see a dip for Wall Street yesterday. Today, things are stabilizing somewhat. We've got S&P futures just shy of 6,500, leaning towards the green, as the next thing to watch out for are going to be those CPI numbers later in the week in the U.S. as well. And perhaps if we do get a downside surprise there, then maybe a 50 basis point rate cut could be on the table. We'll discuss that with our guests shortly. 10-year yields, huge rally after the week number came through. We went down about 10 basis points in yield terms. Today we're up 2.5 basis points. But the point is, the curve, once again, is steepening because you saw 2-year yields move a lot lower, but then you also saw a massive repricing in 10-year and 30-year as well after that disappointing print. Brent in focus. And look at the reaction today. Up 1.2%. This is despite the fact that OPEC Plus, a group within OPEC Plus, decided to increase production once again, bring extra barrels to the market to the tune of around 136,000 barrels a day. But interestingly enough, the reaction in the oil market has been positive, and perhaps because we sold off so heavily into it last week, it's a case of, once again, buy the rumor, sell the fact. We're going to talk more about that on the show. And then Euro, also all eyes today on the French government confidence vote. They are likely to fail. And so once again, pressure on the President Macron to select a new prime minister and the possibility maybe of even new parliamentary elections. So all of that is happening. But also let's check in on how some of these markets in Asia are faring. Yvonne Mann is in Hong Kong. Again, there are lots of news too. You have Japan news that Prime Minister Ishiba stepping down. Then you also had those China trade numbers to piece through as well, Yvonne.
That's right, Jumana. We'll talk about Japan first, because if you take a look at the markets, it's almost like what political crisis, right? Reports that Shishiba is going to be stepping down, and yet equity markets are heading higher. You know, there is a sense here that maybe whoever exceed Ishiba is still going to be at a weaker hand here. And does that in some way lead to more fiscal spending? Does it lead to the BOJ to delay its rate hike? So the narrative is maybe that the next leader is going to be slightly more dovish, and maybe that's a good thing for risk assets as well. That's why you're seeing Nikkei 225 up 1.5%. The yen substantially weaker here this morning, here at 148.20 levels, and we are seeing still some pressure on the long end of the yield curve in the JGB markets. We're up 1 basis point at 325, near those record highs for that 30-year yield. So certainly the fiscal concerns still remain. That's why we're still seeing that steepening in Japan here today. You mentioned those trade numbers coming out the last few minutes or so, and it's interesting, right? When you take a look at exports, basically slowing down to a 6-month low. What contributed to that? Well, it basically was U.S. orders plunged for a 5th straight month, just given the trade headlines and the like. So certainly that is something that we're tracking very closely. So 5.5 was the estimate. We saw about 4.4% for exports. Imports are still quite slow. So just goes to show domestic demand is still looking quite weak in China itself. But needless to say, the market kind of brushes off a lot of these data as well, right? We've seen this kind of dichotomy between weak macro, equity markets still liquidity driven as well. But today we are seeing a bit of a pause in the Chinese markets. We're flat on the CSI 300.
Yvonne, thank you so much. Yvonne Mann in Hong Kong. Now over to Japan to talk more about the political developments there. Ishiba's resignation leaves the markets in limbo over Japan's fiscal direction, with long-end government bonds looking most exposed. At the press conference announcing his resignation, Ishiba spoke about Japan's trade agreement with the U.S. and efforts to get a better deal.
This agreement was achieved based on the government and President Trump's administration. It is with regret that our administration cannot fulfill our responsibility.
Let's get out now to Tokyo and speak to Sherry Ann, Bloomberg's Asia Trade co-anchor. Sherry, I remember when the elections took place a couple of months ago, there was a lot of pressure back then, even back then, on Ishiba, perhaps to step down because of the very poor performance in the upper house, and he hung on. But it seems that this weekend he decided to call it a day, is actually yielding to pressure, stepping down. What happens next?
Yeah, he really preempted another vote that was expected today in order to hold an early election. That would have been a really strong rejection of his leadership. So what happens now is, when is the next leadership election? We're going to hear from the LDP on Tuesday about the new date. Local media have been reporting that it could be in early October. And of course, the key question is what happens to some of the issues that still remain in place for the Japanese economy, including, as you mentioned, those U.S. trade negotiations, because we heard it from Prime Minister Ishiba himself saying that the trade agreement with the U.S. was not completely over. We actually heard from President Trump reacting with surprise to Prime Minister Ishiba's resignation, saying that he liked the guy and that he was working well with Prime Minister Ishiba. We'll continue to watch who could be the next potential candidates. They seem to be very similar to the list that we saw back in September during the last leadership election.
And what's interesting is the market reaction. Yvonne was just walking us through it, and the fact that the Nikkei is actually up 1.4%. At the same time, not a lot of love still for long-end JGBs. What does the market reaction tell us about what investors are anticipating out of his successor?
It's really that expectation for more fiscal stimulus, right? I mean, Prime Minister Ishiba was known for being very fiscally disciplined, and it's unlikely that whoever comes next will be more fiscally hawkish than him. Not to mention that even if they were, the fact that they need to negotiate with opposition parties to get anything done just means that we might get more fiscal stimulus on the way. Also, because we have a weaker yen, those exporters have been leading the gains, and depending on who the market sees as potential candidates candidates. For example, Sanae Takaichi Hardline Conservative has been against normalization of policy by the Bank of Japan. So could this mean more easy money? That has kept bank stocks, for example, under pressure today. And you mentioned those JGB yields. We have front-end yields down today, weaker Japanese yen. The expectation of more fiscal stimulus to come is really pressuring the long end. And we could potentially, of course, be seeing the Bank of Japan also delaying rate hikes. Although it's worth mentioning that we got the final second quarter GDP numbers today, surprising to the upside. Annualized growth of 2.2% instead of the preliminary 1% growth that we had estimated earlier.
Sherry, thank you so much. So great to have your perspectives. Sherry Ann from Tokyo this morning. Well, the weak jobs print out of the U.S. practically cemented expectations that the Fed will resume cutting interest rates this month to support the economy. In fact, there's about 28 basis points priced in, so a little more than one full 25 basis point rate cut. Let's bring in Carol Suchen, Signet's Capital Management Investments Head. Really good to have you with us on the show. So another downside surprise with those jobs figures on Friday. What did we learn about the state of the U.S. economy?
So yes, the markets were surprised by the job that has been less creating.
Job creation.
Less job creation. So we had 22,000 job only versus expectations of 75,000. In July, also the numbers were revised up at 79. Yeah. What's really striking is the fact that the U.S. economy has destroyed jobs in June. The numbers were revised down at minus 13,000. So unemployment also has ticked slightly higher at 4.3. What's worth really noting is the fact that the manufacturing sector, that's where you really find the most less job creation instead with wholesale as well.
So what I find interesting actually is, well, you are seeing obviously an impact, but I wonder whether the more visible impact is coming from the Trump administration's crackdown on immigration or on the industries that are affected by tariffs.
I think it's a mix of both. I mean, we have seen this morning the news about the Hyundai corporate rate as well. So tariffs are impacting the job creation. Companies are cutting their expectations in terms of hiring because they have lots of uncertainty. I think uncertainty is the worst that you can have on the U.S. economy.
Do you think that the Fed might opt for a 50 basis point cut? We have an inflation print to get through this week. If it does the surprise to the downside, could that pave the way for 50 basis points? I just said the market is now looking at 28 basis points.
Yes, so the market is now looking at more than one full rate cut for September, another 2 for the end of the year. There is a chance that the Fed is feeling compelled to cut by another additional 25, so a full 50 rate cut in September because they might feel behind in terms of the curve. Now, these numbers, the CPI and the PPI, would be really, really important because markets are expecting the inflation to tick up, which is why we're having the long-term, the long end of the yield curve moving up as well, close to 5% last week.
And so far, stock markets have been pretty resilient. The S&P very close to yet another all-time record high, and we speak of still how so much of this boom has been powered by AI and AI tangent sectors. But I do wonder if the Fed have to opt for a 50 basis point cut because they're so worried about the state of the economy, whether at some point stock market investors will have to take note of that as well.
I think the equity market might go into a bit of a correction if the Fed does cut by 50. You have lots of companies, lots of countries who have pledged big investment into the U.S. This is yet to be seen. So the whole of the equity market is moved by these tech companies. So are they going to have enough profits to really move the market up? There is a big concentration risk on the U.S. market. So that's really something we want to watch carefully. We might have the fact that the economy is slowing down that's really taking over the fact that the tech companies are pushing the market higher.
Yeah, if there is a pullback, would you use it as a buying opportunity?
Yes, that's an opportunity we will use to reposition our portfolio. We have gone with lots of cash now in our portfolio. We have been hedging in our portfolio as well since the month of March, expecting some kind of correction coming. The valuation are very high on the U.S. market.
What's the house view on the U.S. dollar? It just can't seem to get a bid here. And yet again, you know, on the weak payroll print, we also had another leg down in the USD. What turns this around?
So the US dollar is really pushed lower by the loss of confidence in the US institutions in general. So obviously you have the Fed threats by Trump. That's very annoying, very puzzling for all the watchers. You have also the potential on the labor institution, also with the labor data that's going to be. Are they going to be really independently released, or are we going to have some loss of confidence also? All of this is pushing the dollar lower, and also this loss of confidence in the U.S. economy is pushing the gold higher. We have seen the gold going over 3,500, and that's becoming a new support now.
Yeah. It's so great to chat to you. Thank you so much for coming on the show.
Thank you, Jumana.
Carole Sohan, Signet Capital Management Investments Head. Up next, OPEC Plus goes for more hikes. We discuss the group's decision to add 137,000 barrels per day in October with Edward Bell, acting group head of research and chief economist at Emirates NBD. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. OPEC Plus has announced an agreement for a modest production boost in October. The group says it would restart 137,000 barrels a day of output, defying warnings from Wall Street that the move risks compounding a supply glut. The alliance hopes that a further increase in sales volumes will offset any hit to revenues from lower prices. Joining us now is Edward Bell, acting group head of research and chief economist at Emirates NBD. So another production increase out of OPEC Plus. I've got to say, a bit of a surprise, even though the market is telling you something different this morning. But why do you think this group are so intent on putting extra barrels to the market, even though many analysts out there are warning about a potential supply glut in the fourth quarter?
Yeah, it does seem a little bit counterintuitive that you'd want to have the scale of production increases that we've already seen committed to from the OPEC plus countries, and really just a collection of the OPEC plus countries, that they're going to carry on doing that going into the rest of 2025. And actually, we think that's going to be the story for 2026 as well. But clearly, there is a decision that the kind of production restraint strategy, if that was aimed at supporting a specific price target, it really wasn't working. It wasn't having the desired effect, or it wasn't getting to a price that was going to be satisfying for all members across the group. So increasing output and increasing revenue, even if it means that there is a risk of prices testing lower, seems like the strategy going forward. And to be frank, if we look at the performance of oil prices since they've adopted this strategy over the last couple of months, oil prices have been fairly steady. We've had spikes up, we've had some touches on lower based on the sort of news flow of geopolitics or economic policy, but overall the sort of mid-60s kind of range that we've been in has held fairly intact, with the scale of almost 2.5 million barrels a day that have been increased from about May until September.
Yeah, so they probably did sense more of a window of an opportunity to continue putting these barrels back to the market. At what point do you think, is there any price points where OPEC Plus will reevaluate? Is it low 60s? Is it high 50s? At what point will they say, okay, let's hold off putting these extra barrels back to the market for now?
Yeah, I don't know if there's a specific price level that it is, but if it's price action that looks really disorderly, if we have a major sell-off that doesn't look like there's anything that can put a floor underneath it, so if you have big downward moves day to day, 5 to 7%, then I think there becomes a decision to say, well, do we reevaluate? And if you look at the language of the OPEC Plus statements, they very much say that these are flexible targets, that they are willing to come in and change.
What do you make of the fact that Iraq over the weekend, the Prime Minister was calling for an increase in their own quota within OPEC? And again, you read a lot about there being limited spare capacity amongst the OPEC producers. How do you tie all of this together? Will there be a reshuffling?
Well, we got to think about, first of all, there's the market share for OPEC Plus against other oil producers around the world, United States, from South America, from Africa. And then within the OPEC Plus framework itself, there is this delicate balance of who gets the right allocations. And we've seen this blow up into tensions before, where it takes a long time to come to decisions about what kind of quotas are allocated to individual countries. So yes, there is this anxiety about, okay, we've had 137,000 barrels a day of an increase planned across those 8 countries. Not many countries are probably actually going to be able to deliver their share of that monthly increase. Saudi Arabia, most likely, UAE, and perhaps, Iraq or Kazakhstan, who have been increasing output in any case and probably want to have a bigger part of that pie going forward.
Yeah. Why do you think Saudi Arabia, who have obviously been leading the group also in terms of the voluntary cuts, have changed their strategy? And how much do you think that is on the back of perhaps some of the fiscal pressure that's coming through on Saudi Arabia right now as we speak about reprioritization, recalibration of plans? Do you think there is pressure to somehow increase the revenues that are coming into the States and therefore increase oil production?
Yeah, I think the strategy is twofold. One is an internal sort of OPEC plus disciplinary measure. Say, hey, if other countries are producing above their target, we're all going to increase output so that nobody gets the sort of extra benefit of capturing those higher priced barrels. But then also there does seem to be a view that rather than saying we need oil prices at $80 or $90, let's just increase our revenue wholesale and try and get as much out there on the market as possible, and that will help to bring in income. Now, we look at Saudi's project spending in a lot of detail. Already in place, there's about $450 billion of spending that is in execution already. That's not far off the size of Norway's entire GDP. So that's a tremendous amount of spending that's going on right now. And to meet some of the future spending plans, revenue is going to be a big part of it. Getting it from oil income is going to be a big part of that story. But also, look, we had a successful Sukuk issuance last week from Saudi Arabia. They do have other avenues to go out and raise money. Still a pretty low indebted economy for one that's that size, and also a big part of the G20.
Yeah. How do you see the rest of the GCC faring in an environment of mid-60s or low 60s oil?
Yeah, it's quite a lot of scatter shots. So for the UAE, we think it's a pretty comfortable position. Actually, we still expect to see, on aggregate, a across the UAE a modest fiscal surplus. That's the degree of fiscal diversification that's been achieved in the economy. For the other markets like Kuwait, like in Oman, it is tougher because there's not quite the same scale of a diversification in the economy. Oil exports still a huge part of the fiscal and the export revenue story, so a little bit tougher there. But for the big, really dynamic economies with the UAE and Saudi Arabia, mid-60s a barrel, it's not ideal, it's not perfect, but it's also a very livable number for them.
So interesting. Really good to have you on, Edward. Edward Bell, Acting Group Head of Research and Chief Economist at Emirates NBD. Thank you. Now, coming up, Trump says he is issuing his last warning to Hamas to release all remaining hostages in Gaza. The details next. This is Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. U.S. President Donald Trump says Hamas needs to accept his terms to end its war with Israel. His post on Truth Social comes after Steve Witkoff, Trump's envoy to the Middle East, sent a new proposal to Hamas last week. According to Axios, the deal includes releasing all remaining hostages in exchange for ending the war in Gaza. But Hamas says it needs Israel to fully withdraw troops from the Gaza Strip before agreeing to peace talks. Trump says a deal could be coming soon.
Some things came up having to do with Hamas, etc., and we're working on a solution that maybe could be very good.
Can you tell us what that solution is?
No, but you'll be hearing about it pretty soon. We're trying to get it ended, get the hostages back.
President Donald Trump says he thinks Russia's war with Ukraine will be settled soon. The U.S. president reiterated he is not happy with Russia, saying he will be speaking with President Vladimir Putin very soon. It comes after Ukraine and its capital came under a massive Russian drone assault on Sunday, killing at least 2 people. Kiev's mayor said these strikes hit residential areas of the capital, while several other buildings and cars also caught fire, including a government building. Hundreds of Turkish police forces blocked access to the main opposition's Istanbul headquarters on Sunday. Officials from the Republican People's Party decried what they described as a siege and called on supporters to gather at the party's Istanbul headquarters. The political turmoil has unnerved investors and led to a sell-off in Turkish assets, with an upcoming hearing on September the 15th against the party's chairman and his administration potentially leading to further uncertainty. And a quick look at equity futures, building on from, Wall Street saw some losses on Friday after that disappointing jobs print. But today, the theme is one of stabilization, with all of these indices, including European markets, pointed to open up in the green. And coming up, we discuss the impact of the French budget crisis beyond the confidence vote today. We're live outside the National Assembly in Paris. This is Bloomberg.
Said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive. Getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Drill, baby drill. OPEC Plus defies doomsayers with another oil production boost, a move signaling the alliance is committed to reclaiming market share ceded in recent years to rivals. Japanese stocks rise while the yen drops as investors brace for Shigeru Shiba's departure and the race to succeed him as prime minister. And we speak to Amira Sajwani, founder and CEO of Pripco, on the outlook for prop tech investments in the Middle East. It has just gone 8:30 a.m. across the Emirates. I'm Joanna Versace in Dubai. Well, another disappointing jobs figure out of the U.S. on Friday. Average jobs creation the last 3 months is just sitting at 22,000. So very weak compared to what we thought it was going to be, showing real signs that the labor market in the U.S. is cooling, and which also means that investors have upped their bets for how many rate cuts we're going to see this side of the year. Around 3 rate cuts are priced in, 27 basis points priced in for September. So some people out there are placing pricing a small chance even of a possibility of a 50 basis point cut. And of course, we do get inflation data this week in the U.S. to watch out for as well. So that's going to be a key determinant of where we go from here. S&P futures, though, stabilizing. We're up 10 basis points. 10-year yields, at one point, we went down to about 4.07 on Friday. That is down from where we were earlier in the session, around 4.20. So big rally there, up this morning, 2.5 basis points. And then Brent, the energy complex, again, a lot of focus on what's been happening there, up 1.2% this morning. Buy the rumors, sell the facts. OPEC Plus, once again, the group of 8 have decided to increase production to the market to the tune of 137,000 barrels per day. So not as big a clip as they were doing over the course of the summer, but still more production, more supply going to hit in coming months out of OPEC Plus. And the reaction is Brent is up 1.2%. Euro, the currency, trading at 117, a tad weaker versus the USD, though the theme for the greenback has been one of weakness. All eyes today is going to be on the French confidence vote for the government. We're going to be speaking to our correspondent, Caroline Conat, in just a short while about what to expect there. But let's move on and check in on how markets in Asia are faring as well. Yvonne Man is in Hong Kong. Yvonne.
Yeah, that weak jobs report in the U.S. really kind of solidified those bets that the Fed's going to have to cut next week, right? So that certainly is bringing some tailwinds to risk assets here and in Asia today. So you are seeing Asia slightly higher in the equity space here as well. China, though, taking a bit of a breather here today. But then we're also watching Japan, right? As we talk about the political instability, uncertainty in Europe, well, Japan certainly is one with Ishiba set to step down. The equity market, though, taking it very, very favorably. You know, maybe the narrative is that there is going to be more fiscal spending. Whoever does take up the realm, and is the BOJ going to have to delay that rate hike that has been priced into this market? So we are seeing some substantial weakening in the yen here this morning. We're at 148 levels for the currency here. In terms of movers, plenty to talk to in China, despite, you know, things are looking pretty flat on the benchmark here. Take a look at how Hong Kong and some of these movers, Alibaba and Baidu, so some of these AI trades as well. We're seeing the stock up for Alibaba in particular after that AI model upgrade. So that AI trade is still living on here today. Country Garden's up 8% here. We're talking about these property developers after Shenzhen joined other first-tier cities in easing those home curves as they try to ail and help the ailing property sector there. And we're watching Labubu's once again, Pop Mart. We're seeing the stock drop the most in a few months or so here. So there's concerns once again of Labubu and, you know, the demand picture there, how long this sort of fad can last. And then certainly now also Pop Mart has been added into HSI. And so maybe we're seeing a bit of profit taking in there on that front.
Yeah, just a note from our region, our part of the world. I was reading over the weekend that some UAE schools have banned for children to bring in their labubos to the classroom. So who knew it was going to have such an international impact on the stock as well, Yvonne? Thank you so much for the overview. Yvonne Man in Hong Kong. Okay, let's switch on away from the boo-boos. Let's talk about the turmoil in France, where Premier François Bayrou is likely to lose his job in a confidence vote today. But the real risk for investors lies beyond this and on what's to come over the coming weeks and months. France's inability to fix its public finances has led to 3 governments in little more than a year, inspiring little confidence in a 4th. For more on the political risks, we're joined by Bloomberg's Caroline Conat, who is outside the National Assembly in Paris nice and early for us. Caroline, good morning to you. Bayrou went on a charm offensive the last couple of weeks. He wanted to win over some lawmakers unsuccessfully. So in all likelihood, it does actually seem like this government will lose the confidence votes. What's next?
The charm offensive hasn't paid off, Jumana, and in fact, just 9 months after the fall of Michel Barnier, we are very likely to see tonight another fall of the government with François Bayrou really likely to lose his vote of confidence. 98% chances according to Polymarket. What happens next is now in the hands of President Macron. The most likely scenario is that he names a new prime minister. Some within his own camp are saying he should do that really quick, hopefully over the next few days, and not wait for many weeks like he did in the past. So we should see the 5th prime minister in France in less than 2 years. What route is he going to go? Perhaps he could go the technocratic route, or perhaps he should try the socialist, the moderate left, which he hasn't tried yet. However, he risks losing the support of the moderate right, the Republicans. The current Interior Minister, Bruno Retailleau, has said that if the socialists join the next government, it will be without him. Of course, other options for Macron include calling new snap elections or even resign. Two options he has currently ruled out. So we're going to see probably the fall of François Bayrou, a new prime minister, but hopefully not snap elections over the next few days.
I mean, the catalyst for all of this is Bayrou wanted to shore up support for his budget proposal, around 44 billion euros in spending cuts. How would a likely successor to this government perhaps approach that differently, given how divided the French electorate is right now? It's very difficult to appeal to all your different stakeholders, especially given the fragmented nature of the French parliament these days.
The irony of this, of course, is that most of the French and most of the opposition parties actually agree that there is a debt issue in France, that we need to tighten public finances. The problem is that they don't agree on the method used by François Bayrou, which was to call this vote of confidence before any discussions on the details of this budget. The issue as well is that if he does name a socialist prime minister next, they have proposed an alternative budget which includes 22 billion euros of savings, which is only half of what François Bayrou was proposing. So clearly that is a concern for the markets. The fall of François Bayrou is mostly priced in. However, the debt trajectory is not quite yet priced in, and clearly the next government will also have to work on that and also revive confidence. We've seen the French really increase their savings over the past few months, which means the money is not really flowing into the real economy. And according to Bloomberg Economics, if this debt trajectory is not solved, if nothing is done to actually reduce the deficit and bring it to the 3% target in 2029, which is the goal of this current government, then the debt to GDP ratio could actually increase by about 10 basis points from around 115% today to 125% in 2030. That's according to our own Bloomberg Economics. So a lot at stake here, and there is a deadlock. So perhaps if the fragmented parliament remains the way it is, Macron might be forced in the end further down the road to indeed call new snap elections.
Caroline, thank you so much for helping us make sense of all the complexities of French politics these days. Caroline Conat, outside the National Assembly in Paris. Well, BRICS leaders are set to meet virtually at Brazil's request to confront Trump's new trade tariffs. While Presidents Xi and Putin have confirmed they'll take part, Indian Prime Minister Narendra Modi plans to skip the meeting and send a senior representative instead. Our chief Africa correspondent, Jennifer Zabazaja, joins us from Johannesburg. Well, last week we were talking about the fact that President Trump was tweeting a bit scornfully about this Tianjin summit in Shanghai with many heads of states represented. You've got to wonder what really these BRICS nations are doing hosting a virtual summit, much to probably will likely be President Trump's irritation.
Right, Jumana, and many analysts noting potentially we're seeing President Trump actually bringing a number of these BRICS nations closer together. Of course, as you noted there, we did see that Tianjin meeting just a few days ago where we saw a number of these leaders talking about ways in which they can strengthen development institutions and also help support the global South. Now, Bloomberg are understanding, as you were just mentioning there in the intro, we'll see President Putin in this virtual summit and also President Xi Jinping expected to give a key speech on U.S. trade policy. And actually a readout that we did get from Foreign Minister Wang Yi is that China wants to strengthen strategic coordination, uphold international rules, and safeguard common interests of the global South. Surprisingly, though, Jumana, as you were mentioning there, of course, Narendra Modi not expected to be present at this virtual summit, instead sending a senior representative in his place. And what's important to note about this is Modi and President President Trump's relationship has been in the spotlight for the past few months. Many people actually saw potentially their closeness earlier this year at the BRICS summit being a stumbling block to any sort of resolution that the BRICS leaders can get. Now, of course, we've seen frictions between India and the U.S. Did potentially this relationship go into Modi's decision not to attend personally and instead send a senior representative? But the question, too, will be what, if anything, readout will we get from these leaders in this summit? And what then does it mean for the relationship with a number of these countries and the U.S. and President Trump?
Yeah, what about the BRICS? I mean, you touched on this a little bit, and I'm curious to see whether there actually have been signs that the inter-BRICS relationship has been strengthened given all of the events over the last couple of months and the global south sticking and becoming more homogenous as a group in light of some of the decisions taken by the Trump administration.
Right. Well, Jumana, if you take a look at just a few of the decisions taken by the Trump administration, let's just start with tariffs, of course, right? If you look at a number of these BRICS nations, South Africa has 30% tariffs, Brazil, India, China also facing upwards of 30%, upwards of 20% tariffs there. This has been a significant hit for a number of these economies. Not just that, we have seen President Trump verbally threaten these BRICS nations for any sort of moves away from the dollar. And so it's seeming like there seems to be a bit more closeness that is being developed between these nations. But what, if anything, can they do with that, of course? Because, of course, if we just take a look at the G20, for instance, we heard from President Trump over the weekend that he is not going to be attending the summit that is happening here in South Africa, instead sending Vice President J.D. Vance. But still, the U.S. will take over the G20 presidency next year. And so there still needs to be some sort of working in between that is happening between a number of these nations and the U.S. So the question will be, will we get a readout again? And how will these nations individually work on their bilateral relationship with the U.S.? Because that is, of course, still important to these economies individually.
Yeah. Jen, thank you so much for the overview. Jennifer Zavazaj, our Chief Africa Correspondent in Johannesburg. And coming up, we speak to Amir Sajwani, founder and CEO of property tech firm Pripco, about securing a bridge funding round next. This is Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg. The Dubai-based property tech platform Pripco has secured pre-Series A funding from U.S. venture capital firm General Catalyst. As sole investor of this bridge round, General Catalyst is making its first prop tech investment in the Middle East. Now, the VC firm's other notable investments include Stripe, Deliveroo, and Kayak. Pripco is a real estate platform that aims to make property investment, home financing, and residency more accessible. Joining us now is founder and CEO Amira Sajwani. Really good to have you on the show with us. Look, just a 1-minute summary. What does Pripco do for the audience who are unfamiliar with it?
That's a great question. Become a real estate platform that caters to the end-to-end needs of anybody purchasing a real estate property or even transacting a property in Dubai, whether you're a broker, you're an agency, or you're a client. And so our main offerings right now are fractional ownership. We allow ownership into Dubai real estate from 2,000 dirhams. And how we do that is by subdividing the property into many pieces and selling it out. And then we also do home financing. So we do mortgages, and we are partnered with 18 leading banks in the UAE. And we've disbursed more than 10 billion dirhams over the last 2 years. And so we're very strong in mortgages. And then we also do golden visas.
So I want to ask you about fractional ownership because essentially, I mean, we talk a lot on this show about the booming house prices, residential, commercial, everything in Dubai, the UAE more broadly. And yet this concept of fractional ownership is where you can participate in some of the upside, the capital appreciation, the rental yield, income, but you don't actually fully own a property, hence why it's fractional ownership. Why is this concept taking off, do you think?
I think that's a great question. The concept is taking off because everybody wants to be exposed to Dubai's market. Dubai's market's doing phenomenally well. The rental yields are amongst the highest globally still till today. The average yields are still, between 6 and 8% net on your investment, as well as the opportunity of capital appreciation, which has been more than 25% in the last couple of years, year on year. And so people are very excited about the market. And of course, like any other market in the world, there's a barrier of a minimum price to enter into purchasing into the real estate market. And so fractional ownership, that barrier, it allows for people to enter from, a very small ticket and have that exposure to both the rental yield as well as the capital appreciation.
But does it not raise the risk of what's happening in Dubai moving into speculative territory? Because you have people punting on their house prices.
That's a great question. Actually, fractional ownership reduces that risk because with fractional ownership, what you're purchasing is upfront. I think with speculative, when speculators come to the market, they look to buy something and flip it over time and take a payment plan or take leverage against it. With fractional ownership, actually, it's a pure investment. There's no leverage against that investment. And so the risk is actually much lower. It's a good yielding product. And so you get that dividend as well monthly or annually or quarterly according to whatever is the setup for that property.
Yeah, and you took this concept of fractional ownership and took it to the digital format, a tokenization, very interesting event that you had in the summer. Essentially, you sold a tokenized villa in under 5 minutes, attracting more than 224 investors from over 40 nationalities. Is this a template that you think is going to take off, people buying into tokens in digital format?
I think tokenization, a lot of people ask what is tokenization. Tokenization is just digitizing the entire process of allowing any asset, and in this case real estate, to be broken down into many different classes or many different smaller shares. And so tokenization makes the process a lot more efficient and a lot quicker. And it was a phenomenal experience. We were partnered strategically with the Dubai Land Department for the pilot program. And so it really took off. There was a large appetite for it. And so fractional ownership really is something that people are looking into because, today people who are even working and putting away savings, they want to be able to put a monthly amount into something that yields them as an investment. And so it's a great option today.
So let's talk about the other main news, which is that the General Catalyst, which is the global VC firm, has investors putting in money into your company. First of all, can you give us any details on valuation at this point?
So we haven't disclosed the valuation, but it's been a very good strategic partnership. We are their first prop tech investment into the region, and they've done very few other investments as well. So it's a really strong signal for us on our stability and growth and where they're looking to the region going, as well as us as a company. And so we're very excited. We've just onboarded them over the summer as strategic partners with this investment, and we're really going to double down on our products and heavily focus on growth.
Where are you going to deploy capital?
That's a great question.
capital is going to be deployed to solidify where we are today as well as grow across both mortgages and fractional ownership. We're really looking at the market that has a lot more breadth than we're currently capturing, not just us, but as a full ecosystem. And, you know, His Highness as well over the summer has announced the PropTech Hub, that they want to take that 5x by 2030 and go up to about a up to a $5 billion market. And so that's phenomenal. Dubai is really focused on growth across the sectors, and we're excited to be part of it.
Thank you so much, Amir Sajwani, founder and CEO of Pripco, on our show. Well, for more of these stories looking into the intersection of wealth and power in the region, sign up for our Mideast Money newsletter on Bloomberg.com. And coming up, a deadly Ebola outbreak grips Congo. At least 15 deaths have been reported so far, with dozens more feared infected. Details next. This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg. Welcome back to Horizon's Middle East and Africa. I'm Jumana Versace in Dubai. The Democratic Republic of Congo declared an Ebola outbreak late last week after 28 suspected cases and 15 deaths were reported. Health services in the country have been under strain this year as the U.S. government cut funding for international aid. For more, Bloomberg's Onziro Ganga joins us now from Kigali, Rwanda. First of all, just walk us through how severe the new outbreak is and how much of a cause it is for alarm.
Hi, Jumana. So it's quite severe, and we're seeing joint effort between the government of the Democratic Republic of Congo and the WHO to try and contain these outbreaks before they spread further and become something that is not mitigatable within the power and the resources that the government has. So far, this strain has been identified from the latest test is the Zaire strain, and it's one of the more deadly strains. It has a fatality rate of about 20 to 80%. It has a high infection rate between people. And also, due to the geography and movement of people, it is increasing the risk of infection. The first patient, the patient 0, was an expectant woman. She was admitted, and 5 days later, she lost her life, together with the first healthcare workers who were the first point of contact. But the government says that the good news is they have a vaccine, and they're going to be deploying those 2,000 doses to the contact people that have had any form of connection with those that have been diagnosed with the disease, and also frontline healthcare workers. This is not the first time this is happening in Kasai region. This is the second outbreak, but in DRC, over 15 outbreaks that have claimed over 15,000 lives.
Ondiro, in the intro to you, we were talking about some of the funding aids and the withdrawal from some of that aid out of the U.S. administration. Is that impeding Congo's ability to effectively deal with this outbreak right now?
Absolutely. We have seen extreme budget cuts from the U.S. going into sectors like healthcare and Democratic Republic of Congo, and this is having an impact on how they're dealing with outbreaks from cholera, measles, and mpox. And Ebola is not going to be any different because a lot of funding came from CDC and USAID, and this is money that not only went into helping run healthcare services, it also helped in technical and expertise training of Congolese medical people. It also helped in buying medical supplies, and that rug having been pulled under their feet is going to complicate effort. Congo is also a country that is at war. A third of their budget is going into that, and so this is further straining money that could go into social spending, and it speaks to some of the budget cuts that have gone into global health, and with that then it constrains effort. We are seeing WHO stepping up, but without synergized efforts this is going to be a problem. However, on the upside, we are seeing that in 40 years Congo has become very good at sequencing the disease and just response efforts.
Bloomberg's Ondiro Ganga in Kigali, Rwanda, thank you for bringing us that all-important story. Well, that rounds up our show for today, Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.
So today, has value investing been a profitable thing to do over the last 10 years or so, or has it been hard to do?
The market structure has changed, and there has been what I consider it to be a broken market, or the value investing industry, I think, is defeated, so to speak. It used to be that most money was invested by these long-only investors, these big mutual funds and stuff like that. And they had money coming in every day, and they were getting nice fees on all of that money, and they had large research teams. And they would sit around following all of the companies with teams of analysts, and they would say, this company we think is undervalued by 30%. And it might be a growth stock or a value stock, a Magnificent Seven or otherwise, but they would say, I think this is undervalued by 30%, and if I buy it and I hold it, I'll make the S&P plus 30. Now, as we've moved to passive, they've lost their customers, and the remaining customers are paying them lower fees, and they have reduced their research staffs, and they don't have new money coming in to make new investments in any case. And so most of the investing these days is no longer done by people who are buying something because they think it's worth more. They have opinions about price. Like, what is the price going to be tomorrow? And so the result is most trading that is going on right now has nothing to do with value. So it leaves us sort of as a dinosaur.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Cape Town, South Africa, and this is Bloomberg.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Japanese stocks rise while the yen slides as investors brace for the departure of a 4th Prime Minister in 5 years. The focus now on who will succeed Shigeru Ishiba. And in France, François Barrot's government looks set to collapse today as he faces an uphill battle to win a confidence vote. We will discuss what it means for the country's massive debt load and, of course, for wider markets. Plus, keep on pumping. OPEC Plus defies the doomsayers with another boost to oil production as the alliance looks to grab more market share. Happy Monday. Let's get to the markets then with European futures on the front foot, putting to gains of 0.4%. The FTSE 100 here in the UK after a major government reshuffle amongst the cabinet, pointing higher by 25 points. S&P futures still digesting, of course, confirmation of a weaker labour market in the US with the non-farm payrolls dropping on Friday, and markets now pricing in almost 3 25 basis point cuts from the Fed by the end of this year, currently pointing to gains of the S&P just 0.1% after a little bit of weakness on concerns about the labour market come the end of the session on Friday. Nasdaq 100 futures pointing to gains of 53 points. Let's flip the board and look cross-asset then. We saw, of course, the rally, particularly at the front end of the Treasury curve on Friday. Some of that being paired in the session today. The 10-year currently at 4.09, yields up 2 basis points. The pound in focus on the back of that reshuffle, 134 on sterling. A little softer in the session by 0.1%. Dollar strength coming through again in the session today. Brent in focus, of course, after OPEC Plus decided to put more barrels on the market. $66 a barrel right now, up 1.2% because of prior expectations that maybe OPEC Plus would go a little bit further than that. Gaining in the session then oil. The yellow metal, a little softer, gold by 0.1%. Let's check in on the Asian markets then. The focus, of course, on Japan with confirmation that the Prime Minister will be stepping down. So the yen weaker and Japanese stocks rallying. The Nikkei 225 gaining 1.4%, and that is on the back of the strength that comes through on a weaker yen and what it means for the manufacturing base, of course, of Japan. The yen then at 148, down 0.5%. Again, bolstering some of those manufacturers, or at least expectations, and that is leading to the rally in Japanese stocks. The CSI 300 over in China with further softness in terms of the export story there, currently flat on the mainland market. So the resignation of Japanese Prime Minister Shigeru Ishiba has set in motion a leadership race that will be, of course, closely watched by the markets and global investors.
I thought that as Prime Minister, I needed to take responsibility for the result in the election. Having seen the U.S. trade negotiations through, I felt that now was the right time to stand down and give way to my successor.
Well, Ishiba says he will stay on as Prime Minister until his successor takes over. Bloomberg anchor Sherry-Ann joining us from Tokyo. Sherry, what is the latest then? What are we watching for in the hours and days ahead?
We are looking for the exact date when the leadership election of the LDP will take place. We are hearing that we might get an announcement on Tuesday. Local media reporting that the election could take place in early October. We're also looking out for the rules around the election. Will they be held under emergency rules? Local media now saying that it will be a full spectrum election. What that means is that lawmakers and rank and file party members will have and control an equal number of votes. What that means is that potentially that could benefit candidates with broader public appeal. The list of potential contenders, just a handful, that looks pretty similar to the leadership election less than a year ago. We're talking about Sanae Takaichi, a hardline conservative, topping the list in many recent opinion polls. Now, she narrowly lost to Ishiba last year. She's seen as a candidate who wants easy monetary policy, perhaps a reversal to Abenomics. Shinjiro Koizumi, also the agriculture minister, is a contender, a potential contender here. 44 years old, would represent a newer generation here in Japan. Also, we're hearing from local media that Chief Cabinet Secretary Yoshimasa Hayashi could run for LDP head. And of course, what that means is that they could become the next prime minister.
And Sherry, you touched on some of the potential economic policies of some of these candidates. Talk us through how that's feeding into market views then as we see this rally in Japanese stocks, but pressure, of course, on the currency.
Whoever wins the LDP election and becomes the next prime minister of Japan will likely open the fiscal taps. That's because Prime Minister Ishiba was already a fiscal hawk. So even if you get somebody like him, the fact that the LDP does not control the majority in both chambers of parliament means that they need to negotiate with opposition parties. Because of that, we continue to see now stocks in Japan gaining ground. We are also seeing some of those nuclear-related stocks, utilities, for example, gaining ground. Sanae Takaichi is seen as a pro-nuclear candidate. She could lead the election in October if it's held in the early days as reported, but also the fact that we are seeing a weaker Japanese yen because the front-end yields are lower at the moment, with the expectation that perhaps the Bank of Japan will also need to delay its rate hike that some had seen as early as October is factoring into the markets, with exporters now gaining ground. And this, of course, at a time when we are seeing a resilient Japanese economy as well. Earlier today, for example, we had second quarter final GDP data surprising to the upside, but really the pressure has been on long-end JGBs because of those fiscal concerns. Whoever comes in might lead to more fiscal spending, and what that will mean for really the debt burden here in Japan is a big question at a time when demand for these JGB auctions has already been pretty weak.
Yeah, well, therein lies the global significance if we continue to get a further sell-off in the long end when it comes to Japanese bonds. Bloomberg's Sherry, and of course Anchor for us, covering the changes and adjustments in terms of the politics of Japan and the market implications. Sherry, thank you. Let's turn to the politics of France right now. Turmoil in France, where Premier François Bayrou is likely to lose his job in a confidence vote today. But the real risk for investors lies beyond this event and what is to come over the coming weeks or months. France's inability to fix its public finances has led to 3 governments in little more than a year, inspiring little confidence in a 4th government, if that's what we get at the end of today. For more on the political risks, we're joined by Bloomberg's Caroline Conat, who is outside the National Assembly in Paris for us. Caroline, is that the right way to frame it, that Bayrou's removal is essentially a done deal, or is there something he can pull out of the hat last minute? What are we watching for?
I'm afraid it's pretty much a done deal, Tom. In fact, the charm offensive of François Bayrou last week, meeting with all the opposition parties, hasn't really paid off. The Socialists and the National Rally have both said they will not support this vote of confidence. So Bayrou will likely fall tonight, 98% chances according to Polymarket, 30% actually believing we might see new snap elections in France going forward. Of course, what happens next is in the hands of President Macron. The most likely scenario in the short term is that he will name a new prime minister. Will he go this time for the technocratic route, or will he go perhaps for the socialist route, something he hasn't tried yet? The problem with going for a socialist prime minister is, of course, potentially losing some of the support from the moderate right wing, the Republicans. The current interior minister, Bruno Retailleau, has already said, for example, that he will not join a government that includes some socialists. And of course, the socialists have already presented their alternative budget, and clearly the savings in a potential socialist budget will be watered down. But the likelihood, Tom, that here tonight at the National Assembly we're going to see another government collapse in France in 9 months is really high, and we'll probably see over the next few days a new prime minister in France, 5th prime minister in less than 2 years.
Wow, a 5th Prime Minister in less than 2 years. You've given the UK a good run for its money, given our recent past. What is the implication then, Caroline, for the markets and the French economy?
So, of course, we've already seen the reaction on the markets over the past couple of weeks since Bayrou called this vote of confidence on August 25. We've seen the impact on the French banking stocks. We've seen the impact on the construction stocks in France. And, of course, on the spreads, the difference, the spread between the French and the German 10-year yield increasing by about 10 basis points, around 80 basis points. And, of course, we could see this situation worsen in the case, which is unlikely, of a resignation of President Macron. According to CT, the spread could go up to 125 basis points. But as I was mentioning, obviously, the danger perhaps for the markets would also be an increased uncertainty and potentially further down the road, not enough tightening of public finances. According to Bloomberg Economics, for example, if nothing is done in terms of the debt load of France, the debt to GDP ratio could go from 115% today to 125% by 2030. So perhaps in the short term, Beirut's fall is priced in by the markets, but the longer term fiscal uncertainty for France is not fully priced in yet.
Okay, Bloomberg's Caroline Gonnin in Paris for us, on the ground for us on another pivotal day for France. Caroline, thank you. To the US now, where President Trump has confirmed the top 3 candidates to replace Fed Chair Jerome Powell, including White House economic advisor Kevin Hassett, Fed Governor Christopher Waller, and former Fed Governor Kevin Warsh. In an interview yesterday with Face the Nation on CBS, Hassett spoke about the role of the central bank.
Central bank independence is something that, as you saw, there was a hearing this week about that Democrats and Republicans in the White House all agreed about. Now, the question is, has the current central bank been as independent as we would like, as transparent as we would like? And I think that there's some dispute about that.
Okay, so let's bring in Bloomberg's Valerie Teitel now. So, Val, we are down to 3, it seems, at a time when traders now, markets are pricing in almost 3 cuts from this Fed by the end of the year.
Yeah, we're still pricing in that dovish shift from the Fed, regardless of this Fed chair pick, but maybe a bit of comfort to the markets that a wild card candidate hasn't made it into the final 3. We just heard from one of those candidates, Kevin Hassett, just there speaking on the Sunday press. He was asked if he was preparing an overhaul of the Fed. He said that was something he currently isn't working on, but it comes a few days after Treasury Secretary Scott Bessent wrote an op-ed in the Wall Street Journal calling for a review, an independent review of the central bank, including its monetary policy framework and its powers. Kevin Hassett was also asked what he thought of the BLS data, if he thinks he can be confident in it. He is backing the administration's view that the data does need to be improved. The surveys do need to be monitored.
Of investment in the U.S. And yes, part of the method when they are setting up these plans is they are setting their own workers, they are sending their own subcontractors to work on the construction of these plants. So these companies, whether it comes to Samsung, Hynix, Hyundai, or LG, they must be thinking about what it means for those pledges. The U.S. trade deal with South Korea included $350 billion of investment pledges. You have to wonder what's going to happen with that money. What happens with the shipbuilding association that the U.S. and South Korea announced? How can these companies plan? What does it mean for their operations in the U.S.? A lot of questions, and indeed, as you said, a lot of anger in South Korea over this story.
Okay, Bloomberg's news desk editor Balash Pence with that update. Balash, thank you. And the broad implications of that raid, of course, in Georgia, the US. Coming up, OPEC Plus pushing its bold strategy a bit further with another oil production boost. Prices are higher in the session. We bring you the details. This is Bloomberg.
Up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Right, okay. Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Welcome back to Bloomberg Daybreak Europe. So oil climbing after OPEC Plus agreed to raise production once again, but at a modest rate, highlighting some caution from the group as the market heads into an expected surplus. OPEC Plus says it would restart 137,000 barrels a day of output, defying warnings from Wall Street that the move risks compounding a supply glut. Joining me now is Stephen Strapczynski, Bloomberg's Asia Energy Team Leader. Stephen, talk to us about the implications of this then. The markets are higher, oil prices are higher, and that's despite the fact that OPEC Plus are putting more oil on the market. Just explain what is going on.
So I think the decision over the weekend was shock with no awe, right? You know, there was a surprise that they're adding barrels back into the market. They've surprised the market many times before, and you saw oil prices sort of slip last week with maybe some people hedging their bets, reducing their bullish bets just in case they're getting surprised again. But then when you look at the actual number, 137,000 barrels a day, that is less than the previous 2-month increases. Likewise, this means that they could unwind over the next year basically that remaining 1.6 million barrels a day tranche of supply decreases that they had before. So this overall is being digested by the market as not the worst case scenario. They also want to see what happens going forward if they actually do increase supply this much, because there are a lot of uncertainties which within the OPEC Plus bloc. Saudi Arabia does have the most that they can bring back, but there are other countries that have been increasing over their targets. That means that they might not actually increase next month. Likewise, there are other countries that can't increase. They don't have the spare capacity. So how many actual barrels reach the market is another question. So I think folks are also waiting for that. Now, going forward, there will also be a focus, again, on winter, because when you look at that, that could also increase the sort of bullish situation for the market.
Okay, Stephen Strapczynski, Bloomberg's Asia Energy Team Leader, with a context on what to watch as to whether or not these barrels will actually be put onto the market, whether some of those OPEC Plus managers members can actually manage to do that, given some of the challenges they face. Coming up, thank you, Stephen, coming up as the world becomes increasingly reliant on AI, are we ready for the surge in power demand from the data centers behind the technology? We'll have that story and break it down for you. That is next. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and centre.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Tech is integrated into every aspect of our lives, from finance to defense, AI to entertainment, and from the road to the stars. Bloomberg brings you the latest stories from the people and companies pushing the tech sector to new frontiers and the politics that shape global tech markets. I'm Tom Mackenzie in London. Watch Bloomberg Tech Europe. New episode Friday, only on Bloomberg Television.
Welcome back to Bloomberg Daybreak Europe. Now, around the world, economies, of course, are increasingly reliant on AI, at least moving in that direction, and fueling a surge in data center construction and in the power those data centers use, which is significant. Natalie Libanda-Brata, an analyst for Bloomberg NEF's US power team, joins us to discuss the significance of that power demand growth and what the trajectory is. So talk to us. Good morning. Thanks for joining us, Natalie. There has been this huge demand, of course, and we're seeing data centers being built out in the Middle East, in the US and Europe as well. What are we seeing in terms of the demand for that AI and what it means in terms of the size of some of these data centers?
Yeah, so we're seeing AI data centers being much larger than traditional data centers. Last year, a typical data center was 15 megawatts. The ones designed for AI workloads are now in the hundreds of megawatts. And in the US, we're even seeing gigawatt scale. A gigawatt is about the power a small to mid-sized US city needs. And this really has to do with the computing power that training these large language models need, and this is only set to grow.
Gigawatt data centers. Yeah, we've seen reports of that. What does that mean? I mean, how much energy is a gigawatt data center going to need, essentially?
It's going to need a lot. We're seeing that global data center usage will quadruple in the next decade. Today, we estimate that data centers are about 1.5% of global electricity demand. In 2035, this could quadruple to close to 5%. In fact, if data centers were a country, they would be the fourth largest energy consumer in the 2030s, only behind US, China, and India.
Talking of the US, in terms of the scale, the size and scale, the largest data center market today, how much power will those centers need compared to, for example, other sources of demand, like electric vehicles? How does that compare?
Yeah, so the U.S. is home to the major tech giants who are all racing to build the next generation of large language models. So we see that data centers are by far the largest source of near-term power demand, outpacing that of electric vehicles, hydrogen, or any other sector. Yeah.
Okay, so it doesn't really compare. It's just that demand for energy for data centers is just going to outstrip EVs.
Yes.
And so that's really significant going forward. Natalie, thank you very much indeed for breaking down what is happening in terms of the data center build and what it means for power demand, the challenges. We're seeing that on the grid already in the US, aren't we? Natalie, thank you. Natalie Libanda-Brata, who, of course, is covering this for us from BNEF. And all the details, of course, you can find on Bloomberg.com and on The Terminal. Sticking with tech news, Reuters is reporting ASML is poised to become the biggest shareholder in French startup Mistral AI, but taking a 1.3 billion euro stake. That's according to the report, of course. The Dutch semiconductor equipment maker is putting up the lion's share of a new fundraising round that will give it a board seat. But both ASML and Mistral have declined to comment to Bloomberg. We reported last week that Mistral was finalising a 2 billion euro investment that values the company at 12 billion euros. And President Trump has threatened to investigate the European Union after the bloc fined Google 3 billion euros for allegedly exploiting its advantage over rivals. The EU also ordered the search giant to stop favouring its own advertising technology services. Trump called the action very unfair and said his administration will not allow the, quote, discriminatory actions to stand. And China has confirmed that President Xi Jinping will take part in a virtual BRICS summit today, convened by Brazil, to discuss Donald Trump's trade policy. She will be joined by Russian President Vladimir Putin, but India's Narendra Modi will skip the meeting. Coming up, we will be speaking with Douglas Yates from the American Graduate School in Paris about what happens if the French government falls, which looks increasingly likely. That analysis is coming up. What next for France? That is next. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachi in Tehran, and this is Bloomberg.
Good morning, this is Bloomberg Daybreak Europe. Happy Monday. I'm Tom Mackenzie in London. These are the stories that set your agenda. Japanese stocks rise while the yen slides as investors brace for the departure of a fourth prime minister in 5 years. The focus now on who will succeed Shigeru Ishiba. And in France, François Bayroul's government looks set to collapse today as he faces an uphill battle to win a confidence vote. We discuss what it means for the country's massive debt load and for wider markets. Plus, keep on pumping. OPEC Plus defies the doomsayers with another boost to oil production as the alliance looks to grab more market share. European futures on the front foot this morning. Fed bets, of course, underpinning some optimism across these equity markets on a weaker jobs print on Friday. Expectations that you get more than 25 basis points, 27 basis points priced in for September the 17th, almost 3 full 25 basis point cuts priced in now by the markets by the end of this year. European futures up 0.4%. FTSE 100 looking to add 23 points. S&P futures, after ending the session a little negative on Friday, looking to add just 0.1%. And Nasdaq 100 futures pointing higher by 53 points. These equity markets are still, of course, near those record highs. Let's flip the board and have a look cross asset. You did see, of course, gains in the Treasury markets on Friday on that weaker job sprint. Some of that being paired in the session today with the 10-year at 4.09 and yields up 2 basis points. So a little bit of selling on the benchmark 10-year. The pound at 135. Brent gaining on that OPEC Plus decision up 1.2%. And gold a little weaker at 0.1%. Briefly, of course, we've been focusing on the Japanese markets as well, and we'll get to that story towards the end of this block. But let's get back to France, where, of course, The budget crisis and confidence vote in France is front and centre. Bloomberg's Caroline Connat is outside the French National Assembly with a guest. Caroline.
Yes, Tom, and of course I am with Douglas Yates, 30 years of analysis of French politics here in France, a professor at the American Graduate School in Paris. Douglas, good morning.
Good morning.
So, was it a good method for François Bayrou to call this vote of confidence today, given the chances that he's likely to fall tonight?
Well, in his own government, they were somewhat disturbed because apparently he didn't consult them. A half hour before the announcement, he told them. And so insiders who've been quoted in Le Monde and the press have said he thought he could convince people, and he was wrong. On the other hand, it's probably good because if he was going to lose, this gives time for the new government to prepare a budget. Because either France votes on a new budget with bigger defense spending, with some cuts, or they're going to roll over the old budget again. And that means more deficit spending, and it means they don't have the ability to do what they need to do for Ukraine.
We lived that, obviously, just 9 months ago, with the fall of Michel Barnier, Bayrou's predecessor. Today, what are currently President Macron's options after Bayrou's fall tonight?
Well, because we've done this now 7 times, I'm very well rehearsed. The first thing he could do, and that was surprising, is absolutely nothing. He did that with Gabriel Attal. He left him in office as a caretaker government who can't pass any laws, but who continues to administer. The second is he could appoint a new prime minister. And the third is he could call snap elections. And that would put, like a general election in Britain, that would put everyone's seat at risk.
But who has any interest in these snap elections? Is that the National Rally? They've been really calling, Marine Le Pen has been calling for new snap elections, even though she's currently banned from running for office. So why does the National Rally really want snap elections?
Well, although she herself has problems after her conviction for corruption, Bardella is very popular. He's drawing young voters into the party framework who'll be ready to vote in the next presidentials, and her party will come out as the #1 party. Very far from a majority, but she could possibly, the National Front, the Rassemblement National, could possibly increase its vote if there were snap elections.
There is actually an interesting time here, because today Marine Le Pen is actually going to find out the date of the appeal for her trial, which is going to happen next year. So she's probably going to find out whether she can actually run for the next presidential elections in 2027. Is that what she's eyeing for, like kind of skip the snap elections, kind of skip her seat, or, and obviously, you know, it's kind of like her turn in 2027.
Right. So once you've been convicted of a crime, qualified for a certain number of years from running for office. But only 4% of the politicians who have been convicted have been disqualified before their appeal. So what we're looking at here is, if there's a snap election, her appeal hasn't been heard. She has a very high probability, she asked the Constitutional Court, that she could run. But in 2027, when the normal election will occur, if her appeal has gone through, and as we're expecting, she's not found innocent, then she would be disqualified.
Of course, so perhaps that's why she wants to call snap elections in the short term. Obviously, the other option for Macron in the short term is to name a socialist prime minister, moderate left-wing, something he hasn't tried yet over the past couple of years when we've had already 4 prime ministers. What is the risk here in terms of the majority passing a budget, having a socialist budget in France?
Well, the Socialist Party, Olivier Faure, actually insists that the socialists are the only ones who could pass pass a budget without using Article 49.3, which all the governments have used. We don't know if that's true. A lot of observers had said that the right-wing party, the center-right, the Republican, who are the rivals of the socialists for 4 decades, would oppose that. But I think it would be a good idea. And remember, Macron himself was a socialist minister.
What about the investors' confidence? Because obviously a socialist budget would mean that the savings will be watered down. We've seen the proposal from the socialists saying only 22 billion euros of savings, 44 billions were planned by Bayrou. Do you think that's going to create more uncertainty for investors?
Yes, and I think that's what Bayrou was playing to. He's saying our debt is suffocating us, and we need to do something about it. In the sense that that's really the role of the president to give those lessons and not the prime minister. That was Macron's fault. But Bayrou has spoken the great truth. France is overly indebted, irresponsible in its spending, and it's making more commitments to its European partners in the upcoming war in Ukraine. So it needs to spend more. And in order to do that, Bayrou says we've got to find the money somewhere.
What is the vision from abroad, from the US, for example, about this whole political mess in France?
Well, I think that from the Trump administration's point of view, anything that's bad for Macron is good for Marine Le Pen.
Douglas, thank you so much for your time this morning. Douglas is professor at the American Graduate School in Paris for this analysis just a few hours before François Bayrou's scheduled fall collapse tonight here at the National Assembly.
Caroline Gonnin in Paris. A busy day, of course, for Caroline and the team. Caroline, thank you. Now, some other stories making the news this Monday. Controversial tax hikes on the rich, oil and gas drilling, and how the world's biggest sovereign wealth fund invests its money could all be shaken up by the outcome of Norway's elections today. Labour Prime Minister Jonas Gahr Store is bidding to retain power in what is likely to be a tight contest. Store currently leads a minority government after his coalition partner, the Centre Party, quit in January. And Keir Starmer has told his new cabinet to step up a gear and deliver for the British people as he seeks to fend off the rise of Nigel Farage's populist Reform UK party. The Prime Minister spent the weekend completing a wide-ranging reshuffle of his government, appointing more than 4 dozen junior ministers after overhauling his cabinet on Friday. Starmer's reshuffle was promoted by the resignation of his deputy just days after he appointed new economic advisers. And wages for new hires in the UK rose at their weakest pace in over 4 years, according to a survey which will be closely watched by the Bank of England. The poll by the Recruitment and Employment Confederation and KPMG found starting pay growth last month cooled to levels last seen in March of 2021. And sticking in the UK, the London Underground and staff have started a 7-day strike, causing major disruptions across the tube network and threatening travel chaos at the start of the work week. Let's get more with Bloomberg Daybreak editor Mark Perrier. Mark, what is the situation this morning? How much disruption should we expect?
A lot of disruption this morning. People scrambling to get to work. Including me. I managed to scoop up.
You were impacted?
I got my workout this morning on an e-bike to make it to work, to be here on time. It's basically the system is down this morning. 4 million people a day use the tube, so there's just a lot of scramble to get to work this morning.
We're going to see that scramble unfold, and you've been a victim of it already. What about the economic impacts? Because it's not insignificant, right?
It's absolutely significant. The direct impact on the economy this week will be £230 million. But that's just the fact that people cannot get to work. You have to look at consumer spending, the impact that this will have on the larger economy. It's absolutely great.
What is the likely kind of political impact? I mean, talk us through the rationale for this strike from the unions and what the potential political impact could be then, Mark.
The workers are, the struggle is over pay and working conditions. Mainly the working conditions. They're looking to diminish the working week from 35 to 32 hours. TfL Transport for London refuses to do so, saying it's not practical, it's unaffordable. They have offered a 3.4% increase, which they might be considering, but basically the system is down this week. But the greater impact on the economy is that this comes at a time when the UK economy is trying to regain momentum. So this basically just creates more negativity, adds to the economic malaise of the British economy.
Yeah, another challenge for the UK economy. Mark Perrier, thank you very much indeed. On the turmoil, of course, expected across London's transport network through this week on that strike. We'll continue to monitor that for you, of course. Coming up, how can startups make themselves stand out from the tens of thousands of other companies then fighting for investment? We're going to discuss that with Peter Spex from VC firm Creandum. It's a VC firm that has backed the likes of Klarna, Spotify, amongst a host of others. We'll get that view coming up. This is Bloomberg.
In my opinion, at least, the reason that the U.S. is so creative and innovative and has so much interesting development and has, most of the largest trillion-dollar businesses is because we have the best capital markets. And capital market development is really what creates the funding in order to pursue ideas. So in America, any idea you have, there's a market for it. Right? So building markets like the securitization markets in the U.S., really allowed for non-financial companies to get into the financial industry business. And that was really a derivative of making the securitization market so competitive. So building securitization markets and continuing to grow markets and figuring out how to continuously fund ideas, I think that's going to be the next stage of growth for these markets.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Welcome back to Bloomberg Daybreak Europe. Now, Europe is home to an estimated 35,000 tech startups, all, of course, competing for investments. So how do they make themselves stand out? And what do some of these startups tell us about some key trends and key themes in terms of how this ecosystem is going to adjust in the years ahead? Joining me now is Peter Spex, general partner at the VC firm Creandum, which was an early backer of companies including Spotify, Klarna, and more recently, Lovable, which claims to be the fastest growing software company on the planet, Europe's largest unicorn as well. Peter, thanks for joining us bright and early in the studio this morning. Let's talk about these seed businesses, the seed startups that you guys have focused on, the 50 of the most exciting, and what it tells us about some trends in this ecosystem as you look ahead. What are you seeing? What can you derive from these 50 that you've zeroed in on?
Yeah. I mean, for context, together with around 25 angels and pre-seed investors, we mapped out the 50 most promising early-stage seed companies across Europe, what we call the Euroseed 50. And it's some interesting trends that you can see again on them, as it's like a snapshot of what is happening right now and with the hottest seed companies. And you can look at what they're building, you can look at who is building them and where they're building it. And I think the interesting part from that is what they're building. It's very clear among those companies that the trend is towards agentic AI on the application side. 90% of the companies are building in that across business functions or verticals.
90% of the 50 are building on
and focused on agentic AI.
Yes.
Is that a concern for you? The number is. Does that suggest there's maybe a bubble there, a bit of froth? Is there a herd mentality there?
For me, it's, I think, in particular, a reflection of the opportunity right now and the areas where we see the fastest growth of companies. And AI is, as you know, one of the mega waves that's happening, similar to the introduction of the internet or the smartphone. And I think it's very natural for founders now to gravitate towards that.
Okay. Talk to us about what's happening on the funding side, because it's been challenging. Some segments of AI, look at companies like Lovable, they have not been challenged in terms of raising capital. Other parts of the ecosystem, it's been tough. Is funding starting to improve? What are you seeing in terms of the ability for these startups to raise capital?
Yeah. I think on the early stage side, we see a very good amount of funding happening, especially across Europe. On the late stage side, I think we still need more European native growth capital, as a lot of that is still coming from the US. But overall, what we see, if companies show fast growth, in particular in hot areas like AI right now, funding is available.
And which regions are standing out to you in terms of regions, parts of Europe that are on the front foot at this point, and what they're getting right?
Yeah, I mean, if we look at the EuroSeed 50 again and look where those 50 companies are built, 19 out of the 50 are being built in the UK. It's followed by France and Germany, and the Nordics, with Sweden as a powerhouse coming as fourth. And I think Spain is maybe the ecosystem on the rise to watch on a smaller scale.
Oh, that's interesting. So Spain is an ecosystem to watch going forward. Look, one key company you've backed that's in the headlines right now is Klarna, and I realise you're restricted in terms of exactly what you can say on this, but you've backed Klarna. They're going to be going through an IPO. They're looking to raise about $14 billion, and they'll be listing in the US. What does that signal? Could Klarna unclog the IPO pipeline for European startups?
I mean, Klarna is the real first big tech IPO that is happening in a while in Europe, or from a European company.
Yeah.
And so I think it's a very exciting moment for the whole ecosystem. And the hope is, of course, that this is a signal to have more sort of like companies choosing the way of going public again in the future. The question mark, of course, is will they list in Europe or will they list in the US? And while Klarna choose the US way, we hope, of course, to see in the future more of that in Europe. But a bit more needs to happen in sort of like reforms and making it more attractive to list here.
Okay, well, so as a European, you'd like to see that, but as an investor, do you really give advice to your startup? I mean, does it not make sense as an investor to encourage your companies, your portfolio companies, to think about listing in the US, given the liquidity, given the depth of the markets, given the investor appetite there?
Choosing a place to list is an economic decision. So whatever is best for the company is the thing that we are also aligned with. But as a European, I, of course, wish that we will have more of that in Europe, because the European ecosystem benefits downstream from it.
Well, another company you've backed, and we mentioned them in the intro, is Lovable, which is this vibe coding software startup. It's been, I mean, incredible growth. And again, they claim to be the fastest growing software company on the planet. They've raised a lot of money. The growth has been incredible. And speaking to Anton Osika, the CEO, a few weeks ago, he said he's determined to build out a generational business in Europe and not to list in the US. He wants to be listing here in Europe. Do you think that's realistic for Lovable?
I mean, for Lovable, it's still in the early days. I mean, if we reflect on it, a year ago, the company didn't have any revenues yet.
Yeah.
And 8 months later, they were at 100 million plus revenue. And so it's still some time to go until then. But Anton is really, really focused to building a powerhouse company, a generational company, a global company from here.
And we're at the point where the ecosystem here is maturing, and we're getting companies like Klarna, like Spotify, like Revolut, like Palantir, who, because of the size and scale, are seeing their employees leave. They've got some equity, they've got some cash, and they're starting up businesses of their own. How much of a catalyst is that for the European ecosystem?
This talent flywheel, which you mentioned, is a really important one. And we call it founder factories. And Klarna, Spotify, Revolut, they've produced a lot of founders later on. And I think the current biggest founder factory, also among the EuroSeed 50 that we're seeing, is Palantir. So a lot of founders coming out of that, building in particular B2B companies, enterprise software companies. And in the EuroSeed 50, for example, 10%, so 5 out of the 50 companies are built by ex-Palantirians.
Okay, 10% are built by people who formerly worked at Palantir. Peter, thank you very much for coming in and giving us some perspective in terms of what's happening, particularly at the early stage when it comes to the tech ecosystem across Europe and some of the opportunities as well. Peter Speck, General Partner at Creandum.
Don't forget, the next episode, of course, Bloomberg Tech Europe is going to be dropping this Friday, 6:30 a.m. in London, or London time. We're going to be looking at how AI is changing the way we fight diseases, including an exclusive interview with Demis Hassabis, the CEO of Isomorphic Labs and Google DeepMind. That episode dropping at 6:30 a.m. this Friday, and then will be on YouTube as well. Now, switching focus to sport, Carlos Alcaraz has won his second US Open title, outplaying Jannik Sinner, the world #1 and defending champion. The title sees the 22-year-old replace Sinner as world #1, returning to the top ranking for the first time in 2 years. The match in New York was delayed by half an hour for extra security measures, with Donald Trump in attendance. The US president was greeted with a mix of cheers and boos. Plenty more coming up. This is Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
We had the quickest stock market recovery in history. We're at new highs in August. And, we're not going to do economic policy off of one number. We believe that good policies are in place that are going to create good, high-paying jobs for the American people.
Okay, US Treasury Secretary Scott Bessent, of course, speaking there. Let's get to the oil story with OPEC Plus then, coming through with that announcement of additional barrels on the market, 137,000 barrels per day. The market reaction, in fact, has been positive. Oil prices are up on the view that maybe they could have gone a little bit further. But longer term, there is an expectation that this market is going to face something of a glut. You do have the 50-day, 100-day and 200-day moving averages charted out here in terms of some of the technical analysis as we look at prices in that $60 to $65 range. But to what extent does that break down into 2026? Part of that will go down, of course, to what's happening on the trade front and demand out of the US and, of course, China as well. But OPEC Plus deciding to put more barrels on the market, but maybe less than some had expected. Let's flip the board and have a look at what's happening in France. Of course, a huge day with the very strong likelihood that this government collapses over in France. And French stocks, as a result, pricing this in. The question is, what happens next? You could spend weeks, months wrangling over a budget that they have failed, of course, to pass. This is the valuation premium that French stocks have eroded versus their German counterparts. The PE ratio, the CAC current now 14.6, so valued much more cheaply than their German equivalents. returns. And that story, of course, in focus, how much is being priced in longer term to French assets on the political uncertainty. Let's flip the board and briefly check in on a different story. And this is the wealth gains coming through for the Trump family. 7.74 billion. A lot of this is tied to crypto. And a full 1.3 billion has come through just in the last couple of weeks, with the Trump family backing ventures like World Liberty Financial and American Bitcoin Court. So they are benefiting in terms of their exposure to the crypto industry. That amount, by the way, rivaling the 1.3 billion, the value of their golf courses and some of their resort properties, some of their legacy properties. So this Trump administration and the Trump family, I should say, benefiting from exposure to crypto. Now, the opening trade is up next. They'll be walking through, of course, what's been happening in terms of the pricing around the Fed on that weaker jobs print and the French political uncertainty, what it means for French assets. All of that coming up. The opening trade is up next. This is Bloomberg.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico. This way or that way, it will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates and complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Monday morning, good morning. I'm Guy Johnson alongside Valerie Teitel and Lizzie Burden. We're an hour to the opening trade. What do you need to know? France firmly in focus this morning. Prime Minister Francois Bayrou's government will likely fall today. We're going to take you live to Paris for the details on that story. Sticking with the theme, Japanese Prime Minister Shiba is to step down. Stocks actually reacting positively in Tokyo as the yen falls. And it is another big week for the bond market as attention turns to US inflation data Tuesday and Wednesday, Val.
These markets are faring okay after that disappointment NFP on Friday. We're still in the green when it comes to S&P futures, but just barely. Euro Stoxx futures up 0.3%. The dollar really is going nowhere. Euro dollar at 117.15 ahead of that vote of confidence from France tonight. We'll get more on that story in just a moment. U.S. 10-year yields backing up just a bit from their rally on Friday, up 1 basis point to trade just below 410. The countdown to the opening trade starts right now.
Monday morning, good morning. Here in London, we're coping with a tube strike. In Paris, they are coping with political turmoil. We've got a lot going on around the world. We'll focus on Japan in just a moment, but France feels a little closer right now in terms of what we are watching. And Lizzie, it's a big day.
Yeah, we've got political upheaval in France, the UK and Japan. But we can first, before we talk about the market reaction, go straight to Paris for an update on what's happening ahead of that confidence vote. We can go to Caroline Gonin. She's outside the National Assembly in Paris. Caroline, Beirut, all but certain to go. What happens next?
That's right. We're just a few hours away from another government collapse in France, just 9 months after Michel Barnier's government collapsed in December. François Bayrou tonight will almost certainly fall in this vote of confidence that he has himself called for September 8 to increase the awareness of the French, he said, about the debt issue. And while many opposition parties have said they do agree on the debt issue in France, the need to tighten public finances, they do not agree on the method used by François Bayrou, which is to call this confidence vote before any discussions on the details of the budget. This is why the charm offensive of last week has not paid off at all. The Socialists and the National Rally of Marine Le Pen have all said they will support the fall of François Bayrou. What happens next really is in the hands of President Macron. At the moment, the most likely scenario is that he will name a new prime minister over the next few days. And in fact, many in his entourage are saying he should act really fast, really quick this time, not spending weeks trying to find the right person like last time, because we've also got something else looming, the social anger in France. In 2 days, some far-left groups have called to block the country. And next week, September 18, there is a more structured national strike called by all the unions. So Macron will definitely act quick. And at the moment, he has ruled out both snap elections and resigning.
Okay, Bloomberg's Caroline Gonin in Paris. We thank you so much. We'll come back to you, Caroline, at 8:30 a.m. London time. You'll be joined by the French Socialist MP Arthur Delaporte. But we really need to talk about market reaction here.
Cool.
Look, there has been a lot
Avant
of
qu'on me coupe,
movement
je voudrais
since...
faire ma promo.
I think we could just hear a little bit of Caroline there. But look, there's been a lot of market reaction since, as she says, Bayrou expected to lose, but that's priced in already. You've seen the CAC falling since that was announced. We've seen the oat spread widening. It was 79 basis points the last time I checked. And now, as she says, it's really about what happens in the coming weeks and months. Do you see a significant weight on consumer and corporate confidence? Do you see more of a weight on French banks and domestically linked stocks?
Don't know yet, but we need to hear from Macron. We need to figure out what's going to happen. We don't know what's going to happen because he's not saying anything. Macron needs to figure out what he needs to do. He's got to do it quickly. The markets can't hang around this time. So I think that's the situation that we find ourselves in. Get on with it. You can't have 3 or 4 months of uncertainty because, as Lizzie says, that's going to hit the economic data.
Yeah,
actually, you could argue French bonds have done okay.
Yeah.
During this process.
Absorbed the supply of last week pretty decently. They hung on to the rally that was led by Treasuries on Friday. But I thought it was pretty interesting what Bayrou said on Sunday to French TV, saying everyone is whistling as if this debt problem doesn't exist. And you have to think whether whatever government is going to be formed is going to seriously tackle this issue or not. It's clear that he's had some issues, getting anyone on his side, likely the next government is just going to keep on whistling.
Which is the same problem that you have for governments around the world. Look at the UK, and when you talk about the realities of the fiscal situation, nobody wants to hear it. But then at what point do the bond vigilantes say,
we need a crisis? Do you need a crisis? There's lots of editorials being written at the moment about the fact that basically the Labour government is currently failing, that what we need is for the Labour government to fail, so that the left and the right have then failed, so that everybody looks and goes, right, we need to actually address this on a cross-party basis. You could argue the same thing in France. France needs to come together, stop the political infighting, have a clear view of how to work forward and deal with the deficit, which is the largest in the Eurozone right now. The UK is facing the similar problem. You could argue Japan has many issues that it needs to face, and it's going to be really interesting to see how the bond market reacts to what we are talking about now, which is Ishiba stepping down. He has resigned. Shigeru Ishiba stepping down, basically ahead of what was effectively becoming a confidence vote. But here's the thing with that government, the next government. Are we going to see a new Prime Minister opening the taps? And that's the fear with the JGB market now, is that actually whoever replaces, because Ishiba is a fiscal hawk, whoever comes next may not be, and that's going to be a challenge for the BOJ. Can the BOJ hike in this kind of environment? There's a lot of things on the table there as well.
Indeed, and one of the top runners and riders to replace Ishiba is someone who loves Margaret Thatcher, did you know, is politically conservative, but as you say, wants to loosen fiscally, wants the BOJ to be a little more cautious when it comes to hiking. This is Sanai Takaichi, and so this is what potentially the market could be worried about. But when you talk about the BOJ, our economists, interestingly, I thought, were still expecting an October hike as of yesterday. Let's see whether that changes.
Yeah, so this political instability doesn't necessarily derail the path to normalization from the Bank of Japan. It just delays it again. They see risks, though, rising for that call of an October BOJ hike. But remember, the second front runner behind the one you mentioned who wants fiscal expansion is one that wants more structural reform. So it'll be interesting to see how the market weighs up these two maybe front leaders heading into that leadership contest early October, because they're different pictures.
They are, but the commonality here is quite clear. Structural reform is required. These are economies that can't continue to deliver what they are delivering for their populations at the moment. Change is probably going to be required. Structural reform is going to be required in France, the UK, in Japan, probably in the United States as well, to a certain degree as well, but we'll come on to that in just a moment. There is a theme here.
Yeah.
At what point does it happen, though, and what is the catalyst for it happening?
Yeah, and two more idiosyncratic things to Japan. One, does the new leader change the approach to the US when it comes to trade? Ishiba wanted to get that US-Japan trade deal done before he went. And secondly, do we see more hawkish foreign policy? Because that Chinese military parade clearly struck a nerve in Japan.
Yeah, well, okay, we've talked about Japan. Let's move on to another central bank that is capturing our focus. That is obviously the U.S. Federal Reserve. Trump saying over the weekend, late on Friday, our time, that the top three contenders are still the ones that we had reported way long ago. Waller, Warsh, and Hassett are still the front runners, maybe giving some confidence to the market that a wild card candidate hasn't made itself into the final inches of the race. Remember, the Wall Street Journal reporting that these interviews were being conducted by Treasury Secretary Scott Bessent on Friday. I thought it was very interesting to read Bessent's piece in the Wall Street Journal calling for a full independent review of the central bank, including its monetary policy actions.
And Hassett getting behind that as well, saying, you know, we don't need that mission creep. Interesting as well to have Ken Griffin writing in the Wall Street Journal over the weekend, just really warning Trump that you've got to have an independent Fed, otherwise it's bad for the market.
What do we think about the market reaction to the payroll data? What do we think about the payroll data? What do we think about what is happening here? I've been thinking about this a lot over the weekend. You can make a case for the Fed not cutting here quite strongly. Credit growth is really strong. Unemployment's at 4.3, which is well below average. You could argue an immigration story that is affecting the data we're seeing in terms of the payroll data. You've got an economy that still looks fairly strong. You've got credit growth that looks good. You've got financial conditions that are super loose. Why are we talking, like some people are talking about a 50 basis point cut this morning. Stephen Englander over at Standard Chartered, 50 basis points. Is that really what this economy needs? Are you cutting into a boom at that point in the U.S. economy?
Well, it doesn't look like a boom in the labor market. The three-month run rate at 27,000, that is pretty disastrous.
Why is it at 4.3? Why are we still only at 4.3? Which is it's not. Is it disastrous when you've got an unemployment rate of 4.3?
That is a 4-year high.
Yeah, okay, 4-year high. but but well below average. And well below the kinds of rates that cause problems in the United States economy. All the other data points to a really solid economy. I'm just trying to play devil's advocate here.
I think, well, it's good to play devil's advocate because we know that the BLS data, the non-farm payroll data, has had a lot of skepticism over whether we can trust it. So instead of just looking at the labor market data, we do need to widen out the sphere to take in the totality of data, not just on the labor market, but on the U.S. economy. But many out there arguing that what Jerome Powell said at Jackson Hole means that he is focused more on the labor market. Sure. And this another weak print and the fact that June was a negative print really solidifies that the Fed will be cutting in September. October is still in question.
Yeah, is 4.3 weak? Is my question. Because
it's ticked up 0.2% over the last 2 months. That is showing a slowing and a loosening of the labor market.
It is. So in isolation, if you came down and looked at all the data in totality, you would say the Fed should not be cutting rates. I agree that the labor market is clearly weakening, but is it weakening because of immigration? Is that the reason for it? And does that have a signal for the economy in terms of what is going to happen with inflation and in terms of growth?
Well, let's see whether it deteriorates further, whether it's bottomed or whether this is the start of a downturn. And clearly that's the question that's in the mind of the stock market.
And remember, we get more revisions from the BLS. Yep. On Tuesday, they released their preliminary yearly revision. So in the 12 months to March 2025, Anna Wong thinks that we could actually get a negative print going all the way back to October 2024. And that the picture we get on the labor market is actually going to look very tepid after these revisions.
Okay, so that's fine. So you've got a tepid labor market. Unemployment, immigration's been a factor. But all the other signals from the U.S. economy during that period are strong.
Can you generate inflation if people are losing their jobs?
Well, you can, clearly, because if the labour market's been weak since October, you've got inflation that is north of 3% since then. So you clearly can generate inflation if you've got a weak labour market. If the data that is going to be revealed shows that the labour market's been weak since October and you've got inflation, yes, you can, is the answer to that question.
Yeah, and look, I think some of this Fed pricing will get pulled back on Thursday. We have CPI. Headline is expected to tick up to 2.9%. And most importantly, core inflation expected to be above 3 for a second month in a row. So we might see some of that pricing be shifted back after CPI on Thursday.
And of course, we're now in the blackout period, so even more of a focus on that data. You had Goolsbee saying on Bloomberg TV, the milder the CPI is, the better I'll feel about focusing on the labour market.
Okay, so let's see what the data reveals. Peter Kinsella is going to be joining us from Union Bank Privé, Forex strategist, global head, is going to be joining us very shortly. I hope. There is a tube strike on in London. I'm just going to caveat everything this morning with that. Nicholas Forrest, Candriam, CIO, joining us on France. Nancy Curtin, Alti Tiedemann, CIO. She was really bullish last time she was on set. Does that continue? And Jens Eisenschmidt, Morgan Stanley's chief European economist. We have an ECB meeting coming up this week. I think that's going to be quite boring relative to everything else.
How dare you? I'll be there. It'll never be boring.
Yes, Lizzie will be in Frankfurt covering the ECB for us on Thursday. That is the main highlight of the week, at least when it comes to central banking in Europe. We do have a lot else to deal with. That main one catalyst today is the French vote of confidence happening later today. On Tuesday, Apple's unveiling its new iPhone 17 with a lot of the focus on the price hikes behind their new devices. Wednesday, U.S. PPI, which is very unusual to get PPI before CPI. It happens quite rarely. It's happening this week. Thursday, U.S. CPI, that ECB rate decision we just discussed. And Friday, some more data on the UK. We get GDP data, the monthly GDP data out of the UK.
The tube strike on this week as well.
Oh, again. Look, so Monday to Thursday, little to no service. We've got an estimate of the economic cost here from the Centre for Economics and Business Research, CEBA. They say it's going to cost £230 million in a week, as you say, Val, where we've got UK GDP out, expected to stagnate, not what the government wants. Interesting, if you get a strong enough GDP print, that could take a November cut from the Bank of England off the table. So I want to forget about these strikes.
Can the government at this point, given what else is happening, be seen to cave to another union, which is the criticism that happened after it was elected, that it basically gave the train drivers what it wanted, and that has been a criticism that has stuck. If we get back into a season of strikes, how will this government deal with that?
It's another form of the doom loop. If you're giving away money and removing GDP, removing growth, you get less tax revenue to pay them in the longer term. Settle it quick.
We'll see what happens.
I guess Uber is going to be chairing these tube strikes.
So there is one winner out of all this the other day, and he was not happy about it. He says he wants a line of tube riders outside the train station to pick up, and they won't have any.
Oh dear, I still think Uber's going to have a pretty good day here. What else do we need to know this morning?
Well, let's get to that. President Trump saying that Hamas needs to accept his terms to end its war with Israel. His post on Truth Social comes after Steve Witkoff, Trump's envoy to the Middle East, sent a new proposal to Hamas last week. According to XAUUSD, the deal includes releasing all remaining hostages in exchange for ending the war in Gaza. But Hamas says that it needs Israel to fully withdraw troops from the Gaza Strip to agree to these peace talks. Gaza's Ministry of Health says that the death toll in the enclave has surpassed 63,000. Elsewhere, President Donald Trump says that he thinks Russia's war with Ukraine will be settled soon. The US president reiterated that he's not happy with Russia, saying that he'll be speaking with President Vladimir Putin very soon. It comes after Ukraine and its capital came under a massive Russian drone strike on Sunday, killing at least 4 people. Kyiv's mayor said that the strikes hit residential areas of the capital, while several other buildings also caught fire, including a government building. And oil climbing after OPEC Plus agreed to raise production again, but at a modest rate, highlighting some of the caution from the group as the market heads into an expected surplus. The group says it would restart 137,000 barrels a day of output in October, and the hike signals a reversal to cuts that were initially set to replace and remain in place until 2026. So a bit of a surprise market reaction perhaps to this supply hike. As I say, because it's a modest one, 137k, but maybe we get that drop over the longer haul.
Another tick higher in oil over the last few minutes. The reason for that, the EU apparently weighing new sanctions on Russia. That will hit the banking sector in Russia, which is already beginning to struggle, and obviously the oil trade that we have seen Russia relying on. The Union is apparently exploring new sanctions on about half a dozen Russian banks and energy companies. Latest round of measures to hit Vladimir Putin, but I will add, this is not the US wants secondary sanctions, and this is not secondary sanctions. The US wants the EU to kind of do what it's doing on India and on China and reflect what is coming out of Washington right now. That is definitely not, it seems, within this package, and you do wonder whether this is going to be too weak a package, therefore, to mollify the hawks in DC and what they're saying right now. It would be hard to believe that the EU would hit India hard, and it's interesting that you could argue that the EU is benefiting because India is buying Russian oil, refining it, and then shipping it out to the world. Some of that is being bought, you could argue, within the European Union.
Yeah, we did hear from Trump on this topic when he was speaking to reporters after he attended the U.S. Open, saying he will be speaking to Putin very soon. I think he was asked also about the secondary sanctions, and he reiterated that nobody is tougher on Russia than me, but it's kind of leaving a lot out there about what the U.S. is going to do, actually, in retaliation to Russia's strikes on Kyiv over the weekend.
OK, what have we got coming up for you? ASML is reportedly set to become the top shareholder in Mistral AI. We're going to check in on the shares of the Dutch chip giant at the Open. Plus, we'll be live in Paris ahead of today's crucial vote, and we're going to hear from the French Socialist MP, Arthur Delaporte. Up next, though, back to the markets. Bond and FX traders following this week's big data. It's inflation is in focus now. We've got rate decisions. We've got the latest out of Japan. We've got to think about what's happening in Paris. All of that firmly focusing on the FX trade and the bond trade. Any questions? You want to join the show? You want to get in on this conversation? This is how you do it. IB, the plus symbol, BB, TV Go is the function. It's down there on the right-hand side of the screen. Get involved. This is Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month only on Bloomberg.
Bringing you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Alberta, Canada, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
One of the 8th, good morning. The Nikkei is about to close. It'll be closing in 8 minutes. It's up by 1.43% this morning. The reason for that is the yen is down really quite sharply. This, as we see, the resignation of the Japanese Prime Minister Shigeru Ishiba. It is setting in motion his resignation, a leadership race that will, of course, be closely watched by global investors.
I thought that as Prime Minister, I needed to take responsibility for the results in the election. Having seen the U.S. trade negotiations through, I felt that now was the right time to stand down and give way to my successor.
Ishiba says he will stay on as Prime Minister until his successor takes over. Joining us now from Tokyo for the latest is Bloomberg's Yoshiaki Nohara. Good morning, good afternoon. Thank you very much indeed for joining us. So just walk us through the process of what happens next and who we should be looking at in terms of who could succeed Ishiba.
The next step is that for the ruling Liberal Democratic Party will decide when the party is going to hold its leadership election to replace Prime Minister Ishiba. And we are hearing that at this point that schedule is going to be decided tomorrow. And once that's decided, the candidates will decide, whether they're going to formally announce their campaign or not. And what we are focusing on is at this moment is 2 candidates, I would say. One is the Sanae Takaichi, who is coming from the right-wing camp of the LDP, and she's known for the aggressive monetary policy easing to maintain stimulus in the economy. And also we are paying attention to the Shinjiro Koizumi, who is the son of the legendary Prime Minister here, and given he is the current agriculture minister within the administration now, he is seen as more of somebody to stick to some continuity in policy to some extent. That's what we are looking at this point.
Yoshiaki, we thank you for taking us through those runners and riders. Yoshiaki Nohara, great to see you. Well, from the runners and riders for Japan's leadership to the runners and riders for the Fed's leadership, President Trump confirming that the top 3 candidates to replace Fed Chair Jerome Powell include the White House economic advisor Kevin Hassett, the Fed Governor Christopher Waller, and the former Fed Governor Kevin Warsh. In an interview yesterday with Face the Nation on CBS, Hassett spoke about the role of the central bank.
Central bank independence is something that, as you saw, there was a hearing this week about that Democrats and Republicans in the White House all agreed about. Now, the question is, has the current central bank been as independent as we would like, as transparent as we would like? And I think that there's some dispute about that.
Kevin Hassett, one of the 3 finalists to become the next Fed chair on central bank independence. He was also asked whether he's preparing an overhaul of the central bank. He declined to say that he was, but it comes a few days after the Treasury Secretary Scott Bessent wrote in the Wall Street Journal he wants a full independent review of the Fed and its monetary policy power. He was also asked about the BLS data, whether we can trust it. He does agree with the administration that the data needs to be addressed. They do need to do things to modernize the survey. And I want to say that the revisions really don't stop with Friday's data. We have more to come on Tuesday from the BLS. They announced their yearly revisions from 12 months up until up until March of this year. Our own Anna Wong on Bloomberg Economist thinks that October can actually be revised and negative, and this could give us a worse glimpse or worse feeling on the U.S. labor market after June was revised negative on Friday's payroll print. But this kind of, I guess, softening of the U.S. labor market and expectations that it'll continue to soften is really what led that powerful rally in the front end. 13 basis points of a rally at the extent of the move on Friday. We have walked some of that back, but the market is still pricing in, Guy, a small chance of a 50 basis point cut from the Fed in 2 weeks' time.
Yeah. And you wonder what signal that would send and what message the market would take from that. It's going to be an interesting few days. We're certainly going to watch that inflation data coming up. It's going to be a firm focus Tuesday, Wednesday. But for Monday, we focus on what is happening in France. French bonds have just opened. We are up in terms of the yield on the 10-year, but not by much. We are up lower than we are seeing on, for instance, the German bond market. We're going to take you to Paris next. Nicholas Forrest, Chief Investment Officer at Candriam, is going to be joining us to give us a take on what we can expect next in France. I will leave you with a live shot of Paris as we count down to that vote and news on who comes next as Prime Minister. This is Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Applications have been received positively both in Kenya and UAE, and we are optimistic that we should be able to open the office in the fourth quarter. We think the Middle East have deep capital sources. It has strong logistics for trade, and it is a strong center for investment. And we are seeing increasingly the global GDP is increasingly becoming overweight in Asia and Middle East. So that linkage with the middle income segments growing in India and China, they will provide a very strong market.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Monday morning, good morning. 30 minutes to the start of trading here in Europe. This is what the future picture looks like. Actually, all right. So far, so good. This is the story we're looking at across Europe. As you can see, actually, CAC futures are positive this morning, but European futures generally are fairly positive. I would also mention that the Nikkei is closing right now. Yen down, equities up in Tokyo, despite the political turmoil, maybe in spite of political turmoil that we are seeing. The yen is down, dragging equities higher.
Yeah, also a question of whether JGBs, the rise in 30-year yields, will be knocking European fixed income. It doesn't seem so at the moment. We still have German 10-year yields basically trading pretty solidly, unchanged. French 10-year yields as well. But those JGB yields just in the long end crept up overnight, higher by 3 basis points as we begin to worry about perhaps a new fiscal expansionary policy coming out of a new Japanese leader. But it does seem to be not having very much of an impact on European bonds, nor on treasuries at the moment.
Let's turn our attention to what is happening in France. The collapse of François Bayrou's government looks set to plunge the country back into an acute political uncertainty and heightened doubts over whether any government will be able to rein in the largest budget deficit in the euro area. Let's find out what happens next. It seems almost certain that Bayrou is going to fall today. Caroline Conan is outside the National Assembly in Paris for us. Is it a done deal? And what's next?
It's pretty much a done deal, Guy. In fact, 98% chances, according to Polymarket, that François Bayrou will actually fall tonight. He has called this vote of confidence, but of course, the opposition parties do not like this method. They wanted to discuss the budget before going to a vote of confidence. So the charm offensive of François Bayrou meeting with all the opposition parties last week has not paid off. And of course, what happens next is now in the hands of President Macron, because Bayrou's fall is mostly priced in by the market. What is not necessarily priced in is what happens next. The likelihood, of course, is that he's going to name a new prime minister quite quickly, hopefully, over the next few days. That new prime minister might be from the Socialist Party, something he hasn't tried yet. But of course, that means some question marks for the longer-term trajectory of public finances, because the Socialists have presented a budget with only 22 billion euros of savings, half of the 44 that were proposed by François Bayrou. So that may worry investors, of course, about the longer-term trajectory of the debt picture in France. According to Bloomberg Economics, the debt to GDP ratio could actually go from 115% today to 125% by 2030 if nothing is done. Of course, an even worse case scenario for the markets and for investors would be snap elections or Macron's resignation. At the moment, Macron has ruled out both options. But of course, if the parliament is still fragmented, if the situation remains in a deadlock over the next few months, if they don't manage to pass a budget, he might just end up being forced to call new snap elections next year, perhaps around the local municipal elections in March, so he doesn't have to call the French to the polls twice.
Caroline, thanks for the update. That's Bloomberg's Caroline Conan out of Paris. We thank you. Well, let's stay with the story out of France and bring in Nicolas Forest, CIO at Candriam. Nicolas, we were just hearing there from Caroline, good morning to you, that, look, markets are already positioned for Bayrou's ouster. So what are you positioning for in the coming weeks and months?
Thank you for the question. So first, as you said, it's largely priced, so it's fully priced today. So we have been relatively cautious and negative, but for the time being, we believe that it's fully priced. What is important, of course, is what are the next steps? What are the next steps in terms of prime minister, in terms of potential new elections? But for the time being, we are not expecting dramatic volatility. We believe that we will stay in this high level, in this territory, close to 80 bips.
And as an investor, how much headspace do you devote to the rise of the far right? I get that it's a tail risk, but how do you think about that?
Yeah, that's a very good question. In fact, for us, we have different scenarios. We believe that the most likely scenario is to have a new prime minister. Macron will appoint a new prime minister from the center and from the left party. In this case, we believe that we will stay in a status quo. But if we have new elections, we have just two scenarios: a victory of the Rassemblement National or just the same unstable parliament. In these two cases, we believe that it's negative, and we believe that if we have new elections, if we have the Rassemblement National or if we have just the same coalitions, there is a risk to reach the 100 bips for the spread France or Boone. So clearly, a victory of the Rassemblement National will create volatility, at least in the short term.
Nicholas, we also have the ECB meeting on Thursday, and Lagarde has said that she has an eye on this French crisis. The fact that it has raised the attention of the ECB, does that comfort you in your view on French debt and the French economy?
Yeah, I think first the ECB, they cannot really react and they should stay independent. But clearly the fact is we are observing a slowdown of the consumption and a potential slowdown of the investment. It means that if we continue to see a political instability in the largest economy like France, there is a potential new cut. I know that the market now is expecting a status quo, but we believe that it's not impossible to see further cuts by the ECB to support the European economy and also to decrease the interest rates, because that's clearly a risk. For me, today, the major risk for central bank, but also for France, is a steepening of the yield curve, the fact that the long-term rates are significantly higher than the short-term rates.
Yeah, Nicholas, we've seen that steepening not just in Europe, we've seen it in Japan, we've seen it also in the U.S. But you have to think whether, if the ECB is wading into this conversation, it's really going to create some sort of, perverse incentives for the French government. Let's say that perhaps we see the ECB stepping into the bond space before France actually gets any act together on their welfare picture, on turning around their pension spending. Doesn't that create some kind of issue which would concern an investor?
Yeah, it could create issues, but honestly, the fact is, for the French debt, what is very important is the foreign holders, and the fact that today is one of the largest debt held by foreign investor, with close to 55% held by foreign investor. That's also a good sign for French debt. So the fact that I think the ECB cannot really comment anything about the French debt, and we believe that we are not expecting a lot of volatility, except if we have new elections. And if we have new elections, if we have instability, well, that's a risk, of course, for long-term institutionals. But for the time being, we don't believe that, and this is not the most likely scenario for the coming days.
Nicholas, good morning, it's Guy. How systemic would a French debt crisis be? UK banks lend a lot of money to France. German banks lend a lot of money to France. Yeah. French banks obviously have a lot of OATs on their books. How systemic would a problem in France be for the rest of the Eurozone, for the rest of Europe?
That's a very good question. Today is not systemic, in my opinion. It's just that France has become really a weak man and one of the worst country in the euro area. And now, when you look at the French spread against Italy, it's flat. And the fact is just the market is pricing French debt as a single A. But do we believe that other and European banks will decrease French debt? Well, it's possible, but the fact is it remains the second largest economy in the euro area. It's an important debt, very liquid. When you look at the auctions, nothing was dramatic, but clearly we can see adjustment, but we don't believe that there is a clear alternative in Europe to just sell all the French debt. It's not possible, in fact.
Yeah, but I'm wondering how international investors, non-EU investors, will be looking at this. The Japanese, for instance, hold a lot of OATs. Is the BTP market an alternative if they are basically judged as being the same credit? How do you think international investors will be looking at that? Will they be diversifying? Are they comfortable sticking in French debt for now, knowing ultimately that at some point there has to be a reckoning with the French deficit that needs to be resolved at some point? Do you think investors are kind of getting ready to move?
You're right. I think this is the most critical point because we have seen a dramatic increase from foreign holders over the last 5 years. And clearly, this is something that we need to monitor. And we believe that, yes, Japanese investors or Chinese investors can decide to slightly adjust the ratio. And if we have new elections, we believe that some investor can decide to slightly rebalance from OAT to BTP. And in this case, this is an environment where we can see further pressure on the OAT bond. And that's the reason why, if we have new elections, we will see 100 pips, I think. This is perfectly reasonable. But yeah, that's really something that we need to monitor is the foreign holders, Japanese, or also Asian investors.
Nicholas, great to catch up. Thanks for the insight and the analysis. We really appreciate it. Nicholas Forez, CIO of Candriam. Coming up, we're going to be talking about what is happening in the tech space. There's some interesting commentary coming out of the United States relating to China right now. We've also got the story that ASML is reportedly set to become the top shareholder in Mistral AI. We'll talk about that stock. We'll talk about other stocks. There's plenty of stocks to watch this Monday morning, and we'll talk about them next. 19 minutes to the market open. This is Bloomberg.
A cidade estava sitiada.
Isso é o começo, eu não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
let's call it 16 minutes to the market open here in Europe. This is what futures look like. A fairly positive picture, probably more to do with what else is happening kind of around the world to what is happening maybe here in Europe, because we're firmly focused on France this morning here in Europe. Just been talking about it. Let's carry on the conversation. Peter Kinsella, Global Head of Forex Strategy at Union Bank Privé, joining us around the table. The debate we were having just a moment ago, let's kick it off. Sure. If France was downgraded, would there be a reaction in the euro?
I don't think so.
Why not?
I think it's largely, excuse me, I think it's largely priced in, right? I think I'm surprised they haven't been downgraded already, but broadly speaking, the market anticipates it. And if we look at euro dollar, in the last 2 or 3 weeks since we've had this massive spread widening, euro basically hasn't been affected at all, right? And I think the assumption really in the market is that they believe that the ECB will step in to cap spreads if we see a really
rescue France. So Lagarde's going to rescue France. Rescue Macron.
I would say it's the ECB doing it rather than Madame Lagarde. But I think that's really sort of what the markets are betting on, and I think that is a correct assumption.
Okay, and in the other little debate we were having just as you sat down was, would France take any kind of imposed action? Say the ECB went, yeah, we're going to cap spreads, but you've got to sort your budget out. Do you think the French could take that?
Well, the process we have is that Brussels will engage or activate the excessive deficit procedure.
Yeah.
And that's if the French cannot form another government and cannot come up with a credible plan to correct their finances. So there's still another act before we get to that stage. So we'll have to see how that goes. But I think, look, it's pretty clear the government is likely to fall today. Vis-a-vis vote motion no confidence, broadly expected. It'll have no effect on euro dollar whatsoever, again, because we all kind of think and know that the ECB will...
I'm glad you're here.
But Peter, walk us through the kind of timeline of an ECB intervention. What kind of level would we have to get to outright on OATs or in the French Bund spread in order to, get the ECB to do something about it?
Okay. I think if OAT bunds go well north of 100 bips, that's going to, I would say, set the cat amongst the pigeons, as it were. So I think you'd have to see a spread widening in excess of 100, 120 bips. At that point, then they'll talk about it. You'll likely see some comments from the ECB, various ECB members. And then at that point, then we'll have to see what they actually do. But you're not going to get just outright, bond buying. You're going to see some form of conditionality, and that's how it's worked before.
Yeah, conditionality.
But I don't think we're there yet. I think
How is Lagarde going to answer these questions on Thursday? She's giving a press conference right after their rate decision. Not a lot of jazz expected in the actual decision, but this could really be where the drama is. How she fields these questions on the French situation,
especially because she's French.
Indeed, indeed. Look, I think she'll downplay it as much as she can, right? That's what I would do if I were in her situation. I would simply downplay it, wait for the politics to ease itself out, see where we go, and essentially she'll just say, look, we're watching it. End of, right? But again, I don't think it's going to have significant implication for the euro at this stage.
Okay, so no more than she's already said, basically.
Correct.
Let's talk about Japanese politics. We've been discussing the potential runners and riders. Yeah. Some want, looser fiscal policy, looser monetary policy as well. How much further could the yen fall if you get the first female prime minister in Japan?
It's not a question of falling. I think it's already very weak, right? But I think the issue here is that the BOJ is sending very mixed signals. And on top of that, we've also seen very mixed data from Japan, where we've had several months of sort of, negative real labour cash earnings. Obviously, we saw last week's print, which was okay. And in a sense, if we look at what's priced in for the BOJ, barely one rate cut this year, right, if even. And if you look at the 2-year swap, it's trading at roughly 30 bips above where we are today. So it really points towards an incredibly easy and non-aggressive rate hiking cycle from the BOJ at best. So that really tells me from here, we're not going to see any idiosyncratic catalysts for yen appreciation, okay? It's really all about the dollar leg, vis-a-vis dollar yen. And that really tells me, dollar yen at 149, 150, that's kind of roughly where it's going to top out, I think. I don't see it going a lot higher.
So you take me to the US, we've had payrolls, we look ahead to CPI. Yeah. What sort of print would have you bracing for a 50 basis point cut from the Fed?
All right. I think there's a couple of points. If we look at US labour market data, last week we got JOLTS data, which has basically shown that sort of a large decline in open vacancies. If we look at the NFP data, it's telling us that the labour market has basically reached stall speed, right? And so we priced in 25 for September, about a 15% pricing for a 50 bip rate cut. If we get a significant negative surprise, as in well below expectations on the CPI print, then you're going to price a bit more towards 50. I think that's unlikely. So, you know, my base case is 25, but with a risk of 50.
Why does the Fed need to cut rates at this point? The labour market is okay, 4.3 unemployment. That looks okay. Yes, you've got negative NFPs, and you could argue that's down to immigration. Credit expansion is epic at the moment. Financial conditions are super loose. Stock market's at record highs. Does this scream an economy that needs a 50 basis point cut?
Vis-a-vis the labour market, I would say that unemployment is normally a lagging indicator, right? And so the issue is, it's where is the economy going to be? And we do know that it's likely to slow from a growth perspective into the second half of the year. So they're a little bit tight. I think that's pretty clear. We're going to see a bump in inflation on tariffs. Thereafter, it should decline somewhat. So if we're looking forward, if we listen to the Fed and what they're saying, they're basically saying that inflation, they're kind of happy with it. They're confident it's going to come off. Labour market, they are concerned about. And in that context, you know,
Is 4.3 a high number?
I wouldn't say it's high. It's definitely, you know, low from a historical context. But, you know, they don't necessarily want it to go higher, right? So I can see them cutting. I think there are reasons to cut rates,
50 or 25?
I think they'll do 25, but with a risk of 50.
Peter, when you look at the mix of Donald Trump's policies and what effect they could have on the U.S. economy, there seems to be a huge debate on what the effect of these immigration policies will be. Is that a key focus, and does that, you know, I guess, underpin your view on the U.S. economy?
It doesn't that much, if I'm frank, because what we see in the U.S. is a pretty heightened degree of policy uncertainty. Right, one day it's X and the next day it's Y. So vis-a-vis the immigration, look, we'll just have to see how it goes. It's going to create labour market pressures within labour-intensive industries, right? So in construction, for example, and so on. So you're definitely going to see evidence of wage growth there, and, you know, stickiness in particular. But overall, it's not something that I'm looking at. You know, it's not a big factor in what we're looking at present, although it is a concern, clearly.
Okay, Peter, nice to see you.
Thank you so much.
Peter Kinsella, Global Head of Forex Strategy at UBPS. Now let's get to your stocks to watch with Chloe Melly. Chloe.
Good morning, Lizzie. Let's start by keeping an eye on gold miners today. That is after Trump exempted gold as well as some other key metals from global tariffs. So we should keep an eye on a company like Rio Tinto, which is one of the biggest names in that sector and has been having quite an uneven performance, as we can see here. Other names to keep in mind would be companies like Fresnillo, Oshtown Mining, also other companies listed in the UK, slightly smaller gold miners. What's also worth keeping in mind is that this could potentially pave the way towards more exemptions, so let's keep an eye on that. Moving on to recruiters, UK recruiters, there is some new data that UK wages for new hires are growing at the slowest pace since March 2021. So let's keep an eye on Page Group, Robert Walters and Hayes. All of them have been having quite a tough year already. So let's keep an eye on that this morning. Moving on to ASML, which is taking a 1.3 billion stake in Mistral AI, an AI company based in France. It's a company that is competing with the likes of Google and OpenAI, and so this could potentially provide a bit of a lift in the shares this morning, because it's already been down a little bit over the last 12 months, so it could provide some much needed relief for ASML.
All right, thanks to our equities reporter, Chloe Melly, on the stocks to watch. Just a few minutes ago until the market opened, 7 minutes to go. In fact, I thought it was pertinent to end there on ASML, because we've had another round of news, I guess, on the chip sector. We also have the U.S. weighing annual chip supply permits for Samsung and Hynix. Kind of just this overarching theme that Trump is not done
it's day after
when
day.
it comes to these chip tariffs.
Yeah, every day there seems to be more narrative coming out of the White House, be it from Trump or from others, on what is happening in the chip sector. Clearly they are not done. Clearly there is further tightness coming. Clearly they're watching what's happening in China quite carefully at the moment. The Chinese are trying to push on with their own objectives in terms of making themselves independent, but clearly aren't there yet. So yeah, it's interesting that there's so much volatility in this. I don't know how you price it, given that it is changing. If you're Samsung or Hynix, how do you price this? What impact is this going to have? How does this impact ASML? Because they are obviously a factor in this story as well. But it does seem as if the narrative is changing quite quickly. If I was the CEO of one of these companies, you'd be really struggling at this point to know what to do next.
Yeah, but it's interesting to see the European story getting a boost from ASML. You know, the two coming together, but, you know, we're looking for someone to lead European AI in a way that can compete on the global stage. And yes, there's so much hope that we will have our own NVIDIA or whatever, that we will have our own horse in the race, but this giving a decent push to Mistral.
Absolutely. And it's interesting, the overlaps that are coming. What does ASML get out of this? Is this just a financial investment? Is this just a we see this as a
they get a board seat out of it?
Yeah. But is there if you're a lithography company, you're quite a long way away from an AI company in terms of the way that the supply chains work. So why are they doing this? Is it simply just they want to back a European champion? I don't know. But it's not as obvious a case to be made in terms of some of the other more vertical integration. Anyway, the opening trade is next. 5 minutes to go. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachi in Tehran, and this is Bloomberg.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Monday morning, good morning. I hope you had a great weekend. If it was so great that you can't remember what Friday looked like, let me just remind you as to what we saw Friday. And it was obviously a day we saw the payroll data dropping. It was weak, much weaker than maybe people had anticipated. Despite that, though, the unemployment rate reasonably stable at this point in time. The initial reaction in the first couple of minutes was actually stocks went higher, then they dropped, and that's the drop you can see there. We did pick up off the lows, but in some ways it was a cautious equity market that maybe came out of the Friday session. This morning we're looking a little bit more positive, but kind of where do we go next from here? What signals should we be taking from the economy, particularly in a week when we are watching what is happening with the inflation picture. Val, futures at the moment, though, still fairly positive.
Fairly positive across Europe. Eurostoxx 50 futures up 0.6% to start this Monday morning. FTSE 100 futures not far behind, up 0.3%. The CAC 40, these futures are up 0.5%. Remember, we have that vote of confidence to take place in France later tonight. Seems not to be able to dent this equity market rally on this Monday morning. Lizzie.
Well, I'm keeping an eye on Amsterdam because we need to keep an eye on ASML. We know that it's going to become a top Mistral holder. 1.3 billion euros is the value of this deal reported by Reuters. So watch those shares. We also keep an eye on the oil majors after we had another supply hike from OPEC Plus over the weekend, but only a modest one, hence the moves that we've seen in oil. 137,000 barrels a day extra. It was just an 11-minute meeting, so it didn't take long to decide on that. And finally, as Chloe Mele was highlighting for us, we watched the UK recruiters after the latest data from the Recruitment and Employment Confederation. Wages for new hires in the UK rising at their weakest pace in over 4 years. So that's what I've got on my mind. Guy, let's go to the open.
OK, let's talk about some numbers. Let's give you the opening trade. It is time for that this Monday morning. Let's see what happens. Kind of first full week that we've had, you could argue, for quite some time. But the FTSE 100... not doing much at the open as anticipated. We are expecting a more positive picture to emerge across Europe. We do have a little bit of a legacy coming through from Friday that we need to factor into our thinking as well. So the stock 600 is up by 0.2%. Keep an eye on oil stocks, keep an eye on the oil majors, but also keep an eye on the miners as well. And that's all going to be factored into the FTSE 100 this morning. There's a few single stocks that we need to be watching out for as well. We were mentioning just what was happening with ASML. We'll see what the reaction is to the Mistral news on that. But the CAC 40, interestingly enough, is the outperformer this morning. Not the laggard, the outperformer, as we approach the ousting of another French government a little later on this afternoon. But it's interesting to see that French stocks are on the front foot this morning. We'll wait for the DAX, we'll wait for the SMI. We'll see what's happening there in just a moment. Val, what do you got from the sector point of view?
Well, from the sector point of view, we have all but two in the green so far in the first few moments of trade. At the top of the basket, no surprise, is energy. That sector up around 1% to start today's trade. Technology, not so far behind. That sector's up 0.6% due to gains in ASML. That share is up just less than 1% in the first moments of trade. At the bottom of the basket, we have travel and leisure and telecom. So it does seem to be kind of a normal risk-on day when it comes to these markets here in Europe. We have 407 stocks in the green, only 92 in the red across Europe this morning.
Yeah, so just diving into energy, so you've got BP up 1.4%, Repsol 1.3%, about the same for Shell, Total not far behind. So all of those in the green off the back of the oil moves. You mentioned ASML, those shares up 0.9% at this moment. And we were discussing the UK recruiters, just zooming out to the broader index. The FTSE up 0.25%, about the same move for the FTSE 250, but it's green across the screen for European equities. And as you say, Guy, that probably comes back to the macro picture when we look at the US futures moves as well.
It's interesting. French stocks are up, and you can see why. Airbus is having a good day this morning in terms of points. Total is up. It's having a good day in terms of points. Schneider's up. The company so associated with the build-out, the AI build-out, it's up quite nicely. Sanofi's trading. None of these companies are directly related to really what happens in France. They are global stocks that are maybe being buffeted more by what's happening on the global picture rather than what's happening with the French picture. But it's interesting to see the outperformance coming through from France. But it's not necessarily French related, I would argue, in terms of what we are seeing.
Yeah, but it kind of chimes with what we heard from our last guest, that even the euro hasn't really been reacting to the French political crisis. We'll keep an eye on how that delves out with the vote to take place later tonight. So this could be more of tomorrow's market news in terms of the French political instability. But let's broaden this out to the bigger macro picture. Joining us now across the table is Nancy Curtin, the CIO at AITI Tickmill Global. Thank you for joining us this morning, Nancy. I read that you're still positive on U.S. stocks, but what did you make of the Friday payroll report and all the revisions that we've gotten?
Well, first of all, it was decidedly weak, that's for sure, at 22K. But I think we have to remember that the break-even job creation rate is coming down from the crazy numbers we had, in the last couple of years. Whether it's 60 or 70K remains to be seen. So in that context, it probably didn't look too bad. When you looked and parsed through the data, where was the weakness? Government sector, DOGE, probably the tariff impact, manufacturing, wholesale trade. maybe the worst is behind us. Construction, the Fed easing will help that. So we have a sense that this is a weak patch, absolutely could continue. We'll keep an eye on it. But as we head towards 2026, we do think an increase in CapEx and investment spend, which tends to correlate to job creation, could be the sort of antidote to the weakness that we're currently seeing. And remember, the unemployment rate, 4.3, is within the FOMC's definition of full employment.
Well, Nancy, I guess the one thing that could hamper the equity market rally is a return of fiscal worries that we're starting to see glimpses of, at least here in Europe. The UK last week, we have our eye on France. Look what happened in Japan over the weekend. Is that something you're concerned about? And would there be a catalyst that could arise that maybe would knock your enthusiasm for U.S. assets?
So, look, we're dropping prime ministers like flies here. Another one today. And I think the picture in France, in Japan and UK is a picture that's more challenging. Obviously, they have very high debt levels like the United States. The option to grow out of that debt is less clear, right? So just pursuing austerity, which obviously the populists don't think is a good idea, they're very, very challenged in getting those things. We need more structural reform, deregulation, et cetera. So I think there is pressure on long end of bond markets, and that could be the United States. Having said that, we need to look to see whether the U.S. experiences kind of a 1990s playbook, which is an improvement in productivity. Remember, that brought GDP higher in the United States in the late 1990s. It brought inflation lower. And actually, the debt and deficit levels improved as a result of surging tax receipts. So it's one of the things we're watching. I remember in the second quarter, productivity in the United States came in at 3.3%, a pretty strong number.
Well, could one of those catalysts be these legal hurdles that Trump's tariffs have to clear? Because, of course, the consequence could be he doesn't have enough money to cut taxes as much as he'd like and not, therefore, able to boost the economy as much as you expect.
Well, great question, because the income coming in from the tariffs is running about $25–30 billion a month, money created out of nowhere in a way. Now, the legal challenges, it's going to go to the Supreme Court. We probably won't know until next year. There's a conservative majority. And by the way, there's about 4 or 5 other statutes that Trump has at his disposal to use, Section 232 by way of example. So, look, we think tariffs are going to be a feature of the Trump administration no matter what happens on IEP. There is a legal challenge. I have a feeling he'll get through it, but we'll have to see. It goes to the Supreme Court next.
So basically, don't worry about that for now. Just coming back to the jobs market, are we kind of in a Goldilocks moment then? Is it enough to justify 50 basis points, the weakness in the labour market?
I don't think so. I think the Fed, and we heard from Goolsbee last week on Bloomberg, there are too many conflicts. You've got full employment, you've got a softer jobs market, but you don't see firings, you don't see unemployment rising too dramatically. It's a confusing picture. Our sense this is a mid-cycle slowdown, or whatever you want to call it, temporary on the jobs market. As I said, as we look forward to 2026, given what we think will be an investment spending boom or at least increase, and we already saw it in the second quarter numbers, that tends to be highly correlated with job creation. So this may be a slump with 2026 beginning to get those jobs back again. And by the way, freeing up workers from the government sector to work in the private sector, no bad thing for an economy.
Well, do we need them in the manufacturing sector? I think that's one sector that shed a lot of jobs recently, Guy.
Can you go from the government to the manufacturing sector? That seems like quite a jump to do quite quickly.
The U.S. economy and workers pretty flexible. Where there's a job, there's a person. So, I find the economy very, very flexible in that regard.
Credit creation is epic at the moment in the United States. Why do we need cheaper cost of money?
I think there are parts of the economy, housing, that has not experienced any rebound. Lower income consumers are still weighed down by credit card debt, et cetera, and they pay quite high interest rates on that. Manufacturing side has still been in, broadly contractionary territory. Small businesses still impacted. So I do think, given where we are, by the way, unit labor costs are actually quite good, given my productivity comment. I think the Fed could loosen up a bit here, and I think it will help the other parts of the economy which have struggled. So, yes, we have to be careful. We don't have too much easing, and we end up with too much growth as we go forward to next year. So it's a tricky situation. but I think full-on, spot-on for a rate cut next week I think that will happen. 25 basis points.
Would cutting aggressively with stock markets at record highs be a good idea? Can just put those two things together for me.
Watch the bond market. That's the guardrail. Yeah. That's the long end of the bond market. So we've been positive on equities, U.S. equities in particular. Look, I mean,
but you're watching the bond market.
But we're also actually quite short duration on bonds.
But what signal would you need to take from the bond market to worry you about?
A 10-year, 30-year continuing to move higher. I mean, actually 5%? Move lower.
Yeah.
4.5, 5 becomes the red line a bit for equities. So we're going to continue to watch that. But I think that's the guardrail, because what happens with that guardrail is you get a policy shift. Right, you'll have less interest rate cuts, et cetera, et cetera.
Well, I guess you have to add in the whole Fed independence, the musical chairs going on at the Fed into that conversation, because that could be definitely something that could freak out the bond market in terms of them pricing in too much easing into the front end. But we did hear from Trump over the weekend, or late on Friday, I think it was, that he said that it was still Kevin Hassett, Kevin Warsh, and Christopher Waller in the running. Yeah. No wild card has made their way into the final three, it seems. Does that give you more comfort that we wouldn't have too much Fed easing coming to fruition?
Look, I think the two Kevins are sensible picks. You know, I don't think these are crazy, appointees. Certainly, they probably are towards easing, that's for sure. Putting that aside, if we look at the challenge to Fed independence, that is concerning. And, if Trump manages to get a majority of the Board of Governors, they have the ability to appoint the regional bank presidents, right? And remember, all 12 are up for reappointment next year. So I think that is what markets will be watching. But, again, a guardrail, as we saw during the tariffs, and Scott Bessent well aware of it, when the long end of the bond market starts to freak out, that's when Trump has pulled back.
What would cause that to happen? We talked about Fed independence. That's clearly a challenge at the moment. You've got a tariff story that potentially could drive inflation higher. You've got a labour market that's weakening, but as the labour market's been weakening, we've still got quite strong inflation. What would cause the bond market to deliver that shock that you think could cause equities to kind of take another look?
I think if you begin to see persistent goods inflation, which our own view is it's likely to be one-off. We'll see. We've got a CPI and a PPI number coming up this week, but also services inflation. Remember, super core services are actually disinflationary. If you take out, the sort of rent is a very, very lagging indicator. Super core services were actually down in the month of July, 85 basis points. Goods were up, so we're going to have to see that mix as we look forward to the upcoming, CPI print this week. But obviously, service inflation and goods inflation at the same time, that would be a concern, that inflation becomes more persistent as opposed to one time. So again, it's all in the long end of the bond market. That's the signal. That's what you have to watch. But remember, from an equity perspective, earnings have been fantastic, right? 12% in the second quarter, expectations of 4.9. I reckon third and fourth quarter will also be.
That sounds like an economy that needs rate cuts.
Well, again, I think we have to be careful here. I agree. Trump has called for 3% rate cuts. I mean, that kind of stuff is crazy. But then he always has the most extreme. Maybe we'll get 75 basis points to 1%.
Nice to see you, Nancy. Always a pleasure.
Likewise.
Thank you
Great to see you guys.
Nancy Curtin, CIO at LT Tiedemann Global. Let's talk about what we're seeing in the market this morning. Fairly strong bid coming back into European equities, so we'll keep an eye on what is happening there. You can see it certainly within the tech sector. ASML is up. Schneider's having a fairly good session. Luxury also on the front foot. Defence names are back. The more staid end of the market, the more stable end of the market. Nestle, a little softer this morning. Novo, certainly a little softer this morning. What are we watching? Oil front and centre as well. We haven't talked about that. Chloe Melly's here to do just that, though.
Good morning, guys. Yeah, let's start with oil majors this morning. They are moving a little bit higher on the back of that OPEC production hike, although it's quite a modest hike, and that explains maybe the slightly modest gains. But we have that wall of green across Shell, BP, Repsol, and Eni this morning. Moving on to Ryanair. Ryanair is down this morning on the back of a downgrade. So it was downgraded to a neutral rating at Goldman. It comes after flagging quite a cautious outlook this summer, and also after Jet2's profit profit warning last week. So maybe it signals a little bit of weakness in that UK low-cost airline kind of space. Moving on to M&S, another UK stock, but this time it is an upgrade. It was upgraded at Citi. Obviously, M&S had the massive cyber attack that it dealt with and that paralyzed its operations for months. But now it is apparently turning a corner, and therefore we have shares up this morning on the back of that Citi upgrade. And finally, let's end on another UK stock, quite a UK-heavy day this morning. Shares are down for Phoenix Group. Phoenix is an insurance company. Profit actually did beat estimates, but perhaps investors are reacting to its name change. So it's changing its name to Standard Life from March 2026, and perhaps investors don't like that name very much. Perhaps some other numbers also disappointed a little bit. So it is down almost 5% for Phoenix this morning.
Okay, Chloe Melly from our equities team, thank you so much for those movers at the open. Guy, we've been talking a lot about politics this morning. We've been talking about Japan, the French situation, the UK on Friday, but we've also got to keep an eye on Norway.
I'm going to take you to Norway right now. There's a sort of slightly moving but live shot coming out of Norway as we... this is it. There you go. This is kind of as it's happening in Norway. The election is underway. You could argue that Norway is a sovereign wealth fund with a country attached. It kind of has a disproportionate impact as a result of its wealth and that fund, which obviously bleeds into stories like Israel and what is happening there in terms of the idea that we should be disinvesting, or the Norwegians should be disinvesting from Israeli companies. That's been a story over the last few days. It's also the Nobel Peace Prize coming up over the next few days. Trump wants it.
Billy's had a few calls.
What happens if Trump doesn't get the Peace Prize? Does he direct his ire towards Norway and the next government that is going to be formed in Norway?
Well, the finance minister who reportedly got that call, I'm sure we'll find out. We're coming up on the programme. OPEC Plus pushing its bold strategy a little bit further with another oil production boost. We'll get you the details next. This is Bloomberg.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars.
Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Welcome back. You're watching the opening trade. We are 18 minutes into the equity market session, 19 minutes, and actually reasonably positive. And I'm not sure there's a direct line you can draw between kind of French performance this morning and what is happening in French politics. It's actually names like Airbus and Schneider that are trading strongly this morning. Total is also having a good morning within the oil trade, and that is maybe providing the updraft that we're seeing in the French market. But by and large, it feels like a stock story this morning rather than a geopolitics story that's bleeding and pushing into that narrative for European equity markets.
Yeah, it's the international names that are leading the gains, and it is just a wait-and-see moment for what happens in the weeks and months when it comes to France. But as you say, oil, energy, the best-performing sector on the Stock 600 this morning, oil itself climbing, and this comes back to OPEC Plus agreeing to raise production once again, but at a modest rate, and it highlights really the caution from some of the group as the market heads into this unexpected surplus. Now, the group says that it's going to restart 137,000 barrels a day of output. It defies the warnings from Wall Street that the move risks compounding a supply glut. And joining us now for more is Bloomberg reporter Anthony DiPaola. Anthony, good morning. Look, we know that OPEC's up defending oil prices. They're going after market share here, but not everyone has the capacity to benefit from this. Which are the names, which are the countries that are going to be able to pump more now?
Good morning, Lizzie. Yeah, I think it's pretty much Saudi Arabia that's been pushing these increases and really driving the OPEC Plus group to add production, rolling back these cuts. And it's going to be the Saudis that have the most spare capacity and are being able to bring back the most oil. Also, other Gulf producers, we've seen the UAE with some spare capacity as they also are increasing the amount of oil that they can produce. Kuwait's also got some spare capacity, and Iraq wants to produce more. Iraq has been producing over their quota as well, and they are continuing to be in talks with the northern Kurdish region there about getting production exported from that region. It's been halted for over 2 years now. So it's really some of those Gulf countries, and of course, Russia will also try to produce some more, but we're also seeing some moves, potential moves around sanctions and around efforts to restrict oil there. But some of those other OPEC Plus producers will have difficulty bringing barrels back onto the market. At the same time, OPEC Plus is going to be competing with barrels from the Americas, from the U.S., Guyana, Brazil, those non-OPEC Plus countries that are bringing more oil on. And that's the influx in the market that's possibly creating the risk of higher stockpiles and lower prices later this year, Lizzie.
Anthony, you mentioned just there that sanctions are still weighing over the oil market. The EU actually weighing new sanctions on Russia, the 19th package since Moscow's full-scale invasion of Ukraine. They want to hit energy companies. What do we know about this?
That's right, Valerie. Yeah, they are looking at this, as you said, this 19th package, and it depends really on where they try to focus on that. We've seen some of the most effective sanctions being around shipping and insurance that have driven out some of the vessels out from being able to do kind of a legitimate trade if some of those vessels go beyond the European Union price cap. There has been talk about trying to lower that price cap, but that's never come to fruition yet. And some of the Europeans are saying that they would like the U.S. to come along. We have heard some comments from the U.S. Treasury Secretary that they want to do more on Russia. But that's been the real piece that's been lacking. Donald Trump has threatened to put more sanctions on Russia if it doesn't come to the table, if it doesn't agree to a ceasefire. But so far, we haven't seen the U.S. really tightening up the constraints on Russian oil production. Of course, that's probably a resistance to increasing the oil price and also wanting to keep the relations with Moscow good. So we'll see what the U.S. piece is of those sanctions when we get those, Valerie.
Anthony, just to come back to kind of where we are now versus where we were, is there the same amount of Russian crude on the market now as when we put the first round of sanctions on Russia? Has anything materially changed given the amount of crude that the world was taking from Russia? And do you get any sense that the European Union would be prepared to back secondary sanctions? That feels like a big step in terms of places like India.
Yeah, Guy. I mean, we have seen some material changes in the market. The oil market adjusts and flows move around to different places where they can get to. So when there's an obstruction, be it a closure of a strait or a port, or financial sanctions, the oil market works around to get oil to where it needs to be. The big change that we've seen has been the products going into Europe. So Europe's not taking diesel from Russia anymore. Europe is in a short position for diesel. And so there we've seen the Europeans taking a lot of diesel from India, which has been buying that Russian crude. So of course, if the Europeans or the U.S. for that matter, the U.S. has already put 50% tariffs on India because of its purchases of Russian oil, we haven't seen the same level of pressure on China to stop its purchases. But the more you pressure those countries that are very strong in the refining business, the more you put pressure on them to stop buying Russian oil, that will filter through into the product market. As I said, Europe is already short of diesel, needing to import from other countries to replace what it's been getting from Russia. Of course, the Europeans are not buying crude anymore. Gas has stopped. A lot of that gas is going to China now. Crude is going around to India, to China. So the more pressure you put on those points, the more you try to cut that off. One, the oil flows will adjust and try to find a way to get to market. And two, you'll see those increasing prices coming more downstream in the refined products.
Anthony, thanks for the update. Really appreciate it. Anthony Paolo joining us on what is happening in the oil market. Let's talk about what is happening in the foreign exchange market. The yen now nearly at session lows as we mark a turbulent picture in the Japanese political scene. Paul Dobson joins us now. Nice to see him in London. She was gone. The yen is down. If we get political turbulence over the next couple of months, though, how much further could we see Japanese assets being undermined?
Yeah, so I think most crucial is to look at those long-end government bond yields and what's happening there and whether demand will resurface. We've seen another push up. People are worried that the government is going to need to spend more in order to secure kind of popular support, and that obviously weighs on Japan's already very high debt load. And investors are expressing that by kind of piling out of the back end of the yield curve, and the call buyers haven't yet resurfaced. So each time we see that sort of increase in yield, we see more pressure on the currency as a result as well, and that kind of, you know, is pushing us back towards that 150 level. Beyond that, there's some support, but beyond that, you know, could be quite a lot further. Flip side is that the dollar is also under pressure, of course, because of what the Fed is up to, and so that kind of balances things to a certain extent.
Okay, Paul, nice to see you. Thanks for stopping by to see us. Nice to see you in London. Paul Dobson, Bloomberg's executive editor for Asian markets, coming to London as we see a tube strike, making things a little bit more complicated. We did that, yeah, precisely. We're going to turn things over to what is happening in France next. The likelihood is that we're going to see the Beirut government being ousted a little bit later on today. We'll turn our attention to what is happening in French politics. That's next. This is Bloomberg.
You've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that? in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive, getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome back to the opening trade. We're 30 minutes into today's session. If you're just joining us, maybe you're not joining us from your desk because there is a tube strike here in London. Hence, perhaps we have lower trading volumes. Hence, perhaps why we have the FTSE 100, the underperformer across Europe this morning. It's a sea of green, but the outperformer this morning is the DAX. Thanks to the boost to defence names, you've also got, perhaps surprisingly, given the French turmoil in politics, outperformance here for the CAC 40, but it's more the international names. You've also got a boost to the likes of Total Energy coming off the oil story, but across the Stock 600 guide, we're 0.3% up at this point in the open.
You could argue there's some action in equities this morning. Not much action, but there is some action. Let me just show you what is going on in terms of the internals. 353 up, 223 down. I'm not sure there's a massive signal there. London's lagging because of names like Astra. Volume is, though, light. Like, it's been light for a while, but volume is definitely light this morning, and I do wonder, to Lizzie's point, whether or not that is related to what we are seeing in terms of the transport situation here in London with the tube strike that is on. I want to flag as well what is going on in the commodity story, less to do with what is happening with oil, but more to do with what is happening in gold. Gold, another fresh record high this morning. Take a look at the chart. You'll see it there once again. Who is a beneficiary of that? Fresnillo is a beneficiary of that. This stock just continues to rocket higher. I keep bringing it up as a 52-week high. There aren't many 52-week highs out there this morning. There are no lows that I've tracked so far this morning on the Stock 600. But Fresnillo continues to stand out as a 52-week high. The stock is now up 323%, 324% on a 52-week basis. And the gold price just continues to power ever upwards. And this is the derivative trade of that, Valerie.
Well, here's what else you need to know this morning. Japanese Prime Minister Ishiba says he'll step down to give way to his successor following weeks of calls for his departure. The move has sent the yen lower and stocks higher in Tokyo and further adds to the risks weighing on the long end of the Japanese bond curve. Oil has been pushed higher today on reports the European Union is exploring new sanctions on about half a dozen Russian banks and energy companies. Sources say the bloc is hoping to coordinate some of the latest measures with the U.S. A delegation of EU's officials are said to be heading to Washington this week to discuss a potential for joint action. And lastly, French Prime Minister Francois Bayrou's government is expected to fall today. Bayrou's coalition will face a confidence vote in France's lower house, a motion he called for in a bid to pressure lawmakers to back his budget-cutting proposals. Guy.
Valerie, let's pick up on that story. It looks like Bayrou's going to go, but what happens next? Let's try and answer that question. I want to take you to Paris. Caroline Conan is at the French National Assembly. Caroline.
And I'm actually with a guest who is from a party that is key to today's vote, the Socialist Party. Arthur Delaporte, a Socialist MP since 2022, the last time that Macron was elected. Is there any way that today we're not going to see François Bayrou fall, or is that a done deal?
I'm sorry to say that today is the last day of François Bayrou's office, and I think it's François Bayrou's fault and only fault, because during the summer he never tried to reach any agreement on a budget, and we always said that it was unacceptable for us, and he never tried to call us, and that's, I think, a problem, François Bayrou's fault, but also a democratic problem.
What is next? Your party wants the Prime Minister seat.
Yeah.
Do you think we're going to have, over the next couple of days, quick and fast decision from President Macron and naming of a socialist prime minister?
I'm not in Macron's head, but I can say that our position is that a socialist or someone from the left is appointed as prime minister, because we think that we tried twice a minority right-wing government that never managed to reach a non-censor agreement, and today we say that socialists and the left, without the France Insoumise, would be able to have a majority in parliament, not to be pushed away, not to be censored, and that we think a different method can enable us to be in office, but also to reach compromises in parliament. We said with Olivier Faure that we would renounce to the use of what we call the 49.3, 49.3. It's an article of the Constitution which allows the government to pass a bill